of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanna, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning, you're watching India Market Open and we're bringing you the show from the NDTV Profit at Suzlon Studios. You know, more than anything else this morning, Alex, I think what's been happening around markets but not in the markets has become top of mind, especially the SEBI interim order which came out last evening on manipulation in cash on 13th August. I thought that was very telling because it's been barely 3 weeks, some 20 days that cash has been on, and already this crackdown of 2 entities manipulating and then causing a huge spike in the Sensex in just a couple of minutes on August 13th at closing.
Yeah, absolutely. And you know, I think this is a very good sign. So early in the adoption of a new technology or new way in which we're looking at the closing prices, you've identified a situation where 99% of the orders were cancelled in order to manipulate the options premium and make unlawful gain. So that is being...
Why is it a good sign?
Because the fact that the SEBI is acting on it so quickly is an indication to anybody else in the future who's thinking that they can get away with.
So, I mean, that's one optimistic way of looking at it. I in my view, it's not a great sign that you're in a market which is looking at how to manipulate something which has been around not even for a full month. The fact that SEBI's caught it is great, and that's what the SEBI chief said, right? That we have the capability of catching manipulations faster. Will more and more sophisticated ways not be found? The fact that there is now a question mark in the minds of investors on cash so quickly when you see sharp spikes, that I think the regulator will really have to work hard to dispel it.
On the contrary, and that's a fair point, my only suggestion here is that because 2 entities have already been found out, the others who might have tried something similar will think at least twice. if not more times, before they attempt something.
Well, let's hope so. Let's hope so. But that's the big story that we're going to be talking about all through the day today. But there's so much more to unpack. RBI and MPC minutes have been out, and it's a mood change at the very least. More hawkish tones there. We're going to be talking about that as well. So there's a lot to unpack. But let me start with global cues. US markets have ended in the green after 3 sessions of losses as bond yields have eased. Let's pull up the indices for you, and a bit of relief there because of statements from the US Treasury Department that they're going to be doubling down on their bond repurchase program. So you have all 3 indices up in the green as a result. Let's pull up futures for you as well and show you what's happening there. Nasdaq futures actually doing okay, about 0.5% up right now. Bonds is the story, isn't it? Bond yields have pulled back after US Treasury Department says it will double repurchase of bonds. The 10-year is at 4.64%. Oil prices, meanwhile, stayed elevated as uncertainty over the Strait of Hormuz persists. Let's pull up Brent for you, which is at about 92, 0.5% up right now. Let's pull up Asian markets, and you're going to have a bit of a mixed bag in Asia. Nikkei is up about 1%, Hang Seng about 1% as well. I wonder if we have Kospi and some of those others to show you. 5.5% up on the Kospi. Remember, it was about 4 or 5% down yesterday. India implied. Let's pull up India implied for you before we get to our first conversation this morning. It's showing 112 points of a bump up. So some relief there coming in from India. Tim Waterer, Chief Market Analyst, KCM Trade, joins us this morning. Tim, just the fact that US President Trump, and we'll play out parts of that Truth Social post for our viewers as well, now is talking about economic sanctions as a measure of tackling Iran. Does that tell the street that he wants to pull back a bit?
Good morning, nice to be with you. Yes, a fairly limited market reaction, I would say, so far to those comments from Trump. So, yes, it looks like he is veering away from, I guess, that diplomatic solution and now going the economic route. But, it hasn't had much impact on the oil price so far. You mentioned Brent hovering still around that $91, $92 mark. So, risk assets still, I guess, focusing on what happened in the bond market overnight. But we'll wait for further details from Trump in terms of what this, I guess, economic warfare may entail, given that it's pretty, hefty sanctions that have been on place in Iran for some time now already.
Tim, morning. Alex here. So therefore, where does that leave us? And we're done with the earnings season for the first quarter, more or less. And you've had quite a bit of a swing in some of these risk assets. And in South Korea, for example, you've seen significant volatility. From India's perspective, we've gone through a bit of a lull these last 12 sessions, where we're trying to find directions, and there's quite a bit of narrow trade. I wonder if you're seeing that in a few more markets globally, and what the perspective is from the outside in, given what you're seeing to the Indian equity markets.
That's right. There's a few markets, I guess, struggling for a little bit of direction now. India's a good example of that. Certainly a few competing forces at play there, with the Nifty finding some support around that 24,000 mark. But foreign institutional investors, I think they're still sort of lured elsewhere at the moment from a valuation perspective. And we mentioned high oil prices. That's not doing the Indian market any favours right now either. Looking, I guess, further afield, yes, I mean, chip stocks are sort of in vogue one day, out of favour the next with investors. So I think there's still question marks over the valuation level of the chip makers and the AI space moving forward. In terms of the earnings season you mentioned, I think we did learn that I guess where the sweet spot is in terms of that CapEx. So if it's a short payback window, if you're into cloud services, I think the market can tolerate that because the return on that CapEx is fairly short. But where it's a more speculative CapEx adventure happening, that's when the market is not quite so tolerant. So there is a bit of a sweet spot emerging there, I think, in terms of that CapEx play. But market's still finding its feet a little bit, trying to work out how long this cyclical play may last for in terms of the peak for the chip makers. I think that's why we're seeing these big swings, which you alluded to, from one day to the next, and South Korea is a prime example of that.
Tim, the other aspect is the officials per se are just sounding hawkish, right? The Fed minutes showed that they are sounding a lot more hawkish than otherwise. Back home in India, and we'll talk about it a bit later, even even there, and we know that the debt issues are out there. So could we see rate action temper the returns expectations, or just the sanguine mood on equities in the second half?
Well, I think the market and risk assets have taken some heart from the run of softer US macro data we have in the past couple of weeks, the dismal jobs figures, the tamer CPI and retail sales figures. So I think that put less weight on the Fed minutes overnight because of that weak data that's happened subsequent to that. So moving forward, yes, I think September looks like a hold from the Fed. The big question will be what happens to those 3 dissent voters from last time round. Does that number grow in terms of more calling for a rate hike? Or let's look at the next batch of US data. Is there continuation of a move down in CPI? Will that number of 3 dissenters, will that go to 2 or 1, for example? So I think the market generally feeling a little bit better about, say, how the Fed outlook in the near term, less impetus or chance of them hiking rates, I would say. High yields, that was a worry for risk assets. Certainly the moves by the Treasury overnight, that has given some at least short-term relief, albeit maybe a band-aid solution. But that's, I guess, put the mood a bit better on markets across the region today.
Tim, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time this morning. Now, to the other big news of the day, and I think we'll give you a combined view because Tamanna is the official expert on medicine. Alex is the official expert on what it would cost you, anything in the world.
No.
And I'll talk about price movements.
I'm just very interested in the moves that science makes towards medicine. I'm not an expert on anything.
Yeah, but no, this is quite something, right? I mean, so let me start with what happened to the stock, and then we can get to the news as well, because that kind of, well, it didn't foretell really, but reacted to the big piece of news. But guys, can you imagine for a large behemoth to move 176% in a day and then extend those gains in after hours closing? But the even bigger thing, right? The near-term expiration options jumped 4,000%, 4,000x. I mean, this is crazy stuff, crazy stuff, that those options were priced at some $0.7, $0.8 near expiration, and that came close to the option price. The $1.80 option of Moderna, which was priced to near zero, obviously jumped from 0.8 to $60 or $80 depending on where you look at it.
That's crazy.
So the sellers were caught on the wrong foot, and of course nobody anticipated this to happen, but just shows the volatility in options and how they can literally badger you out of your living daylights if this were to
frankly,
happen.
that's not the story at all.
Yeah,
It's
exactly.
It's the after effects of the story. The most exciting part for me is that phase 3 trials of a cancer vaccine
exactly,
for
that's what I said.
melanoma,
Yeah.
that is a skin cancer, deadly skin cancer, have been successful. That along with Merck's entire protocol to treat melanoma has been successful. It's for people whose cancer has already been treated once, and to make sure it doesn't come back. So that's what the vaccination is. But then just a vaccine for cancer is the big deal.
No, absolutely, which is why when you're talking about the options data and you're talking about the implications for the sellers of those options, ultimately it's a script that nobody would have written. And definitely not something that the options writers would have anticipated being written.
Exactly.
Which is that who would have thought last week or 20 years back that a vaccine would exist for cancer?
That's true, but having said that, anyone who has that stock and would have tracked it closely, they would have had reportage of these phase 3 trials, and Moderna has in the past also had a record of getting things right. But not too bad for the option guys. Frankly, no one is really feeling bad for them today.
No, just because of the nature of this, right? Both primary and secondary trials being met.
Completely. And just the fact that there is a cancer vaccine is,
and it gives you
I think,
hope
cool.
for the other types of cancer as well, certainly, right? So that's a huge
all
update.
of it.
Yeah, for sure. All right, but we should hope for Indian pharmaceutical majors also to find something along those lines, and let's see how that goes. But for now, let's turn to trade in India and see how things have moved. It's been range-bound action that continued on Dalal Street yesterday. In fact, foreign institutional investors have bought. It's been pointed out that quite a few of these buy figures have been influenced by block trades. The buy figure stood at just over 400 crore in trade yesterday. Domestic institutions net buying equity to the extent of 3,973 crore rupees or thereabouts. The Nifty 50 falling for a 7th consecutive session on Wednesday, and that consolidation on the downside has continued without pause. The Nifty 50, in fact, closing is about 1/3% lower. The ranges have been very, very narrow. And even in trade yesterday, it was a sub 150 point range, which is not much at all. The key support, of course, of 24,000 has been respected. In fact, the bounce back was from just above that 24,000 mark in trade yesterday. The Nifty Bank ending flat after gaining about 0.4% from the intraday low. The broader markets declined in line with the benchmark for once, actually. The mid-cap index dropping as much as 1/4%. The small-cap index falling as much as 0.6%. The market breadth favoring the declines once again. The VIX continues to be low, anemic, whatever you want to call it, currently at 11.3. It shuttled between that range of 11.3 to 11.6. All sectoral indices barring IT lost ground in trade yesterday. IT was that one bright spot, but more than anything else, it was bouncing back from 2 days of a pretty heavy selling. It gained about 0.7% in trade yesterday. Defense, energy, FMCG all underperformed in trade yesterday, and there wasn't too much of individual stock action either. Of course, there were a few stocks that ended up 4%, 5%, or down 4 or 5%, but more on volumes than anything else.
Yeah. And you could argue continuation of the last 2 days per se, right, as to what's happening there. But just the kind of news flow that we've had to deal with, I mean, and just think of it as to an average Asian investor trader who's waking up today to know that Donald Trump has said that there is an economic D-Day and any country doing business Iran will face consequences, then the US Treasury doing what it is doing, gold doing what it is doing, and then we have the MPC minutes to think about as well. But amidst all of this, I think if you just look at broadly what's happening to the markets and the trade setup, you would argue that in some sense there is markets getting close to, from a trading range perspective, peak pessimism. And does this therefore at some point of time in the near future bring about a bounce back? Because you argue that multiple technical indicators would actually suggest fairly limited downside for benchmarks. And yesterday, I believe Kush was talking about the PCR. You look at multiple quant indicators and they talk about being close to extreme greed, if not already there. So there is, and the US Treasury is starting to do those liquidity moves as well. Does all of this mean that the trading range downsides are a bit limited after the recent pullback / consolidation? Remains to be seen. And the fly in the ointment is the central banking minutes. And while there is enough spoken about what the Fed minutes sounded like, our own MPC minutes as well were more hawkish than what the policy suggested, which might hurt banks, if you will. So Governor Malhotra said, of course, in the minutes that both average headline and average core inflation have risen. This may suggest recalibration of policy rate, but prefer to wait for more evidence. But Deputy Governor Gupta saying that given that the headline inflation is projected to peak to a level as high as 5.9% in Q3, a case for a hike may emerge during the course of the year. Not that this was not unanticipated when the policy statement came out, just that the minutes sound, to me at least, and I don't know how Alex and Tamanna think of it, but the minutes sounded to me a lot more hawkish than what the policy statement suggested, and wonder if that kind of disappoints the bulls a little bit. And let's see if banks come in for a bit of a stick.
Yeah.
So the coincidence, the Fed meeting minutes were also out last night, and they were also more hawkish. You could put it down to a reality check because it's sort of post facto, right? I mean, it's also maybe looking at what has happened around us since that could have crept in somewhere. And while the headline was, okay, things are not so bad, the fact is it's these decisions that the Fed and the RBI have taken is at very tough times. So all of that would have gone into the conversation. So definitely opens the window for more I think, rate hikes down the line, and you have some which are looking at, some notes today which are saying that maybe as far as India is concerned, you might see a 50 basis point rate hike at some point cumulatively coming in.
I think that, 50 basis points was the base case for a lot of people. The only thing is, and I think we should speak to the economists, which we will do in just a bit, is that so much of the inflation that we're seeing right now is supply side driven. You're seeing that in the wholesale prices, right? And the question is, can you really control that by hiking interest rates? Because when you're hiking interest rates, you're targeting demand side inflation. So
Sure.
how much of that are you going to be able to control?
Sure, but then that is a age-old debate. Those are the tools that the
Correct.
RBI has. So what are they going to do? All right, as far as the factors are concerned, Nifty has slipped for the 7th consecutive session. The index has closed below its 50 DMA. And broad markets are remaining under pressure due to elevated global bond yields and crude prices near $91 a barrel. But cooling fear index signals for a potential tactical pause or bounce on Thursday's weekly options expiry, which is today. Also keep in mind that the fact that the US 10-year, remember we told you about that a few minutes ago, has slid this sharply, will give relief to emerging markets, including India. The US Treasury has come in with a mini quantitative easing in a sense, or practically, because they are coming in now and doubling the repurchase of bonds. So 24,000 then becomes the battlefield, isn't it? Below 23,900, bears gain a major advantage. Above 24,200, pressure starts easing. Above 24,300, the bearish setup is substantially weakened. Supports at 24,040 to 24,000. Immediate key psychological floor. That's what it is, followed by 23,900 and 23,850. For resistance, 24,180 to 24,200. And this is followed by a 24,250, 24,300. A firm move above 24,200 is necessary to confirm a short-term trend reversal. For the Bank Nifty, 57,000 is the battlefield. 57,500 to 57,700 is the zone bulls need to reclaim to establish a stronger recovery. Supports at 57,065 and 56,980. Resistance at 57,335, 57,420 and 57,555. Just quickly want to go through what Rhythm Desai is saying in the Morgan Stanley India strategy on Q1. Robust revenue growth translated into stronger earnings growth. Margins have held up better than expected despite input cost pressures. This is consistent with our view that India remains in an improving earnings phase. Close to 2/3 of our coverage stocks have reported earnings growth, and relative stock performance improved across about half the universe. Just want to go to his ideas very quickly. They're overweight on Adani Ports, Divi's Labs, Eternal, Grasim, Hyundai, ICICI Bank, Leela and Titan. Underweight on Bajaj Auto, Cipla, Dabur, Dalmia, Havells, SBI Cards and Wipro. So some of those ideas this morning. But let me go across to Sharad quickly for the F&O setup today.
Well, this is the first time I'm saying with a conviction that in the last 3 weeks we are going to have a gap up opening. All the other times we are just talking about narrow range move. But now it seems like the maximum point of pessimism for the Indian markets on 12 days of Nifty going over higher lows. And now we are seeing at least 120 point jump, of course, on the global cues, and the way yields have cooled off and that risk on sentiment on the emerging market crypto, all of them doing well. Nifty Bank, both we expect to have a gap up opening, but we'll take the FI cash numbers also. For the second straight day, there has been a buying coming in, but a lot of block deal impacts are also going ahead. And there's an interesting number I would like to share, the FI shorts, that has actually come off a little bit at around 91%, but this number might come down more going ahead, at least in the next couple of trading sessions. That's what the traders are talking about. The PCR levels are back to their stable levels, which was there yesterday. It was up more than 1.1. Also looking at the open interest, the action will of course shift to this 24,400, 24,500 part. But the question is, will the resistance level sustain for Nifty going ahead? Stock specific moves, of course, yesterday we saw IT doing well. Maybe the technical suggests that the IT might see more follow-on buying. Apart from this, also we'll have a broad base up move, especially in the small caps and the mid caps. Open interest gainers, I would like to just point out Sona BLW with a lot of bullish calls coming in that counter, and Interglobe Aviation on the other hand, long unwinding might be going ahead, especially because the crude prices are elevated and the macro data, especially if you talk about the aviation, is not that good. but largely we can see a little bit of more action in the large caps today.
Okay, I think the bond yields slide is going to help, even with crude at 91, 92. The fact that Trump's newest weapon of choice against Iran is an economic one will be seen as a bit of a relief as well. But let's talk about stocks and specific stocks on radar. I'm looking at the broader insurance pack, but on the back of GIC. So they put out their own summary of what's happening in the industry and what they think is going to happen with their company last evening. They're saying the General Insurance Corporation of India investor update is what they put out. Reinsurance premiums in India expected to touch 99,000 crores by 2025-26. Planning on geographical diversification of the portfolio post credit rating upgrade, improving net incurred claims ratio by working towards reducing the attritional losses, and commission ratios are expected to remain stable. Growth expected in diversified areas such as surety bonds, cyber risk covers, and parametric covers. The second one on my radar is Godrej Consumer. So a couple of brokerages have met with the management and have come back with a positive view. Goldman Sachs, for example, has maintained a buy with a target price of 1,175. They're saying strategic direction is intact and focus is to dial up execution. Remember the backdrop where the CEO stepped down quite suddenly and an interim CEO is in place. So that is really the context of these meetings, I suppose. Goldman Sachs goes on to say initiatives on portfolio transformation to continue. HI, that's home insecticides, incense sticks will be rapidly scaled up, but liquid vaporizer will also be a priority. Focus on improving execution in the India business and plans to bring in an Indian CEO. So we will see one new announcement there, I suppose. Macquarie has maintained an outperform with a target price of 1,150. Expects execution push to aid growth. Focus on improving execution, but direction is unchanged. India's CEO appointment to aid execution, balance between core and emerging categories, focus on innovations to sustain. Leela Palace is the third one on my radar. Morgan Stanley has maintained an overweight with a target price of 600 rupees. They believe the share price will rise over the next 60 days. July STR data was strong and should support outperformance for Leela stock. On a year-to-year basis, India's average room rate and revenue per occupant essentially grew 12.4% and 17.6% respectively. Delhi market is key for Leela. There they see a RevPAR growth of 26% year on year. The 2-year growth is about 12.8% versus 20% year-on-year growth in June 2026. Remember, Leela also made it to the Morgan Stanley list of interesting ideas that they have. So watch out for this one today.
Yeah, interesting stocks. I've got Hyundai at the top of my list, and speaking of inflation, this company, along with a certain other automakers, are increasing their prices, but not so much. The point is that they've only decided to increase their vehicle prices by about 1% across the portfolio, which is not really significant, from September of 2026. Remember, this is the kick-starting of the festive season. And so therefore, the focus is going to be on ensuring that demand remains robust, which it has been in the recent past. So more than anything else, I think this is half positive, if not entirely positive, that they've not increased prices to that extent. Titagar Rail Systems, this is significant in the context of those tenders that have been long awaited from the railways. They've been upgraded to approved vendor status by the Indian Railways, and the approved vendor status is for the supply of 3-phase locomotive traction motors. The company also has approved manufacturing capacity of 1,200 motors per annum. Now, when those tenders will come through is anybody's guess. How much will come through is again anybody's guess. But the suggestion is that you could have, and we've spoken to a few companies in the interim over the last couple of months, and they've said that you could have as much as 100,000 wagons come through in the next order. So it's certainly something to watch out for. MV Photovoltaic, this is a positive note that has come through from Jefferies, and they've maintained a buy. They've hiked their target price to 440 from the earlier 400. They say quality is available cheap. They're bullish on early entry into TopCon cells. You're probably wondering what that is. If you don't know, it is a type of photovoltaic cell. It allows for more efficient gathering of solar energy and the focus on the solar PV chain is what Jefferies is focused on. The net debt-free balance sheet position is also something that bodes well for them, and in fact they're backward integrating into ingots and wafers as well. They are set to sustain industry-leading profitability over the medium term, according to Jefferies. They raised the FY27 and 28 EBITDA forecast by 2% and 7% respectively, and forecast a 33% EBITDA compounded annual growth rate over FY26 to 29. And after the recent 15% correction, it trades at 6.8 times forward EV to EBITDA, and that is a 30% discount to peers. So quite a few points in favor of the company as things stand right now.
Yeah, well, I've got three positives. I'm going to just highlight one more stock which might have a small negative to it. But the three positives, firstly, on my list, Seagull India is the first one. They have secured their 5th LOA on NH 913. It's a frontier highway worth 274 crores. The importance is not the 274 crore order, but that they've now gotten the 5 LOAs in 2 days with a combined number of 2423 crores. Now that this is Arunachal Pradesh, that together is a very impressive number. We've been talking about ordering activity in infra picking up, L&T being at the forefront of it. Well, Seagull India is out there too. 2,400 crores for a company of its size is pretty good number for the size of its order book. Very good number as well. Maybe the stock reacts. Watch out for this one. Lohia Corp. It's a recent listing. It's a manufacturer of machinery for technical textiles, and the numbers, look at those numbers. Revenues up 59% for Lohia Corp at 503 crores. EBITDA at 100 crores versus 36 crores. This is very impressive. Look at the margin expansion, 20% versus 11.5%, and the net profit at 66 crores versus 16.8 crores. There are no one-offs in this. This is pure operational metrics and turnover backed. Remember, as I said, it's a manufacturer of machinery for technical textiles. The exports for the company now account for 41% in Q1, up from 37% in Q4, and that's typically, I would presume, a higher margin business. The pending order book for the company is at 1778 crores. This is up from 1358 crores quarter on quarter and only 900 crores in the same quarter last year, same time last year. So they've executed more, they've gotten a larger order book, exports have gone up, margins have gone up. Very difficult to find fault with this one. Let's see if this one reacts positively. I confess I haven't looked at the valuations of this one, but it'll be interesting to see how this one reacts any which way. Since listing, it's up 32%. So not bad a start, but well, it's proving in the performance as well. Keep an eye out for this one. I wonder if Vodafone has a bit of a leg up because Citi has a buy on that with the target price of 17. They say management they focus on the roadshow takeaways, and they say that the focus has shifted to execution and the recovery is gaining traction. Network investments are driving improving subscriber metrics. Funding visibility is improved. We spoke about this yesterday, and the management continues to see substantial ARPU headroom within the existing subscriber base. Well, and if Vodafone sees that, I'm guessing the others would see that too, which is why people are turning constructive on telecom per se. So keep an eye out for this one. I don't know if it will react or no, but Citi is sounding positive. Keep in mind, Citi's always sounded positive on Vodafone. Just guys, K-Fintech yet on the block deal, and a large one at that, at a discount. So let's see if K-Fintech has a bit of a negative reaction to this block deal announcement. That slight discount that exists as naturally comes in on most block deals. Let's see how this one does today. Maybe reacts negatively.
Yeah, I think Thyrocare Technologies, just if we are marking another one, because their API holdings have fully redeemed their NCDs, which was about 1,700 crores. And debenture trustees has issued a new no dues certificate as well and released their pledge. So it's basically the promoter bringing down debt and pledging shares. Watch out for Thyrocare Technologies as well. But the big one we've been talking about, and a lot of big stories to unpack today, as we said, what's happened with CAS and this SEBI interim order is something we'll be talking about. But right now the focus is on the RBI's latest MPC minutes, suggesting that the debate may be shifting from how much more support growth needs to whether inflation could become a concern again. I'm first going to go across to Piyush to talk about why these RBI MPC minutes is not business as usual. We see this after every policy meet, right, Piyush? But this time the tone and tenor seems to be a little different from what the policy announcement was.
Absolutely correct. We have seen over the last few months there have been very dovish sort of commentary made by MPC members, especially the Governor Sanjay Malhotra sir. But in the minutes of the MPC released yesterday, there was a clear shift. Now the tone has turned very hawkish. Governor Malhotra, for instance, has said that normalization of inflation has started to happen. Last year when we had 2-3% sort of CPI, things are now getting back to normal. Average inflation last year, he said, was only 2% CPI, whereas has averaged at around 3.93% this year. Further, core inflation is projected at 4.3% in the current financial year. So this may call for a calibration of policy rate. Governor Malhotra today in an interview with a newspaper also mentioned how the normalization that is starting to happen may lead to recalibration of interest rate going ahead, and when he says recalibration, markets are penciling in a rate hike. The most sharpest and the most clear comments that were made were actually by RBI MPC member and Deputy Governor Poonam Gupta madam, who is also in charge of the monetary policy department. She has clearly said that CPI is projected to rise to 5.9% in Q3. And this actually this fades away the possibility of any rate cut going ahead. Where we can only look forward towards a rate hike with this sort of inflation forecast. And Saugata Bhattacharya, the former Axis Bank economist and external MPC member, has opined that the current high fuel prices may lead to second and third order effects on economy, and it is prudent to wait and watch. A lot of external members have said that it is prudent to wait and watch, but from the top, from the governor to deputy governor, the tone has clearly shifted, and there is a hawkish sort of a commentary made by the top deck at RBI.
What they would say if you were to ask them, Piyush, are you hawkish or dovish? There are some famous words that RBI governors have said in the past. Thanks so much for that. Let me get you a few updates from brokerages that have weighed in on the minutes. Goldman Sachs has said that a hawkish shift from the governor's statement is evident. Members acknowledged that the rise in food and fuel-driven inflation could trigger second-round effects, what Piyush was just mentioning, but indicated that broader and more persistent price pressures would be needed to warrant policy action. Core goods inflation pressure appears to be firming, while pass-through to core services remains limited. They continue to expect, and this is Goldman Sachs, a 50 basis points of cumulative policy rate hikes by the RBI, with 25 basis points each in December and then in February of 2027. BOFA has weighed in as well and delivered a dovish hold. Minutes indicated caution. The minutes indicated a relatively cautious tone from members, highlighting likely possibility of tightening while being data dependent. Given the revised inflation projections, the real rate would turn negative in Q3 and remain so until Q1 of FY28. Coupled with robust growth outlook, we retain, that is they, BOFA retain their call of a 50 basis points of hikes in FY27. That is the current financial year. Let's head across now to Garima Kapoor, Deputy Head of Research and Economist at Elara Securities. Garima, very good morning. Thanks so much for taking the time. Does this change your perspective at all? Or is this simply a reinforcement of what you already had anticipated? Because a lot of people had talked about a 50 basis point hike in this cycle.
Hi, good morning. I think I should consider these minutes to be a reinforcement of what we were already anticipating. Remember, the surprise is not how inflation is panning out. In fact, in the policy for which the minutes have been released, the the governor, as well as the RBI MPC, acknowledged the fact that the Q1 inflation undershot their own projections. So it is not the inflation that is surprisingly driving their hawkishness or the stance to hike, but beyond that, the resilience of growth, which has kind of surprised almost everybody, including policymakers. So a high inflation scenario in a growth that is holding up well is certainly a cause for caution, and hence a policy stance shift in my view.
Okay, so Garima, what is the indication out of this? Is it indicating that we're going to see a rate hike sooner than expected, steeper than expected? What is, what is really the forecast coming out of what you're reading through the minutes, and what's different from what you usually see?
See, the broader forecast and our expectations, even before the minutes, which are now getting confirmed by the minutes, is that we are going to see at least one rate hike in this financial year. The only thing that is holding back RBI and MPC right now is the fact that the core inflation, that if you exclude food, fuel, and the volatile metals, the precious metals, the core inflation still continues to be very subdued, sub 3%. And that's why you would have seen that the commentary is also speaking about core inflation and the headline inflation converging. So I believe the right time of the hike would be when the core inflation and the headline inflation start to converge, then you know the inflationary pressures are beyond food and fuel and are getting broad-based. And hence, I think the appropriate time of hike would be the second half of the year. In my view, it would be the first quarter of the next calendar year, more appropriately, because by then the Fed would have already indicated what they want to do with their own policy stance.
Okay. Garima, just nail it down. Do you expect 50? Do you expect 25? Or do you believe it's better to wait and watch?
I think there is a 25 basis point rate hike for sure on cards. We continue to hold our call of 25 basis point first quarter next calendar year, while some on the street anticipate that this could happen as early as December. As I think and mentioned, I think the most important factor to be watched out will be what Fed does with its own monetary policy. Yields are rising on the longer end of the US yield curve. You've seen Fed also announced, US Treasury also announced buybacks and a certain sort of yield control measure. So clearly pressure is building up in developed markets, including US. If Fed were to undertake the first rate hike much earlier than anticipated, to sometime before December, then I think it will be fair to anticipate that RBI would also hike in December. If Fed's action gets little prolonged and postponed, then I think the first quarter of next calendar year, 25 basis point is what I anticipate.
All right. Garima, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. We need to slip into a break on the note that we might have a somber start, but be that as it may, exciting conversations on India Market Open. We take a break, come back with more. Stay tuned to India Market Open.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha. Ideas across borders. The Nepal Dialogue. 27th August. Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Welcome back. You're watching India Market Open. Let's start with the implied open and take a look at where we are. 142 points up. Now, I don't know if this is courtesy US Treasury Department. This is courtesy Trump himself saying that, now economic sanctions is a way on Iran. Or is this courtesy Bull saying, hum bhi hai? Parag Thakkar, Kush Bora in the studio. Parag bhai, I want to start with you on that.
So US Treasury, so US 10-year falling from 4.75 almost to 4.63 overnight is a very big positive in my view. And that too, it is a sign that mini QE is starting. And see, US has $40 trillion of debt. Right? So they also cannot afford to have 5% interest rates. So this was expected, and finally I think it has started to happen. So this is a very good news for all non-dollar assets, which is gold, Bitcoin, equities. Of course, Indian equities need still further more comfort from crude oil, but I would say that this is a very good positive if it continues. If the trajectory is this, that they want to cool down bond yields by doing a treasury operations, which means QE, mini QE.
Yeah.
If that happens, it is good for global non-dollar assets.
But most of the commentary after they've done that also is that this is going to have a temporary relief at best. Because the US debt problem is huge.
Yeah. So they have to bring down interest rates. So the problem is huge. So they'll have to bring down interest rates. So they'll have to print more money, which is very good for global asset classes, non-dollar asset classes. And dollar index was also below 99.
Okay.
If you see. So I would say that this had to happen. They have been pushed to wall now.
So ultimately, if they're printing more money, it means that it's just so that everyone understands, right? Including me. When you print more money, ultimately you're devaluing the currency.
Correct.
So weaker dollar essentially is good for commodities.
For anything which is non-dollar, right? So gold or Bitcoin or silver maybe, or equities maybe. For fundamentally Indian stock markets to rise, I think crude oil should fall off a little bit more. Then it will be more comfortable.
Okay. Kush, what about the indices today? If we see that kind of gap up which the implied is indicating, will we sustain?
First up, a very good morning. Sustainability, maybe yes. Building on from there on is a bit of a dicey call. 12 sessions and lower highs bana rahe. I'm sure this is some sort of a record. I haven't done that check, but I'm pretty sure
apparently it is.
It is, right? So कहीं ना कहीं से तो rebound आना था, right? So we did speak about this, that the fact that the US bond yields have gone so high, we've been falling for such a long time. Also PCR yesterday was at 0.7, now it's bumped up to 0.81. So some positive trigger here or there, and we could have seen this rally comes in the form of this news today. I don't think you should build on to these gains in terms of, you should build on further, long positions from these levels. If you had any long positions yesterday, day before, this might be a good opportunity to exit. Like I said yesterday, till 300, 500 is taken out convincingly. This will remain a sell on rise market. Nothing much has changed, at least from an Indian perspective, right? So, plus the expiry might, perhaps see some short covering here or there. Nothing meaningful. So I wouldn't really be too excited about this gap up opening.
So speaking of Sensex expiry, I don't know if you saw the headlines on NDTV Profit last evening about two entities being picked up by the Securities and Exchange Board of India for alleged manipulation on expiry day of the Sensex. What do you think of that? And we were having this debate, Tamanna and I, earlier this morning, to say, is it good? From my perspective, it is, because you're catching people early. Tamanna is saying it's not such a good idea, not to put words in your mouth.
No, I'm not saying it's not good that they're catching people early.
No, I'm saying it's not good that manipulation is happening.
हुआ नहीं कि चोरी के जरिए इकट्ठा हो गए. I mean, it's an interim order, so
Yeah, let's hold our horses.
But you've had a huge jump in a matter of seconds, huge swings on the Sensex. And I assume all of you all were sitting on the show that day and must have wondering what is happening on the 13th of August. And turns out there are two parties, one buying and one selling. What does it tell you?
Okay, so I heard that conversation that, you both had, on the opening show. I think the truth lies somewhere in between. कहीं ना कहीं if you ask a retail trader के एक inclination होता है कि यार ये तो manipulative है, the Nifty or the Sensex jumping up so much, correct? It's not proof, it's not, it's not data, it's just an inclination, it's a feeling, right? कि ये हो सकता है. Now to pass an order like this confirms कि हाँ कुछ तो हुआ है, which itself is not a good sign. But I agree to Alex's point also here कि at least by doing this, you're catching that manipulative practice very early and giving out a strong message कि अगर ये फिर से होगा तो हम देख रहे हैं. तो एक ये दिमाग में रहेगा traders, investors के कि अगर manipulative है तो फिर there is SEBI who will crack down immediately. So I think the truth lies somewhere in between.
My question, this fence sitting is blah, but no. My question is that there's a 3 crore fine. whatever positions that these guys have taken, right? Monthly expiry now is next week. What happens to their open positions? Both JP and Mansi.
See, I can take a non-fence sitting view. Okay, like I have done previously in Jane Street. I don't know where that's headed. I don't know the details of whatever's happened there, right? In a way, you can question where's the manipulation. Orders hai, humne place kar diye.
You think so?
No, this is SEBI's order.
But that's interesting because it's an interim order.
It's an interim order, SEBI's order.
You think they can come back to court and say, or placing order is my right?
Absolutely. Now, what SEBI's order also says, by the way, is that they took off about 99% of the orders. They cancelled it. So there is definitely intention which you can prove. Systemically, तो मैं तो order place कर रहा हूँ ना, and I can place an order wherever I like within the price band that you've given me.
And I can cancel it as well.
I can cancel it as well. I can do that in live market also, right? अगर मुझे कहीं support लग रहा है market में, I can place massive orders on the buy side, ठीक है, disclose quantity and all of that, right? But I can place orders. That is well within my right, and it's within the band that you've given me. So why not?
You have an opinion?
It's going to get tricky.
No, sometimes opining on
ongoing matters
might become difficult. But a lot of in the past, a lot of entities which have been quote unquote punished have followed a practice which technically falls within the ambit of what is allowed to be done, but amounts to manipulation. So therefore, this is difficult to say. It may still be within the bands that are permissible, etc., 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 but might lead to a manipulative activity.
Which is why it's an interim order. The
Exactly.
point is to protect the broader investing class, and they should have faith.
Yeah, that is where the SEBI's order is helpful.
They should have faith.
Yeah.
But अगर ये interim order आगे नहीं बढ़े and they say ये तो technical था, then I don't know how helpful. So I think the verdict is set out. We have to go to Swamit Sarkar. He's joining in with all the chatter that he's gathered on the street. Is this a big talking point this morning? Quiet. Swamit, about what's happened on the 13th of August and the SEBI order on it, interim order on it.
Yes, it is one of the chatters in the reading room, and the key question here, as you were pointing out, is what happens to the open positions that both JP Morgan and Mansi has. Will they be allowed to roll over? If not, then will there be buying coming in the market to cover this position? So that's the key question here, and the key ambiguity that is still there in the market upon the open positions of JP Morgan and Mansi. Apart from that, other stocks that remain in focus. Firstly, it's Axis Bank, Page Industries and Muthoot Finance. Dealers indicate that there are buy flows on the DI desk at lower levels in all these three counters. Apart from that, there is Vintage Coffee. There's a buzz of some positive report that could come in from a domestic broking firm. For Kalyan Jewellers, there's a buzz of a positive report that could come in from a foreign broking firm very soon. And lastly, when it comes to Kotak Mahindra Bank, there are buy flows on the FI desk. Delivery volumes are as well seen on the higher side. Keep an eye out for Kotak Mahindra Bank. And lastly, yesterday we did indicate about Aditya Infotech that there is a buzz of a positive report that could come in from a domestic broking firm. And today, Motilal Oswal has initiated coverage on Aditya Infotech with a target price of close to around 4,200 rupees. So that is one of the khabar confirmed that we have.
Got it. Very interesting. Absolutely. That was one of the stocks that we looked at this morning as well. We are yet to talk about individual stocks that you're liking this morning, Kushan. While it is a sell on rise market, as you pointed out, just a quick clarification to that before you get into the stocks. The short positions for FIs is well known, right? They're significantly short at this moment. So is there a possibility of hitting a certain level and triggering short covering? At what level would that be?
Alex, actually this is that level, and it's not short covering in the sense कि नहीं कुछ positive trigger आ गया short cover कर रहे हैं. This is short है, profit हो रहा है, let's cover it. Remember yesterday we spoke of 24,000 put option, having very healthy, base. That in fact got added on to yesterday. So 24,000 is a very real support. Even on a declining market, this was a very real support, and we are seeing the market rebound from those levels. The gap around 24, 25, that got filled yesterday. So from some technical perspectives, rebound was around the corner. We are seeing that. So that's why I say that this is more of profit booking wala short covering, and not a scamper for covering shorts wala short covering. So you have to be a little mindful. Hence, I don't see a very big upside from these levels. Now, as far as stock specific action goes, still going long on all three calls. The first call that I have is perhaps like a weekly pick, midweek. I don't know, I've not done that, before. And I'm not even calling it that. I'm just saying that the payoff ratio is such and the structure is such, which is Gokul Agro. Good moves on this one. In the past, it's done phenomenally well. Even now, it's seen a good rebound. It's on the cusp of a breakout, by the way, but with the kind of price and volume action and the relative strength, I think it's fairly safe to bet on this. Targets on this one, 253, 264, stop loss at 235. PNB Housing also, very interesting moves. Yesterday broke above the 1160, 1170 resistance band, held above that. So 1200, 1245, these are your targets. 1145 is where you keep that stop loss. And amongst the chemical names, relatively less discussed one, Finiotex Chemicals. This one also making healthy waves, a golden crossover on this one. So 46 and 48 are your near-term targets. 43.5 is where you keep that stop loss. And a quick update on Acom's Drugs. We gave that as a call yesterday. The first target of 767, that was hit and it cooled off a little bit. But then there is still that momentum. You can continue holding on, bump up your trailing stop losses to 740.
Okay, Varsha has more stocks that should be on our watch list, which is quite a feat, Varsha, because things kind of dry up in this period after the result season. What do you have on your watch list?
Well, I'll be, talking about 5 stocks. Let me start with Aditya Infotech, wherein a company has approved a raising of 1500 crore. This is through QIP. Then you have Hindustan Oil Exploration, where company will drill 4 additional wells to restore production. 3,400 crore has already been invested in the field. You have IndiCube Spaces, wherein they've leased nearly 1,300 seats in Bangalore. Now the deal is valued at rupees 68 crore, and this is being signed with a global audio platform. You have Stride Pharma Science, a positive news over here. They've received US FDA EIR, that is Establishment Inspection Report, for their Bangalore facility. The May 2026 inspection closed under VAI status. This is the best classification, second best classification that any pharma company can have, and hence the inspection has been closed. So positive news when it comes to Stride Pharma. You have EMS, which will be in focus on the back of order win, has emerged L1 bidder for 191 crore water infrastructure project. A company will construct water treatment plant, distribution network and related infrastructure. So these are 5 stocks which should be on your radar as of today.
Yeah, well, a lot of thanks Varsha for that. Not too many necessarily stocks out there, but if I can just take one question on one of the stocks that I had highlighted to Parag Thakkar, and Parag Thakkar, Seagull India, or if not Seagull, because in 2 days they've gotten 2,400, 2,500 crore worth of orders. L&T got an ultra mega order of 15,000 crores after 40,000 crores in the preceding 7 days. A lot of ordering activity.
Yes.
Is it good enough for the infrastructure stocks?
No, I think definitely this government has, I would say, a huge focus on infra and capex, and that is what is keeping the economic momentum alive also. So I would say yes, and in fact we have seen, like for example, I continuously talk about this, and again I don't have that stock, so there is no bias. But NCC also you see keep seeing promoter buying continuously, NCC, right? So some sort of action is happening on the ground. As yesterday, some 13,000 crore worth of railway projects were cleared. So I think infra activity, and it is good to see, because when crude oil is going up, when your finances are a little bit constrained, you are managing to continue to pump up the economy through capex. It's a very good news, I think.
I wonder what you make of LIC's move to up its stake in HDFC Bank. Is it business as usual, but they're going to raise stake significantly to 9.99%?
So it is like, LIC must have applied to RBI to do this since long. It is just that they have got the approval today.
That's fine, but their stake is going from 4% to 9.99%.
So generally what any institution does is, because I have worked in ICICI Pro AMC, so institution does is, so for example, if you have reached say 4 or 5%, you apply to RBI and you take a normal...
So it's business as usual.
It is business as usual, but I think hopefully LIC will get it at a very good price.
Okay, okay, that's one way to look at it. We'll take a very quick break. More ideas on the other sides, interesting conversations lined up. Don't go away.
Nepal. New possibilities. A new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Sashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored.
Welcome back. You're watching India Market Open, and we're just minutes away from the start of trade, just 2.5 minutes or thereabouts. The question to Parag Thakkar is, there are a few stocks that have emerged as winners, and we were talking about LG, weren't we? Yesterday or day before yesterday, LG Equipment, the stock was up about 3.5% after that conversation. The follow-up question that I have for you is, after that pop, would you still be a buyer?
No, after the pop, generally I don't chase the
That's
momentum.
the
It
question.
continues to be a great company. It's a 50-60-year-old company, debt-free, as I said, net cash of 680 crores, ROC of 35%, growing at 15%. I think it's a great company, nothing to complain, but just that I would not chase momentum. One more thing which I would like to highlight, apart from the telecom discussion which we had yesterday, that I feel, this is my personal view, that whatever has happened in the telecom sector is a precursor to a tariff hike within next 3 to 6 months. So I am expecting a tariff hike before December or in December maximum, because whatever is going on is clearly telling you that. And the other thing is that globally in US, I was seeing yesterday, there are 3 refining stocks which were up by more than 60-70%.
Oh,
yeah. So, and here also, if you see Chennai Petro and MRPL,
yes, they were up
the standalone refiners are
4-5%.
doing well. So, I think refiners are doing well, and this telecom thing.
Why do you think that is, though, the refiners?
No, because diesel cracks are good.
Okay.
The diesel cracks are good. So, I think that would benefit, of course, Chennai Petro, MRPL, Reliance kind of companies, and plus this tariff hike kind of thing can come.
Nearly 30-35% gains in the last 3 months alone for Chennai Petro, for example. Pretty good going.
Yeah, actually both of those stocks looking good. But Kush had an opinion on, so it invariably happens, stocks that suddenly start looking attractive to Parag Bhai are stocks that Kush absolutely does not like. And stocks that Parag Bhai will not venture into are stocks that Kush likes because of momentum, correct? So LG Equipment you like?
See, Parag bhai and I know actually plan this, वरना लगेगा कि साथ-साथ में same stock के बारे में बात कर रहे हैं. Of course, I'm kidding. Of course, you know, the lens with which he sees and the time frame which he has versus, you know, the lens and the time frames that I have are very different, right? So if he won't buy it on the pop, I will. You know, look at LG Equipment, and I'll tell you what the technical reasons for this. This stock is close to 9-10 month high levels now. Mind you, this has done phenomenally well over the last few years. It's gone into a longish consolidation phase along with the markets, right? Double bottom formation breakout is apparent. A long-term cup and handle formation, formation is on the cusp of a breakout of that. इतना मूव के बाद भी RSIs में ना वीकली ना मंथली ना डेली में कहीं पे ओवरहीटिंग है, then why not? So if there is momentum and it's building up, why not buy? So I remain constructive on LG Equipment.
I am very constructive. I have large holdings, but the point is that I am not
this
going to chase
point you
momentum.
won't. Yeah, absolutely. No, so if someone's entering afresh, my suggestion 610, 605, that should be your stop loss. I remain constructive on the stock from a momentum perspective also.
Just wanted to get a quick word on Godrej Consumer, just as we're going into the pre-open session, GCPL. So we know that they're going to get a new India CEO. A couple of brokerage houses have met them as well and have positive things to say. Now, there was a bit of a cloud over it after that whole transition, etc. Do you think it's back on track now? Is it something that you would look at more constructively, or you would wait for more data coming out of what this company is doing?
No, my view is that you have to buy during uncertainty. So stock has fallen significantly from around 1050, 1100 levels. In fact, the high was around 1250 if I remember correctly. So stock has corrected meaningfully. So if somebody who is looking to invest in FMCG sector as a whole, one can start investing, because when their new CEO announcement comes, the stock will rally for sure. The only headwind right now for this company is rising palm oil prices, because crude oil is up.
That's for everyone, but in this space.
No, but Godrej, HUL, Britannia kind of companies are going to have this palm oil issue.
Yeah. We are in bug repellent season also, so maybe that's been doing well for them. Insecticides is their big product. Any view on GCPL on the charts?
The risk reward ratio is favorable. There are early indicators, but then you might want to just wait up a little bit. Perhaps beyond 950, 955, it might catch momentum. But if you want to catch it early, from a risk reward ratio perspective, with the stop loss at around 900, you can consider.
Keep an eye out for the gold finance names as well today. Pre-open rates have started, by the way. Gold prices have shot up, so maybe the Muthoot Manapurams come into focus as well. But just mark what's happening in the pre-open before we got about one more NBFC, which is L&T Finance. But the markets are starting off okay. So not a bad start, if you will. Let's wait and watch. How does the Nifty do for the course of the day today? Looking at what's happening across the world, maybe we'll not have a very great start, but maybe some optimism right now on open. Let's wait and watch. Keep an eye out for from amongst the large caps what the IT sector does per se, and at the broader end of the spectrum, a lot of stock specific movers that you want to keep in mind. So the likes of Seagull India that has gotten a large order, keep that in mind. KFin Tech has a block deal, so keep that one in mind. Good results for Lohia Corp. Aditya Infotech has approved an equity raise through a QIP. Maybe that stock comes into focus as well. HEG has received the NCLT approval for the demerger scheme for HEG Graphite Limited and Bhilwara Energy. Maybe that stock remains in focus as well. So a lot of individual names in focus. EMS got some order wins as well. So some of these might be in focus, but maybe not very large moves anticipated. What remains on investors' radar is L&T Finance. It's rallied over 35% from its March lows. What has led to this sharp move? What's the street's view on the stock? Parth Johnson with a deep dive on that stock. Parth, good morning.
Good morning, Neeraj. And the interesting part is that despite that entire run-up, there is still some steam left if we cover the analyst view as well. But we'll get to that in just a bit. If we first pull up the stock performance of L&T Finance, during the March 2026 lows, the stock was trading at around 239 rupees per share. And since then, it has seen a run-up of over 36%. Let's try and decode the reasons behind this run-up. The top 5 reasons, let's look at them one by one. The first one is that realizations have reached 98% of the AUM, and the legacy wholesale drag is easing for L&T Finance. That's the first reason. If we move to the second reason, there is an improvement that is seen in return on assets and return on equity both, and because of the lower credit cost and the legacy assets recovery that we have seen. The third reason is that their asset quality and operating leverage, both of them are seeing improvement in these quarters, and also the microfinance fear is easing. In fact, the share of microfinance has risen to around 9% for L&T Finance. And the last reason is that because of AI, we are seeing improvements in underwriting and collections, which are in turn the key drivers of lower credit costs. So these are the 5 reasons why we have seen this huge run-up in L&T Finance of over 35% since March 2026. If we look at the analyst views, then the consensus is that the 12-month average target price stands at around 352 rupees per share with a return potential of almost 12%. So despite that 36% return, there is still a return potential of 12% that is remaining. If we look at the top 5 brokerages and their view, Macquarie has an outperform rating with a target of 400 rupees. Novama has a buy rating with a target of 390. Elara has a buy rating. Antique has a buy rating. HSBC also has a buy rating, and these are they are in the range of 385 to 390 rupees per share with their price targets. If we look at the valuations as well, then the 5-year average of L&T Finance stands at 1.6 times and the current is 2.8 times. So it's slightly expensive when compared to the historical averages. But when we compare to the peers like Chola of 5.2 times, Shriram of 3.9 times, it still looks pretty reasonable for L&T Finance at 2.8 times. So that's the entire outlook on L&T Finance. The key highlight is that despite the run-up, there is still some return potential left as per brokerage estimates.
Okay, I want to look at the stock very quickly and what it's doing pre-open. Thank you for that, Parth. L&T Finance in focus. There was an uptick after the Macquarie note yesterday, about 0.21% up. Let's look at Muthoot Finance right now and look at what's happening there. We talked about how gold prices have gone up. So Muthoot, Manappuram, both will be interesting to take a look at. Hindustan Zinc is showing interesting moves this morning. So is MCX and Hindustan Copper as well. Remember, metals were down and out. Hyundai Motors, some news coming in. So Hyundai Motors, they're looking positive. They're basically going to hike prices by 1%. We talked about this in the context of Maruti. If Maruti can, not really afford to hike prices too much, that seems unlikely. Anyone else is. Will this move from Hyundai Motors be seen as a positive at all? They're not going to be able to pass on prices to some extent.
Yeah. So, and it is just 1%. Of course, that takes care of some input cost pressure. But I would say that generally speaking, and now with another thought is that now with sort of QE again starting in US, you will not see big fall in metal prices. So I would say that all the input which goes into auto will be either steady or will go up only. So there is no other choice for auto OEMs if they want to protect their margins rather than taking a price hike.
Okay, all right. It's time for the big brokerage call of the day, and this is on Turtlemint FinTech. This is in focus after Jefferies bets big on it, or rather is positive on it, initiating a buy call. Let's find out what they're saying. Let's head across to Sharad to do that. Sharad, morning. What are they saying?
Good morning, Alex. Jefferies has come out with a report and initiated a buy rating and the target price on the higher side of 190 rupees per share when it comes to Turtlemint FinTech. Of course, this company is a recently listed company, and the growth triggers is that it's a growth play on India's insurance penetration story. The point of sales person is among the fastest growing insurance sales modules which the company is having. The company is the third largest player with almost 20% share, and they see a 38% revenue CAGR growth led by 31% premium growth coming in. Also, the growth scale is driving the FY29 EBITDA margins to 19%. Compare that with FY26 loss numbers. Multiple revenue growth triggers are at play going ahead, and the valuations still reflect risk but not the opportunities, and that is why the bullishness is coming in this counter.
Okay, Sharad, thank you for that. Turtlemint, 5% up right now. I mean, the new listings, the relative new listings seem to have more sheen than your...
In fact, all banks should... yesterday I was talking to a fund manager, he said that all banks should, like for example, ICICI Bank should name it, this name is ICICI Precision.
Why is that? Why is that?
Because everything, as Neeraj had pointed out, that everything which has precision behind it has above 60p. So
I think Bihari Lal Engineering has also done very well.
I'm saying engineering precision.
Ship Rocket has done very well. That's not in precision.
So I'm saying, so I don't know how many of this will actually, really give you sustainable returns. But
I mean, the fact is that a lot of large caps over the last 5 years, 7 years have not given good
so people are chasing
either.
So it's a virtuous cycle, right? So when large caps have not given returns, people are chasing mid caps and small caps, retail, HNI, traders, everyone, and money also comes into mid caps and small cap schemes only.
Your starting and your ending point though always matters, right? If you look at peak 2024 September and you look at small cap and mid cap, then you're saying that nothing else matters. That's the only place to invest. At about a year and a half later, it's not. So therefore, for large caps, they've underperformed. Now it will come back, maybe.
But in my view, so I am a big believer of buying where value lies.
Yeah.
Whoever is a seller, I don't worry, right? And value lies clearly in large caps.
Have you looked at Turtlemint?
So I've just looked at the 4,000 crore market cap company. I think a tech-related company in insurance space. Right now there are no numbers, and I was not expecting numbers, because if there would have been numbers, the market cap would be much more. So market cap is just 4,000 crores. So I think something good to track, because market cap is too small. You're not paying anything much for it. If it is an interesting space, then we should have a look at it.
Okay. Shrikant Chauhan, just a very quick view on some of the interesting moves that we're seeing this morning, and I'm going to ask you actually about what you're looking at in Infosys and TCS. Let's look at some of the IT stocks this morning.
Yeah, good morning, Tamanna. Good morning, everyone. So for Infosys and for all IT companies, we are of the view that they are going to consolidate for next maybe few weeks. They have reached to their extreme points in the near term, close to 1200 the stock was. From there all the way now it is at 1120. We may see some more sideways sort of activity. So today we may see somewhere close to 1160, 1180 sort of levels. But I don't think that we are going to get any specific trade in Infosys and TCS. But definitely there are few companies where we are like bullish, and there the trend is very clear. So in that we like Coforge, we like Fractal Analytics, and also our focus is on Indegene. I think these are the three stocks where we can take some short-term trades, and upside is definitely there.
Got it. Okay. All right. So a few of these stocks stand out. Just a question on the metal pack though, Shrikant, considering that we've had a conversation this morning itself about the fact that you might see a little bit of an easing out in the value of the dollar, which is always positive for commodities. And to that end, when the underlying moves, then the stocks also move. So would you be positive on the metal pack?
Yeah, absolutely, Alex. Most of the companies have reached to their extreme level in last 15 days, and now they are bouncing back from those lows. If we consider the entire correction, then the correction was between 15 to 20%, and now the again up move had started. So we can expect at least again 10 to 12% sort of activity in the near term. We like ferrous as well as non-ferrous. So in both the particular segments, there is like a lot of activity. We like specifically Hindustan Copper, Hindalco, as well as JSW Steel. I think these are the three stocks which can do really well because the momentum is there. Specifically, we like Hindustan Copper today. It is opening, I think, higher somewhere close to 560, 565. But based on its technical formation, the next level to watch out for would be 580 and 590. So these are the two levels where we can keep our particular focus. But at this level, it's a buy. Even at 565, we can revise our stop loss from 547 to 554. But it's a buy for the day.
Buy for the day, 565 and counting. Remember that aluminum copper ratio as well suggests that there is some more upside for aluminum as well, but copper by itself is doing what it is doing. I wonder if though the other trade today, Kushbora, Manappuram, Muthoot, gold prices have moved up. Typically when that happens, these stocks tend to catch some fancy. They've corrected a little bit as well. Is there a trade in Manappuram, Muthoot, or any of IIFL Finance or any of the others?
I think Manappuram is something that you can consider. Muthoot Finance, we know, has been a bit of a downturn, a downward sloping channel resistance. So there could be some short covering moves on that one. I wouldn't really be, very comfortable trading in Muthoot. Manappuram is a very different beast, altogether. Strong up moves on this one, some, profit booking, some correction, but has a tendency of rebounding from the 50-day moving average, as it's done yesterday as well. The 50-day moving average is close to 337. So yes, this is something that you can consider. Stop loss at about 330. On the upside, 365 and about 390 kind of levels can be seen on Manappuram.
Got it. Okay. Just last thought, Shrikant, based on what you're seeing in the pre-open session, anything stands out beyond what we've spoken about so far?
I think, defense is the sector where we can keep a close watch. The reason is because all these stocks are available at their important supports, and few of them have crossed their immediate resistance. So in that, HL specifically has crossed its major hurdle at 4850, 4900. And based on that, the next level to watch out for would be 5300. So it's a buy at 5000, 5050 sort of levels based on its.
Got it. Okay. So Hindustan Aeronautics, keep that in mind. But the markets, as they start off this morning in the green, 0.5% higher for the Sensex and the Nifty. See, Now that difference between the two sessions as well is or two indices is also weaning off. Teething troubles would happen. I think we need to give it some time really to settle the cash impact as well, and I think some bit of it seems to have settled. Mid cap index 0.62% higher, small cap index will come up on your screen next. I wonder if the advanced decline is positive. Yes, it is. 1568 to 305. Good brisk start for the Indian markets. Let's see if we build on from here. Let's get the heat map up on the screen and see what is moving and what is not. A lot of green, very little red, which is a great thing, and ONGC and Coal India are the only two ones. By the way, the subsidiary of Coal India seems to have gotten a shot in the arm, and that stock might do well, and we'll talk about that in a bit. But first, the winners today. Bajaj Finance 1.73% higher, Infosys in the green, HCL Tech and Wipro in the green as well. So IT for a second day on a trot is actually bouncing back. Remember, we spoke yesterday that after the corrective move, maybe there's a bit of a consolidation come bounce back, and I think we're seeing that bounce happening for 2 days on a trot. Shriram Finance, Bharti Airtel are amongst the others. HDFC Bank and Kotak are in the green. Wow, this is very, very interesting. That 1% higher. Hawkish MPC minutes, but banks are not doing too badly. Keep that in mind. Cipla in the green as well. But clearly the winners, Tamanna, IT and Select Banking, the two heavyweight sectors, are holding on the index positively this morning, and no losers. That helps.
Yeah, and which is why 130 points up on the Nifty this morning. Let's pull up the India VIX for you though, and we'll go back to the small cap, mid cap and everything that's happening there. Advanced decline ratio is very, very positive, but this is astonishing. 5% down overnight. Now, is this an impact of fears easing because US bond yields have cooled off? Is this also showing you caution in the market? I mean, it's the opposite of volatility, and technically and typically the India VIX being lower is supposed to be a good sign, but at 10.74, is this a bit of a chilling effect that we've seen where nobody knows whether they should really trade or not? I just wonder, and we'll ask Khushbu, Parag Thakkar and Shrikant Chauhan what they think about it. But 1926 to 390 is a very, very healthy advanced decline ratio. Let's go to the small cap and the mid cap indices for you once again. 0.5% up on the mid cap. Small cap indices actually also about 0.5% up. Sensex, which has few stocks in it, is doing pretty decently. Let's pull up the heat map for you, and IT and banks are doing fine, but I wonder if we have a largely green screen. We do, but oil and gas showing a bit of a downtick. That could be because of elevation of crude prices, but otherwise we're doing okay actually. Nifty IT top gainer 1% up. Nifty Financial Services about 0.87% up. Private banks are doing well today as well, and the Sensex and metals are doing good. Point made earlier in the show, when bond yields begin to cool, it's generally good news for metal stocks. I want to pull up individual stocks though for you this morning and take a look at what's happening there. Turtle Mint, and let's start with Turtle Mint. Jefferies has initiated a buy call. That stock about 2.5% up. Hyundai Motors, very, very minuscule price hike of about 1%. The stock is also about 1% up. Gold prices have risen overnight as bond yields have cooled. What's happening with your gold financing companies? Both of them that are on your screen are up in the green, about 4% up on a Muthoot. Gravita India has a copper recycling capacity addition coming in, 1% up there. Titagarh Rail Systems has upgraded to approved vendor status by Indian Railways. 2% uptick on that stock. There are order wins which have come in from Seagal, IndiCube, EMS, all of them doing pretty decently. Seagal is about 3% up right now. K Fintech, there's a block deal, but the impact is actually not that negative, interestingly, 0.63% up. Strides Pharma has been given a US FDA observation, which is a clearance for its Bengaluru flagship facility. That stock is zooming 7.5% up right now. It basically clears them of concerns that they earlier had. So these are some of the winners this morning, and luckily quite a few to spot, Alex.
In fact, the breadth is quite positive, and we're holding out to those gains of 0.5% for the benchmark Nifty 50. IT is looking okay, up about 0.9%, gaining on the second day on the trot. But I really want to talk about the VIX, right? You know what they say, distance makes the heart grow fonder. it's a situation for the Indian equity markets as well. You have a complete lack of volatility, and participants will be like, okay, come back now, there's enough. You've been away for too long. Is that a case, Kush?
I certainly wish so, but my concern is what follows. Now, typically, you would have heard that, if VIX rises, the markets fall. यहाँ से और कितनी जगह है नीचे जाने की,
Exactly.
Okay, but by the way, it's not always true. Let me just give you, a couple of data points, on both the sides, by the way. So in March of 2025, VIX was close to these 11, 12 odd levels, right? And the Nifty was 20 to 500. VIX then in the next following 2-3 months shot up to 21 from 11 to 21, and the markets went from 20 to 500 to 20 to 500 to 25 500. But earlier this year, in Jan, VIX was at very similar levels, right? 10, 11, thereabouts, right? And the markets were then at about 26,000. VIX, then shot up to 27, and the markets fell to 22,500. So I'm saying there is enough data on both the points. Right now, if you were to ask me in the context of how everything is placed, in terms of geopolitics, in terms of the market moves, in terms of participation, a rise in VIX might not be such a good thing. It might actually bring about some further downtick in the market also. But like I said, there have been instances in the past when markets have gone up along with the rising VIX. So caution definitely warranted, because these are historical low levels. That 9 to 11 kind of band is historically low level, and you can see a spike, in the VIX in the coming weeks.
Okay, Parag Thakkar, there is a proposal for, I believe Reliance has proposed a 2.73 lakh crore investment for first coal gasification complex in Andhra Pradesh.
But over 30 years, na, Neeraj?
Yeah, but a large capex. I wonder if there is an addition shot in the arm for CMPDI, because that company typically tends to benefit from things like this. Has done well as an IPO, as a listing, post-listing performance too. Do you like this business?
Yeah, this business is very good, friend, and it is, I think, very essential part of the entire value chain of power in India.
Yeah, we're talking about producers. We talk about Central Mine Planning and Design Institute. Yes,
yeah,
Parag.
Yeah. So basically, yeah. So my outlook on this particular sector is good. Okay. And of course, see, Reliance doing this investment, as Alex said, it is 30 years, and for Reliance, which makes a EBITDA of 2 lakh crores every year, it is not.
No, not for Reliance perspective. I'm talking from the CMPDI perspective.
No, it is positive.
It is positive. Yeah. Okay, fair call. Shrikant Chauhan, you started off by talking about a couple of ideas, then you spoke about metals as well. I wonder if any other pocket is in favor, because post results, we've seen the behavior of two pockets doing very well. One is selectively some of the chemical names, and then some of the asset owners, the hospitals, etc., have done well. Do you like any of these cohorts?
So from the hospital space, we were like bullish, but now because of the news flow, most of these stocks have again started correcting from their highs. So we may see some more correction in the near future. That's the overall view. So it is better to stay away from taking any specific bet for the time being with a trading perspective. But defense, of course, I think there is a lot of activity. A number of capital market related stocks, brokerage related stocks, they have fallen to their support levels, and now most of them have started reversing. Yesterday we saw buying interest in AMC companies. Today we may see some more interest in brokerage companies, in that Angel, Grow. I think these are the stocks where we can keep a close watch, but specifically Grow at this level looks quite attractive with the view of risk reward. Currently it is around 194, 195. Whenever the stock falls, 190, 188 acts as major support. So with a positional point of view, we should look for adding Grow at current levels with a target of 210 on the higher side. And yes, auto companies, I think there also we can see some activity. Most of these stocks have already rallied, but Hero Motors, I think there the overall activity is suggesting us that it is ready to cross its previous high of 6,200. Currently, the stock is down from its high, from 59 to almost 5,700. But between this 57, 5,600, we are expecting stock to stabilize and again rebound back to 59. So at this level, it's a buy with a stop loss at 5,600.
All right, let's talk about a cohort of stocks that has gained quite considerably from the low point of 2026, and that is the sugar stocks, and for multiple reasons, but also because sugar prices have been going up, but the government stepping in to say, look, enough is enough, and several measures perhaps in the works, but certainly the government has tightened stockholding norms to curb those rising prices. I think there's also conversation about the possibility of a cut in import duty on sugar, and you know that the international prices of sugar are not anywhere close, or rather they're significantly lower than the domestic prices. Sharad, joining you to tell you about the implications. A lot of these stocks, Sharad, gaining quite considerably in trade even as we speak.
Well, it seems like these stocks are actually going past the news flows. Technically should have seen a little bit of correction coming in the sugar stocks, but still they're keeping the momentum. This is the first action from the government to curb the rising sugar prices, and because of that they have tightened the sugar stock holding limits as the prices have hit record high levels ahead of India's festive season. Also, they are ordering dealers who use more than 10 metric tons of sugar to hold inventories for not more than 15 days. Now, this will be applicable from 1st September to November 30th, and monthly quantity sold will be monitored as well. Now, the impact is, of course, might suggest that there might be a temporary pricing relief for the sugar. More announcements might come in for the sugar security. Profit booking is expected to come in sugar stocks, but not happened yet. Also, the inventories are still on the lower side. This is all because of the El Nino impact, and the government may actually lower the taxes also on imports as per the agency's report which came a couple of days ago, and ethanol diversion might become a problem. Now, of course, the tightening supply is not only for India but happening in Thailand because of El Nino impact, and even Europe's output is expected to be at its decade low levels. The pricing which I spoke about, the current prices is more than 5,000 rupees per quintal, and this prices have gone up by more than 10% now in the month of August itself. Global white sugar prices are also up, and if you look at the sugar stocks, they have made merry from 2026 lows. A lot of stocks going up between 20 to 70% over this small period as well. So this is the entire picture of sugar, and now the first action comes from the government.
Okay. All right, let's look at some of those sugar stocks this morning and see what they're doing very quickly. What's Balrampur Chini, Sri Renuka Sugar doing? Pretty languid, not too much to worry about. We're going to have to thank Shrikant Chauhan, Parag Thakkar and Khush Bora here. Thank you so much to all of you for joining us this morning, and turn our attention to our corporate conversations. Now, the monsoon outlook has taken a sharp hit with SkyMet cutting its forecast and raising drought odds to 70%. That adds to consumption concerns at a time when Blue Star is already seeing pressure from a delayed summer and high AC inventories. We're going to get B. Tyagarajan, Managing Director, Blue Star on, but Parth joining in first to set up the conversation.
Well, SkyMet have cut their monsoon forecast to 85% versus 90% earlier, and they've also increased the odds of drought sharply to 70%. And this is due to the strengthening El Nino, and the uncertain Indian Ocean dipole is also adding on even more pressure towards the Indian monsoon. Now, about the Q1 of Blue Star, management had mentioned that Q1 was challenging with the company facing multiple headwinds, like in unitary products, they faced around 13% inflation, but could only pass on 5% to the end customers. Also, in the commercial refrigeration side, revenue was down 15% as the deep freezer demand from ice cream OEMs remained muted. So that was about the Q1. But going forward, the management is expecting data center to be the key growth engine, with FY29 targeted at 4,000 crores in terms of revenue, and also exports are going to be a big thing, with additional $100 million of annual export revenue coming in from FY28. So a nice tailwind is being faced by Blue Star at this point of time, both from the lesser monsoon side and the data center tailwind as well.
B. Tyagarajan, Managing Director of Blue Star, with us. Mr. Tyagarajan, very good morning. Always a pleasure speaking with you. Now, frankly, I'm a little bit confused. You've had a delayed monsoon. That should technically be good for you. If you have a poor monsoon or truncated monsoon and higher heat conditions, that should also be good for you. Is this a good scenario or a bad scenario?
Good morning. It's always a pleasure interacting with you. I have stated this earlier, going by the history. India is an agricultural economy and rural economy as well, and poor monsoon will result in poor demand across tier 3, 4, 5 towns. while the temperature shooting up may create some kind of a demand that will not compensate for the overall slowdown in the economy if the monsoon forecast of shortfall of 15% is going to be holding good. I'm not a believer that the delayed monsoon is going to help the cooling industry at all.
To what extent do you expect the damage or the concerns where consumption power is limited due to a poor monsoon? You've talked about how any kind of delayed monsoon will not compensate, but what is the extent of loss or pain that you expect because of this consumption hit?
I went back to our conversations since March. We had a delayed onset of summer, and coinciding with rupee depreciation and unprecedented escalation in commodity prices, calling for a price escalation of over 13%. We could pass on only around 5%. We were trying to hold on to the margins at the cost of market share. We played that in the month of April. We lost market share in the treasury sales by 50 basis points. We corrected that because we didn't want to be saddled with inventory, and we gained 10 basis points in May, and we finally gained 50 basis points in June. But the summer season abruptly ended. I think we fell short of expectations. Our margins shrunk, and with a revenue growth of just 13% in segment 2, which is the unitary cooling products, EBIT dropped from 5.8 to 2.9%. So our focus is going to be how to regain our margins. And Q2 will be indeed a very short quarter, and nothing much can be done. It is about Q3 and Q4 getting our portfolio right and getting our costs under control so that we are able to deliver for the full year some 6.5% kind of margin. That's a Herculean task. That's what we are having in hand. Hell, a lot of actions are underway. In this context, if there is a huge demand growth, it will help. I don't think inventory is an issue in the industry. I think many players could sell their products. Of course, the prices were not friendly to the market, but they had sold volumes. I do not think that inventory is the pressure. There is no energy level change this year, and therefore one hopes that the rupee will be stable, commodity prices will soften at some point of time, but we all have a lot of work to do, and Blue Star has a lot of work to do as far as unitary cooling products are concerned. There, our focus is very clear: get back the margins even at the cost of market share. And on the other hand, we have to look at the sectors which are providing growth. Right at the moment, it is data center and advanced manufacturing sectors such as EV, solar, semiconductors. These are our focus areas where we are doing well.
Okay. Mr. Tyagarajan, good morning, Neeraj here. The other aspect is that whatever the delayed monsoon does or does not do is one thing, but just by virtue of the fact that the promise of under-penetration, one house probably having one ACB is called as penetration. Now there might be a need for 2 or 3 or 4, etc. And therefore the market size being strong should show. Somehow it's not quite showing year after year in that vein, right? Could FY27 be different, or is it difficult to say? Can AC companies have scorching growth in FY27 because of this whole under-penetration argument? And if not, why is it not showing up?
Neeraj, the growth story continues. For example, the volume growth this summer season or the Q1, April, May, June, is 21%. And we grew by around 18% in room air conditioners. The revenue growth for the market is around 25%. It is just that the profitability collapsed. I don't think there is a growth issue at all. And I still maintain between now and 2030 that 18% CAGR will be definitely maintained. There's absolutely no doubt about it. It is a question of running the business profitably. And this is a category which is growing. This is a category which is not a plug and play product like a refrigerator or washing machine. And therefore, the margins should be attractive. And I had mentioned to you a number of times, it was a double-digit EBIT industry, and it keeps coming down. And I'm still hopeful that it will be a 7.5% EBIT industry. Right at the moment, there is oversupply than the demand, and double the demand is the manufacturing capacity available today. So growth is not an issue at all. Even at this point of a time, the summer season, as I mentioned, 21% volume growth and 25% revenue growth. In fact, this figure can go up when we have the final figures.
Got it. Okay. But so that brings me to the point, Mr. Thiagarajan, that could this be a one quarter, I won't call it a wonder, but one quarter move, or do you expect that the year could actually have such numbers too? 21% volume growth would be very strong for the year.
It can happen. It had happened in the past, but I'm saying 18% is a good number to work with. That's why I'm very particular about the poor monsoon and drought should not end up in a economic slowdown. We are already under pain due to West Asia crisis, and last year the GST relief propelled and it created additional demand in later part of Q3 and Q4. So we have to pray that the economy grows, and I think government is doing a good job. Let us hope for that.
Thiagarajan, morning, Alex here. And so your investors will be sanguine or happy about the volume growth that you've just described, but the other lever is the prices, and you've spoken to us in the past about the fact that it's a challenge to pass on prices, and in fact competition is quite intense in the space that you play in. So how much you've been pretty frank in the past with us, and you've been pretty forthright to say that there's a certain amount of price increase that needs to happen. So how much still needs to happen in your opinion? How much has been taken already?
Good morning, Alex. I don't think our investors are happy. They are disappointed that we could not deliver the margins, and we are committed to and obligated to ensure that we get back our margins. They are surprised about our Q1 figures as far as segment 2 is concerned. As far as the price increase is concerned, I think it is important for us to pass on additional 6% to 8%. That is the truth. I don't think the market is going to absorb. When I earlier mentioned this growth has happened, this growth has happened at lower prices. In fact, if you look at the consumer invoices, they have purchased air conditioner at a price lower than last April. The GST benefit also they have taken, right? Now, to pass on price increase is going to be a difficult task. You have to work on the product portfolio. It is 80% of the products sold are entry-level products. And close to 40% are consumer finance led sales. And the freebies are going on, free installation, the extended warranty, so on and so forth. And therefore, you have to figure out ways how you are able to rejig the product portfolio and go ahead and improve the margins. And this may not be the permanent story there. This is an aberration due to unprecedented hike in the commodity prices. So therefore, we are confident that the prices will be passed on at some point of time. But we have got work to do in order to get the portfolio right.
Yeah, I was referring to the volume growth, Mr. Tyagarajan. Certainly the lever of margins is going to be a focus in the remainder of the financial year as well. But thank you so much for taking the time. Pleasure speaking with you as always.
Thank you. All the best to you.
Thank you, sir. All right. Well, let's talk about 3M India. I've always found this company very, very fascinating, purely from the perspective of the breadth of products that they have and the fact that they have so many patents. We'll be speaking to the management very shortly about the results and the outlook for the rest of FY27. Aseem Joshi, the managing director of the company, is going to be speaking to us in just a bit. But before we come to you, Mr. Joshi, let me head across to my colleague Mahima just to set this conversation up with a little bit of context. Mahima?
Right, Alex. So overall, Q1 has been a strong quarter for 3M India. It's been a fifth consecutive quarter for them where they've seen double-digit sales growth. Margins, of course, were impacted on account of higher employee cost as well as purchase of stock in trade cost also went up for them. In terms of the numbers, revenue saw an uptick of around 19 odd percent. EBITDA was down by about 1.5%. Margins came in at 16.7% versus that of 20.2%. And net profit did see a jump of around 31%. In terms of where segmental performance go, they operate in 4 different segments. So healthcare grew by 23.5%, safety and industrial also saw growth of 23%, transportation and electronics saw growth of 14%, and consumer segment saw growth of around 13 odd percent. But the key question here would be to understand as to how much of this growth that is coming in top line is from price hikes versus volume, and what's the outlook going to look like for margins going forward?
Yeah, important question, certainly. Let me begin with some of them. Mr. Joshi, thanks so much for taking the time. My name is Alex Matthew. I want to start with asking some of those questions. To say that the revenue growth was substantial, but there was a contraction in the margins. I guess like a lot of people in the industry, in the manufacturing space, you are facing input cost pressure. So is it possible for you to increase prices? Is that how the revenue has gone up, or is it volume-led?
Sure, Alex. Thank you, first of all, for having me on the show. And thanks, Mahima, for the background. First of all, the revenue growth that we've seen this past quarter, about 19%, is it's very strong. It's five consecutive quarters of growth that we've demonstrated, and it's across all our business groups, right? So the demand is there, and it's a reflection of the work that our teams have been doing. Now, as far as the margins are concerned, yes, we have been impacted by the raw material inflation, a little bit by the labor portion as well, but also by the FX. Keep in mind, we do import a lot of the raw materials that we use in our products that we manufacture in India, and that FX has been a large driver of impact. We do think that over time this will stabilize. We have taken pricing actions, and those are starting to flow through. Already in this quarter, we've seen some impact of that, and we'll see the full pricing flush through in following quarters. So, clearly we are very pleased with the growth that we've been able to demonstrate. We have some work to do on the margins, and we're very focused on that.
Joshi, just on the point of the FX impact, right? So what is the hedging strategy, if at all, and have you tweaked it to account for the kind of depreciation that we've had? And is that going to normalize in the current quarter, or will it taper off over the course of the year?
Yeah, so currently we do not hedge. We have not hedged as a company. Our strategy is to look at doing more local production, local sourcing as a way to get away from this exposure to FX. That work is already underway, and we anticipate that it's not something that will happen immediately, but it will take a few quarters before we start seeing that result. In the meantime, we continue to work with our customers and our suppliers to try and mitigate the impact of this cost increase, excuse me.
Okay, just a quick follow-up on that then, Mr. Joshi. You have as I understand it, 60% of your cost of goods sold it comes through in the way of imports. So is there a target that you have in mind for localization And what timelines are you working with?
Yeah, so that's right, Alex. About 60% of our costs are imports, and we are very cognizant that that exposes to FX variations. There is a thought process on figuring out what products we localize. We have 3 factories that we operate out of in India: one in Pune, one in Bangalore, and one in Ahmedabad. And in each of these, we have identified products that we can increase the level of localization content. Now, that will take time, but we do expect the 60-odd% should start reducing as we don't have a specific number on that, but we do expect that to come down substantially in a couple of years. Keep in mind, if I may just add, given the breadth of our products, we will always be getting products from our global factories. That is actually a strength of 3M. But there are specific products that 3M can manufacture in India, and that's a specific subset. Fast-growing industries, automotive, some of the industrial sector, adhesives, etc., where we see opportunity to do more in India.
Aseem, good morning. Neeraj here, and directly or indirectly, all of us are users of the 3M products as well, and they are fabulous. But the point that an investor would want to know, that is there a conscious effort being made to reduce this import dependence wherever possible, or is it let's see how it goes? And either may be right, because you do have great global products that you might want to get in, even if there are margin pressures because of the currency or otherwise. So is there a conscious target, even though you said you don't have a specific number, but is there a conscious effort for that?
Yeah, hi Neeraj. Thank you. And first of all, thank you for the vote of confidence in our products. I do believe we have fantastic products as well. As far as whether it's a conscious effort, yes, we do have, as I mentioned, specific products that we've identified, and we're working on reducing our dependency on imports on those. Keep in mind, in some cases, those products those raw materials aren't easily available in India or aren't of the grade that we require. So it has to be case by case. But we do have a focused program on reducing this dependency.
And the other piece is your presence or upcoming presence in the high growth areas in India, right? I mean, I read somewhere that you've highlighted ambitions of a 5x growth in electronics business, for example. India has a lot of newer sectors, right? Do you sense the ability for somebody who is a behemoth as yours as well to actually show higher growth rates over the next 3 years than what you would have shown in any of the preceding 3-year blocks in whatever the past 10, 20 years?
Yeah, Neeraj, so let me address, India is a growth market for 3M. That's very clear in how 3M globally looks at India. We also see very exciting opportunities coming up in India. Thus far in the last 5-6 quarters that we've demonstrated significant growth, we've sort of driven harder in existing segments, be it automotive, be it industrial, be it healthcare, be it consumer. We see increasing opportunities. You talked about electronics. We see data centers also as an upcoming opportunity. Down the road, semiconductors should also pick up. So there is a lot of excitement in terms of what is possible in India. Just to talk about electronics for a moment, we have, when you think about electronics, each of those products is going to need adhesives. It's going to need films. It's going to need temperature management. It's going to need abrasives. Those are all the kind of products that 3M makes, many of which are made in India. So we are very excited about those prospects, and we're putting our teams and lab capability in place to be able to support that growth. For instance, for electronics, we've put up a new lab in Bangalore that allows our customers to come in and see our products, be able to sample them quickly. We have a sampling center as well that's set up to be able to respond to customers' requirements very fast. So we're very happy with the progress we've made, and we're positioned well, I think, to support customers as they manufacture more in India.
Okay, I assume your margins will look to recover. Aseem Joshi, hi, Tamanna here, very quickly. I assume your margins will look to recover, and that is all of the input cost issues that we've been discussing are the core cause of the squeeze there?
Yeah, Tamanna, that's right. Of course, we're working hard to see how we can get our margins back to where our historical levels have been, and actually get beyond that as we get more scale benefits. The first step is to get the material costs under control. Some of those are predicated on what happens in West Asia, of course. But again, sourcing more from India or finding other sources has been a major focus area for us. I think we've done reasonably well as far as our supply chain efforts are concerned, but you can never let your guard down. And the previous conversation we had around reducing the FX exposure, that remains a priority area for us as well. So yes, we will bring our focus and energy to bear on getting our margins up back to sort of historical levels.
Have a timeline in mind?
Well, it's hard to really predict that because of the uncertainty in sort of the material cost and where that's going. But I would expect the pricing actions that we've taken to fully flow through, start fully flowing through by following quarter, and that should start nudging the margins upwards.
Okay. So pricing action will give some buffer on margins as well. Thank you so much, Mr. Joshi, for speaking with us today. A pleasure to have you on.
Thank you very much. All the best.
Okay. I want to turn my attention to an important story. So, SEBI put out an interim order yesterday that barred two entities from markets for manipulation in the Sensex on the CAS expiry day. The regulator has flagged what appears to be an attempt to influence closing prices during the Sensex index equilibrium price session on the 13th of August. I'm going to go across to Sharad now to set this up for us. Sharad, first of all, what happened on the 13th of August which got the regulator thinking, and then what is the implication of their order?
Well, to put things in perspective, that was the expiry day, and there were some large brokers or jobbers who were active here. Of course, two names have been taken in this case, but remember, this is an interim order right now, but this is the first action coming in from the regulator. So let's look at what actually happened on 13. There are three spikes to talk about, and this is where we see Copthall, that's the Mauritius entity, that actually put large buy orders, first of all, at around 310. 315, and then the second spike comes in for the second order coming in, and this is the buy orders which are coming in, and each 5 minutes we see the buy orders are increasing, but suddenly there's a massive cancellation of these orders coming in, and because of that there is an impact in the expiry days and the FNO segment, and that is what actually caught the face of the regulators, and that's why they have taken this decision. And this story is not only playing out for only one side for Copthall, which was just going on the higher side of the pricing, the 3% band which I talk about on the higher side. But on the lower side also, Mansi stockbrokers was there. They were keeping on giving their sell orders on the lower side as well. This is where the action was happening on the lower side. And then they also cancelled it. So on the buying side, Copthall cancels their orders, and the selling side, Mansi stockbrokers cancel the order. And either sides, they make some gains, and those gains are a bit questionable, and that's why the regulator has raised these concerns.
I just want to talk about the extent of the spike, because you had huge moves on the Sensex on that day, isn't it, Sharad? You had a 362-point surge in that spike 1 that you're showing, and we should actually add that detail. That was just 2 seconds, and you had a 362-point surge. In spike 2, you had a 132-point jump, and then another spike 3 of 405 points, and that's where it gets a little iffy.
Yes, and in the matter of the 10 minutes, we saw 2 trades happening, and the third trade actually cancelling it, and both the sides this was happening for Copthall as well as Mansi. And because of that, the manipulation, the numbers were getting haywire on the closing for Sensex on that expiry day itself.
Okay, thank you for that, Sharad. I'm going to go across to Nimit Dikshit, who tracks SEBI closely and has been looking at this order, but he's reporting today live from the office of Mansi Share Broking, one of the entities that have been named in that order. Nimit, you've landed there early this morning, figured out what is this company that has been named in the SEBI interim order. What have you found?
Yeah, so Mansi Share and Stock, very interesting story here. We're in this mall, Raghulila Center in Kandivali, where on the website is listed as a branch of it. It's almost a closed down mall. Maybe it's early in the morning, so most stuff is closed down here. But what we'd like to show you is what we found very interesting. Mansi is listed at 8340 down this link just about here if you follow me across. Right now, there is another name here. which is not Mansi, right? So we tried to inquire about whose this office this is, and when we spoke to them, they seemed very reluctant to talk to us, and they were saying that Mansi has closed down here. Mansi's address is still listed across platforms and on their website here, right here in front of this office, and we don't understand if this is a legitimate change in address that's not been notified, or is this is genuinely Mansi's address that's not been notified. That's something we're trying to find out. There's another address listed in Borivali where we'll be heading out shortly. But what we understand is that they're not speaking to us right now. They are saying that Mansi is actually shut down. But the office here seems to be running. There's about 40 people inside that office. Everybody's in office while the rest of the mall seems to be closed. So there is definitely a stockbroking operation going around on here, because the listing also shows that it has to do with securities. The BSC and NSE's listed stock exchange is listed here. So looks like there is operations going on here inside this mall. But we're waiting to see if they're going to speak to us. But important to understand that both Mansi and Koptol did not act coercively. They did not act together. They acted separately, to one to raise the price and one to drop the price in their own benefit. Mansi, of course, we're looking at a profit about 57 lakhs that the SEBI has now seized, and it's banned Mansi from the stock exchange completely, from trading completely. So we're going to be examining that. We're also going to be looking at their other office in Borivali, and we'll get back to you on that soon.
You can still hear us, I'm assuming, and I just want to clarify, Nimit, to be very clear about this. You're at the mall, you're saying that people have entered, you tried to speak to a few of them to establish whether they work for Mansi Stockbroking. They refuse to give you an answer, and there's no hoarding or there's no signage that says that is Mansi Stockbroking. Is that what you're saying?
No, it does not say that it is Mansi anymore. It says a different name, which as a responsible person, I don't want to name anybody else, but it says that we asked them specifically about Mansi. They said that Mansi is shut down, which according to the SEBI order is not true, because they were executing trades as early as August 13th. So that's the response we got from them so far. They have another address in Borivali, so we're going to be checking that out as well.
I'm glad, Nimit, and that's the kind of ground reporting that we want to bring to the table, where we actually go on ground and find out what's happening. All right, let me go across to Rajesh Baheti, MD of Crosseys Capital, who's joining us now on the show. Rajesh, great to speak with you. Now, we're trying to understand the kind of impact this SEBI order would have had. Remember, this is from a week ago. Today, again, you have Sensex expiry. And you're going to have Sensex expiry impact under the caste regime in closing as well. Prima facie, how could this have happened?
No, it's very easy. The derivatives market continues to trade while the cash market is in cash. And SEBI has encouraged all brokers to show continuous live prices of the indicative close. So you can not only want to expire the Sensex at a particular value or the index at a particular value, even during the period of cash where you're allowed to withdraw orders, you could arguably put a large order so that the system will show a different price as the indicative price. And because there's an indicative price that is available, the option market will react. So you don't really need to actually trade in the cash market. You put in a large order that kind of distorts the price that the exchange displays as the indicative price, and the options market will react. You cut your options at a fat profit, and then just withdraw your orders from the cash segment in that order withdrawal window. So you don't really have to expire the Sensex. Is the journey also that can be manipulated, and that's what seems to have happened in the case of Mansi.
But Rajesh, then, and good morning, Alex here. So ultimately, there is no law against placing an order and then cancelling it, or is there? I'm trying to understand the legality of it, right? Because in the normal course of a market operation, you can place and then change an order.
No, there is indeed a law that bans spoofing. It's called spoofing. So whatever order you put in the system, you are definitely allowed to withdraw and modify it. But the original order, you must have had the wish to have it executed. If you place a large order fully knowing that you don't want this order to be executed, but you want to only display it on the system and then pull this out in really quick time. That is called spoofing, and that is covered under SEBI regulations.
Okay. Rajesh, what would be, to your mind, the purpose of doing this? I know this is an interim order, so I have a two-part question for you. What would be, to your mind, the purpose of doing this, number one? And number two, what is the kind of impact it's going to have on stakeholders, investors, who are still trying to figure out what the impact of CAS is in the first place?
So the good news is that SEBI did get rattled by all the talk on CAS and the fact that thin volumes are going to decide how the index would close. And SEBI got his antennas up, and it's very encouraging that an order in 6 days, that's a record for any regulator, I think, has been issued. An interim order it might be. But the fact is those gains have been impounded for the time being. The accounts have been frozen. And it has sent a very, very strong message that whatever you want to do in the CAS, you must have the original wish to have that order executed. You should not put orders only to change prices with having no intention of having them executed. So I think that's a very, very positive message. I take this order very positively. However, giving an order is one thing, proving it is another thing. So I don't know the details of which. My only concern is that SEBI is encouraging everybody to go and participate in the CAS. And this also might be read as, look, if I participate in the CAS and I put in some order which SEBI thinks is not the right price, I might get a show cause tomorrow. So I hope that won't happen.
Could have a chilling effect both ways. Rajesh Baheti, thank you so much for joining us as we keep covering and exploring and examining this very important story. We'll take a very short break, but on the other side, we're back with our special presentation. We're in conversation with the Citi Research panel. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Buy now.
Sell immediately.
Hold it, boss.
Buy now.
Sell.
Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet.
Well, thanks for tuning into this very special broadcast where we are talking to the top deck at City India Research on their analysis of what the first half of the year has shown, especially after post Q1, what the commentary has shown and what does that indicate for the rest of the year. We used to look back at the quarter, what we've done over the last 2 or 3 quarters with Surendra and the rest of the India Research team is try and look ahead as to what does the implication of the commentary mean for the quarters ahead. And gentlemen, all of you, thank you so much for joining in today. Really appreciate your time. Full house, as they like to call it. We love it here, by the way. So thank you so much, all of you, for coming in. Surendra, can I start with you? Sure. Surprise at the end of quarter one, both the results and the commentary, and what does it mean for FY27?
Yeah, sure. So first of all, thanks for having us on the show. So yes, the numbers came in well above expectations. If you look at, say, the top 100 companies, at a EBITDA level, it's almost like high single digit above expectation kind of a performance. And going into the quarter, there were a lot of concern that we would see earnings downgrades, given that the impact of higher raw material, etc., was yet to reflect in the numbers. So investors were very worried about the quantum of downgrades. Everybody thought that the 15% odd sell side expectation for this year was very high. The good thing has been, firstly, we have seen beats. Secondly, we have not seen the earnings estimates change at all.
Okay.
Through the earnings season, 15%, because 15% is a very healthy number for this kind of a year, where there are challenges to deal with. So that's the good part. Commentary by and large has been positive, like as you rightly pointed out. I think, again, it's a good thing. Obviously, you see this kind of optimism after a while, so it's a good thing. But we are also watchful of what happens in the latter part of the year, because there is a little bit of a base effect also, because the GST benefits kicked in. So we really need to see how that plays out, and that's very relevant for the consumer sector, which all these guys cover. So it is going to be something to watch out for. But yeah, it was a good quarter. And definitely the management commentary was a lot more optimistic.
Yeah, consumption economy. So save for Surendra out here, of course, look at everything else. But yeah, IT, we're getting a whole consumer bias here today, which is a fabulous thing to do. But Surendra, just very quickly, does this make you change, not necessarily the target, because chalo Nifty to kya karega ek hai, but does it improve the sentiment in your mind for what earnings could do despite the challenges, as you said? I mean, one is the GST, two, the MPC minutes have sounded a lot more hawkish than what the policy suggested. Anything on that?
So see, I think the good thing is, despite all the challenges, corporate India is still executing well. Okay, and which is why, like, our belief has been that on a medium-term basis, India still offers one of the best growth markets and with less volatility. Right? It may not give you a 50% earnings growth, okay, and then the next year -25, -30, but it can give you steady double-digit teens kind of compounding over the medium term. So that belief is reinforced because you can see that corporates can execute well, they can tighten their belts when required, they can manage cost structures well. And that is what gives us comfort that, yeah, the medium-term thesis that we had is kind of right and playing out in the right direction.
Yeah, and kind of we saw this during the COVID quarter as well, right? Pushed to the wall, India Inc. somehow just delivered very, very strongly. Mr. I'm going to start with you. And your sector, were you surprised with what's happened? I'm referring to quarter one because that's the most recent one. And what do you make of the commentary in general, en masse, and for specific buckets within your sectors that you like the most?
Right. So Neeraj, definitely it started off somewhere around this time last year when the GST rate cuts happened. A very interim period of transition where the companies were taking some channel inventory corrections, some price changes, especially the price pointed packs. But yes, post that, we've seen a major uptick that's played out very clearly. Now, in that front, and more so this quarter, right, because companies had taken price hikes given the commodity inflation that played out. Despite that, volume growth have stood very firm, right? So yes, it was a positive surprise. Now, the big point would be to watch out further how the inflation plays out in the rest of the year. The commentary till now has been positive. Companies have already shown a lot of initiatives to manage margins, and I think that's something that, as you said, we've seen since COVID, it continues very strong. But yes, once the GST rates anniversarize, the GST rate cut benefits anniversarize, I think that will be the key part to watch out for. In terms of the sector, the way we look at it, we prefer food and beverages over HPC, and primarily the thought process is this larger headroom for growth in this category versus in HPC, which is relatively more penetrated. So food and beverages, you get that penetration-led growth opportunity, and hence preference food and beverages over HPC.
Okay, and what surprised you the most, if you will? I would love to know the extent of surprise that came in the commentary of any of the companies within your coverage universe.
So, Neeraj, the numbers continue to be strong, right? And the commentary again was that most companies that give out a guidance, they maintain their guidance. There was no reduction in guidance, which again is something that is a positive here. And in terms of even the earnings changes, no real cuts, broadly speaking, for the sector, barring a few companies here and there. So, I think from a trajectory, the growth continues, and the volume growth especially continues, and then the commentary remains very positive, both on the growth and the margin front.
Okay, I'm going to come back with the top pecking order as well in a bit, but Ashish, can I come to you? And again, I'd like to start with that because the most market experts, fund managers who've come in and said that the surprise was the big factor, right? That not too many people anticipated, and therefore the extent of the beat that came in relative to expectations. Where is it that scored in your coverage universe? Which companies did that the most, both in terms of delivery as well as in terms of commentary?
Sure, I think jewelry definitely is the first one which comes there. It has been outpacing all other discretionary category for since COVID. And even if you look at this quarter, despite gold price volatility, and also given that there was a Adhik Maas, which is once in a 3-year phenomena, so you had an inauspicious period, yet it was a very strong set of numbers. And even from a commentary point of view, they were very gung-ho that July has been holding up really well. Plus, if you look at last 1.5 year, gold coin was growing faster. There was some impact on studded, etc., which also seems to be changing now. You definitely see that like companies are seeing studded also growing faster. So I would say jewelry definitely continues to surprise, and the commentary was also positive. The second one I would say is QSR. If you look at QSR, after a very long time, there is a turnaround. You see positive same-store sales growth across all players. And see, it's not only a base effect because because from base you would go to 0. So if it was -3 or -4, and if you're going to +5, +6, something is positive, something is helping you. So I think QSR definitely was also a positive surprise, where you saw one companies reporting positive SSSG, and also the commentary that July also has been holding up well.
Yeah.
But you really want to see that momentum continuing, because we have seen there were quarters where it was positive and then it again mellowed down. So yeah, I think QSR and jewelry, of course, consistently has surprised, and the commentary was positive. QSR was where the expectations was not as good, but they have surprised. Cable and wire, I think that's the third one where you see that growth has been very strong, especially if you look at the commodity inflation, like the way copper has, copper aluminum prices has gone up. There also growth has really stood up well. So that's third one. And lastly, maybe just the durables. But in durables, you see growth surprising, but the commodity was more of a challenge, because in cables and wires, you're able to take price hike, pass on the impact.
Yeah.
But white goods, if you see, most players have seen a margin decline.
Yeah, in fact, we were speaking to Blue Star earlier this morning, and they were saying that the volume growth has been impressive, but on the other counts, they can't quite mention that. I'm just intrigued. I'll ask one follow-up out of the 3 or 4 that you mentioned, QSRs. And the reason I ask this, because for the longest time, these stocks have been either they haven't created wealth. If anything, a lot of these have come off, despite this whole promise of how India will actually see great penetration, etc., right? Could this time be different? If so, why do you think that this growth is not a one-off?
I think we have to really look at what went wrong here, right? So in the last 2.5 years, I think it was the mass market which was getting impacted the most. Top end was doing really well, which is reflected in jewelry, white goods, etc. In the last 1 year, 2 major things. One, GST rate rationalization, so leaving more money in the hand of the low income class, middle class consumer, and also the personal income tax cut, right? Both of them effectively left the mass market consumers with more money in their hand. And that is what is, I think, is helping them with spending more. So this is the low ticket instant gratification kind of a category. So if you want to feel good, feel happy, this is where you spend immediately. So I think that is where it's really helping. And plus product side also, I think all these QSR players have done a lot of work on product innovation, and also offering products at a 99 rupees price point, 59 rupees price point, which is making them more affordable. So if that continues, I think this should be a different time.
Okay, well, let's hope. I think a lot of shareholders will be waiting for that to happen. But no waiting for the auto names, right, Arvind, if you will, because since November, the rate of growth has been superb. The month of July also, I believe, was fairly strong per se, right? But there is this impending issue of the base effect catching up once the GST month wears off, right? The 12 months wear off. How are you looking at what was delivered and the commentary versus this upcoming base effect month of November or October, as the case may be?
Yeah, so the volume growth has been very strong, and we get literally a monthly update on the numbers. If you look at what most companies were saying in the conference calls, they seem to be quite positive. Everybody called out that yes, we know this is second half where you have a strong base, but still the growth expectations were better off than what they were in the fourth quarter. So to that extent, it's marginally better. Naturally, the kind of growth rate we've seen, high teens, early 20s in some cases, that will not sustain given the base, but still high single digit. In fact, some companies called out even low double digit kind of growth numbers for the year, which is quite positive. Monsoons have also helped. Obviously, they are weak, which was known. But perhaps if you look at the commentary by some of the rural-focused companies, they say that ultimately the impact has been less worse, if you may use a term, than what was anticipated. So again, if you look at two-wheelers, if you look at tractor numbers, they have been extremely strong, much stronger than what we anticipated. So to that extent, I think rural has been good. Urban also, sentiment has improved slightly. When the fuel prices were high in the early part of the year, there was some apprehension that you could see weaker numbers, but given what most companies are saying and the fact that we get the retail data almost on a daily basis, the demand is quite strong.
Surendra, just very quickly, at par, do you reckon this whole fear around the rural demand looking very slack because of the monsoons being erratic, has Q1 kind of dispelled that a little bit across sectors, you reckon?
Yes, I would say it's helped, but again, it's a bit like you still want to see another quarter.
Okay.
Okay, because the impact can come with a little bit of a lag. So, which is why I wouldn't say that it's kind of gone away entirely. But yeah, I think the monthly data, which Arvind spoke about, I think
for
that
autos,
is for autos, because that's like a clear indicator, at least the tractors part of it. That is still pretty encouraging.
Okay, आप सहमत हो? I mean, are you concurring on tractors and are you constructive there? Because M&M commentary, Escorts commentary was reasonably positive, but they were cautiously optimistic. They were not out and out optimistic, Arvind.
Absolutely, like as Sven said, that monsoons aren't over unless they are fully over, right? You've got temporal distributions, you've got spatial distributions, which can even over the last 2 or 3 weeks, they can make a big impact. But till now, what we have in the monthly numbers, they are very strong.
Got it. Okay, so you're constructive, autos per
Yes,
se,
absolutely.
even down, despite the base effect, the weaning off month coming up.
Yes.
Okay, or period coming up. Excuse me for that. Okay, thanks for that. And I'll come for the pecking order as well. But Vijay, to you now, interesting cohort of names that you cover. Where is it that there was a possibility of a surprise and you got surprised per se relative to your expectations?
Right. I mean, I would say in general, across my coverage, the story generally has been, because it's internet platforms, these are as much about taking market share, driving penetration, as they've been about macro. So a little bit of that macro consumption side helping kicked up the growth rate in certain categories. You can see that very clearly in food delivery, for example, where, it's been a few quarters now, a couple of quarters at least, where food delivery across the two leading players has picked up, and you've seen some of them at least make make more concerted effort to expand the user base of food delivery. A lot of these companies were under focused on value side of food until very recently, and now maybe with the macro being a little bit more supportive, they're trying to make a go at it again. So you see that surprise there. I would say in general, in this quarter versus previous, there were some concerns around whether quick commerce growth is going to slow. And while it's a bit of a mixed bag, but the evidence kind of shows that quick commerce continues to do pretty well, especially for the leading player in the segment and in the category. And then, if you look at e-commerce in general, some of the players that we look at, the value e-commerce players at the mass end of the market, and then the premium end of the market where you have a vertical e-commerce player in BPC category. Both of them have shown pretty good trends. So I would say that in general, growth remaining strong for some of the players that were doing well, despite some concerns coming up around whether, growth will slow, and then new pockets of growth emerging because of slightly favorable macro. I would say that has been a consistent story across all of internet platforms.
So what's the pecking order there for Vijay? And the reason, so on food delivery, right, there's a lot of news flow. Management changes at one, the other one has taken a call that shareholder giving the approval and therefore they will own inventory, and there is an IPO getting delayed, which might help the two. So food delivery is a case of its own, but it's a wide bucket out there. What's the pecking order in your mind for the companies that you have based on Q1 or even otherwise?
Yeah, so Eternal has been our top pick in our coverage space. It's been a top pick for a while. We also have InfoEdge, which is a slightly different company in the discussion that we've had, but we have it in our, City India top pick as well. So those are the two companies, but we also like a lot of other companies. In general, my companies play into various different themes. So these two very clearly, and then we do like, delivery, we like Meesho, we like Make My Trip, a whole bunch of them, really. But those two are our top picks.
And the numbers for some of those, even in Q1, was very, very impressive. So interesting. And I read some of the notes that came in as well, with a lot of positivity. Surendra, if I ask you to attach, and then I'll of course get the pecking order from everybody else as well, but if I ask you to attach based on the whole consumer versus the non-consumer divide right now, and we're seeing a lot of the non-consumer sectors come up and make the presence felt. Precision manufacturing, to an extent, defense, the order booking seems okay. Off late, the ordering activity in infrastructure looks robust as well. And from the lows, IT is bounced back, something that you cover very, very closely too. Where is it that you find the most favor now from here on for, let's say, the next 9 months?
Yeah. So see, some of these more secular themes we have liked for a while, and I would say categorize defense is one of them. Healthcare, hospitals is the other one. Telecom is the third one. pockets of industrials, I would say, is the fourth one. So these, in my view, are more secular, which we continue to like, and platforms is the other one where we have a couple of names in our top picks. So those are more secular in nature and we continue to like. And then there are pockets where we are more selective, right? Like autos obviously has had a great run, but then obviously stocks have also done very well. So there we are a bit more selective. Okay, similarly property, we had a great multi-year cycle. And now we are in a bit of a mid-cycle phase. So there we are more neutral. Okay, and then IT, again, my concerns have been more medium term. Okay, and I still do, while this is more like a relief rally on low valuations, and it's a bit of what investors call the anti-AI trade. But fundamentally, I still don't see the business changing. I think the industry, if you look at this quarter, which just went by, last 6 quarters, if I take all my entire coverage, growth has been stuck in the 2 to 3% territory. And unless that inflects, I just can't see how somebody creates a lot of value.
And you don't think it will inflect?
Very difficult to see, at least based on today, and at any point you are looking 12, 18 months out. You just don't see the drivers why that inflection will happen. Because on one side, the AI productivity ask is still high. Competitive intensity is crazy. Like if you look at some of the earnings calls, CEOs have been saying that there are competitors who are ready to offer 60% productivity 3-4 years out. So that is still there. GCCs are still taking away share.
Got it.
Okay, so you just have a lot of drivers which just don't allow the industry to grow more than that, in my view. So you are stuck in that low growth trajectory, and for any meaningful value creation, that has to change, which I just don't see happening at least anytime soon.
And even if the mid-sized players add on to growth by inorganic moves, the multiples you think will stay subdued?
Yeah, see, I think the industry growth automatically caps the multiples which any stock in that particular sector can trade at. So that is definitely an issue, and inorganic growth I am always a little bit more careful, because it's not easy to create value out of inorganic growth. If you just look at globally or in India, you look at hundreds of transactions, it's never been easy to create value.
That's true.
So I'm always a bit more careful, because there are risks which come along with it, and the market may be excited initially, but there is always a potential that the risk could play out in the medium term.
Yeah. No, I mean, in case of Persistent, it's not that the market got too excited about the transaction as well, right? The stock price reaction.
If you look at both the deals when they were announced, Coforge and Persistent, initially the market reaction, because I think there are always worries. Okay, and it's not like in 3 months you can decide.
That's true.
Right? Some of this risk can play out in 12 months and 18 months also.
Fair point. Okay, great. So we know his pecking order. It's a clear avoid right now. What would your pecking order be within the universe?
It's as I said, we prefer food and beverages over HPC.
Names, if you can.
And yes, and in terms of the names, it's Tata Consumer, Britannia, and then we have Godrej as well from the HPC pack.
Okay.
The thought process being more of companies being able to diversify their portfolio, move to faster growing categories. That helps you add to what the core was growing at, and hence Godrej in that bucket as well. And Tata Consumer again is another name that's done that very well historically.
Okay, where are you most underweight on?
So the cells that we have, it's ITC, Colgate, and United Breweries.
Wow, ITC, Colgate, United Breweries. And ITC, despite the perceived valuation that it trades at, is still an avoid for you.
Yes, so it's a sell at the moment. I think it's more of an earnings-led challenges that they are facing right now. Earnings cuts can play out from a consensus earnings point of view, and hence the position.
Okay, lovely. Ashish, what about you? Your top pecking order, please, or your pecking order as it stands right now.
Sure. So Titan, Polycab, and LG Electronics India. All these three are market leader and demonstrating both growth and margins. So these three are the top picks for me.
Okay, and where are you underweight on from within this cohort?
Yes, I think one is definitely Avenue Supermarts, where we do see quick commerce competition having an impact. So that is where you see same-store sales growth taking a hit. The other one is paints, because we do see that the competitive intensity in paint has been pretty high. Definitely the price hike has helped, but then the valuation has also really caught up. And third one would be Trent.
Third one would be Trent. So it seems that large format retail, you're not quite constructive on right now. Would that be a fair assessment?
See, all these companies have demonstrated very good execution skill, and the way they have gained market share has been commendable. But in the last, say, 2 years, all these three specific names, if you look at it, they are facing external competition, which are incremental. It's not from the existing players. Whether it's grocery retail, you now have quick commerce, which have been impacting in a big way. You look at paints, there is consolidation, plus there is new entry as well. And similarly, if you look at fashion value retail, in the last 2 years, we have seen so many players coming up, opening stores that see the consumption, while the consumption, there's a growth in consumer, but at the same time, the competitive intensity is also making it difficult to get incremental market share.
Yeah, and Vijit, somehow they are not able to quite do what the pure play platform companies have been able to do, right? Somehow Avenue Supermarts had that promise, Trent is trying to do, but not quite there, right? If I'm not wrong.
Yeah, I mean, look, the quick commerce companies are the ones that are just quick commerce, right? And so there's only market share to gain for them. They are not fending off, competition from another format as such. They are the competitors for everyone else. So, I mean, I think that's definitely the aspect here that benefits the platform companies at the moment.
And maybe Neeraj, I'll quickly comment on this because we see it across sectors.
Haji.
Right, so the incumbents, firstly, there is a time to change. It's not easy to accept that the market has changed. So there is a meaningful pivot required, which is always difficult if you are a deeply entrenched incumbent. And secondly, even when you start moving the needle, it may not necessarily show up in the numbers because it's a tiny part of your revenues, right? And I have dealt with this in IT for a very long time. People look at digital transformation revenues, they get excited. People look at AI revenues, they get excited. But if you just look at the end outcome, the growth never inflected. The growth, barring that period 18-24 months after COVID, which was like a global technology spend boom, growth has always been relatively muted versus what people potentially thought. And we think these two reasons, they apply pretty much uniformly across sectors. We see them playing out all the time.
Yeah, which is maybe the Nifty 50 is just not budging, whereas the growth seems to be coming in the broader end of the spectrum. But yeah, Surendra, kudos, your views on IT have played out so well, while different parts of the street have at times been bullish or bearish, as the case may be. Can I come to you for your auto pecking order as well, please? Because you spoke favorably despite the fact that there are challenges at play. What's the pecking order there for?
I think challenges, like even they have managed the commodity cost challenges quite well. So we still like more domestic oriented segment / market leaders. So Maruti, Eicher Motors and Mahindra would be our top picks in that order. I mean, they're all market leaders in specific segments and seeing very strong volume growth.
No two-wheelers?
Eicher Motors.
Eicher Motors, okay, sorry. But that's a rarity because most people tend to speak about Bajaj Auto or TVS given the recent performance. You don't like them?
So for the two-wheelers, we think the competition is very, very high, and therefore the pricing ability takes a bit of a hit. Valuations are not really very attractive. For two-wheelers, we would prefer an ancillary like Endurance, which supplies to literally every two-wheeler maker in India. That's perhaps a better play out there.
Oh, nice. Surendra, we have 30 seconds. I would love to know. I haven't asked you your pecking order because I kind of guessed that you're not quite out there on the bullish side. But is there an outlier within the IT bucket that you think people should take note of? Look at the delivery, look at the numbers.
So see, the challenge we have is that some of the names which are executing well trade at very lofty valuations, right? So from a stock perspective, risk reward, we still don't find attractive. I don't have a single buy rating in the space out of the 11 stocks I cover.
Well, that says it all. Well, I kind of guessed it, but I thought let me just confirm that view as well. Okay, great. Gentlemen, out of time, but thank you so much all of you for joining it. We really appreciate your time. So it's great having seen you again and look forward to doing this next quarter as well.
Sure. Thank you.
Yes, thank you. And viewers, thanks for tuning in to this really, really amazing conversation. Hope you benefited from it and enjoyed it as much as I enjoyed doing it.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Sashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter finance.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin spikes past $69,000 mark on Treasury buyback announcement. White House clarity push comes ahead of the Senate vote. The US national debt crosses the $40 trillion mark. And lastly, the Blockchain Association backs SEC's proposal to scrap outdated rules. Looking at the Bitcoin that has spiked towards the $69,000 mark and briefly touching even the $70,000 mark on the Treasury buyback announcements, and also a positive regulatory sentiment. Now the spot Bitcoin ETF saw renewed inflows, and that also more than $1 billion of short positions were liquidated, and the US Treasury said that it will at least double its liquidity support for the buybacks for 10 to 30-year-old bonds from $2 billion to at least $4 billion per operation, which will happen between 9 September and 4th November. Now lower yields, a weaker dollar and liquidity hope is boosting Bitcoin, crypto and gold amidst the inflation fears. The US President Donald Trump has hosted crypto and finance executives at the White House, urging Congress to pass a fair version of the Digital Asset Market Clarity Act and also signaling a push for clearer US market structure rules. Analysts say this is a strong precursor to get the Senate vote for the Clarity Act in mid-September. The US national debt has crossed the $40 trillion mark. Analysts say more inflows may happen to Bitcoin as there is still a stress in the bond market with elevated yields. The investors view soaring government borrowing as a trigger for currency devaluation as well as inflation. Now, this prompts them to consider digital assets. And lastly, the Blockchain Association has filed a letter in the support of Securities and Exchange Commission's proposal to scrap outdated regulation national market, which is called NMS rules, citing potential benefits from tokenization. Now, these actions are showing development in the crypto regulations in US, and more conversations are coming up when it comes to policy making. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely a massive spike coming in. Ethereum is up 18%, Bitcoin up 8%, XRP Solana also up more than 10%, and our entire support resistance range has changed. Now it's pushed to the 70,000 plus mark when it comes to the resistance levels for Bitcoin. Well, now time is there to look at the crypto strategy for the day. Here's what's there to keep in mind. The market outlook is showing strong bullish strength and good momentum. Remember, inflation hedge positioning is happening amidst a macro-driven move. Strong push coming in from Donald Trump for Clarity Act, and we can see more follow-up buying in both retail and ETFs. But going ahead, what's the important thing to watch would be US Treasury's next bond buyback operation. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Watching Ask Profit here at NDTV Profit. I'm Mahima Vacharani. Of course, this is a show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. And while you do that, a quick look as to how the markets are doing. The Nifty 50 right now is up by about 0.5%, hovering around the 24,200 levels. I mean, we were expecting this kind of move considering the way GIFT Nifty moved. The Bank Nifty also seeing gains of about 0.7% above the 57,600 levels now. So both the benchmarks are showing strong momentum. The broader end of spectrum is also equally doing well. The mid cap 150 is up by about 0.6%. The small cap 250 is up by about 0.8%. Let's also quickly pull up the sectoral heat map to see the sectoral picture and see as to what sectors are in action today. IT continues to be under green, up by about 1.3%. Metals is something that's also shining, up by about 1%, and you also have realty back in the green today. Just the oil and gas and defense are the two names that are under pressure and in the red, but not much of a losing ground there. Let's also quickly pull up the advanced decline ratio and then the BSE 500 to see as to what specific stocks are buzzing. You have a healthy ratio in the favor of the bulls, as you can see on the screen for your advanced decline ratio, and the BSE 500 quickly if we can to see as to what names are buzzing in trade today. You have something like an MMTC, Welspun Living for second day in a row. In fact, Welspun Living, Sri Renuka Sugar, etc. have been doing well, and on the flip side you have PFC, RC, AST, DM, Laopal, etc. that continue to be under pressure. But let's start digging into your stock related questions, and to answer them, of course, today we have with us in the studio Kush Bora, founder of kushbora.com, and we're also joined by Gaurang Shah, Senior Vice President at Geojit Financial Services, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. Kush, before quickly I start taking the questions, your quick take on the indices as well right now.
First, a very good morning, guys, and so good to be sharing the screen with Gaurang. I think it's been a while since we did that, so Gaurang, really excited for that. I think the markets are seeing a bit of a rebound, which was par for the course, 12 sessions of lower high formations. I think the upsides could be capped here, 24,300, 24,500. I know it seems like 300 points away, but then, we've seen a sluggish move. So even if it's a short covering move, it's just that I don't see too much of momentum building, but we'll take each day as it comes. So look for levels of 24,300 and 24,500 on the upside. Right now, I would take this as an opportunity to exit my longs. Fresh longs, we'll see, if the trend indeed changes, then you go out and create fresh longs. For now, this is just a rebound.
Okay, all right. So that's the view coming in on the benchmarks. Let's start digging into your queries. The first one that we have is from the IT space, Gaurang. We don't have the name of the specific stock, but your overall outlook on IT. What do you make of it right now, Gaurang, from a fundamental point of view? Any picks that you have in the space?
Sure, Mahima, thank you so much for having me on the show. Good morning to all your viewers, to you and my good friend Push as well. It's been quite some time since we shared the screen. It's really an honor and a pleasure to share the screen and do the show with you, Push. So a standard disclosure, Mahima, first of all, that all recommendations that I'll be sharing with you on your show this morning, they're part of our fundamental research team recommendation from a long-term point of view. Our company, Jyojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So, it was not long ago, a lot of people had written an obituary on the IT sector because of what's happening in terms of changes, innovations, new tools, platforms, and the run rate of these innovations is going to go up to a great extent as we go into the future. So even at that point of time, when everybody had written off IT saying that there is nothing left in the sector, we maintained our positive stance. We were convinced that the capability and the capacities of the IT companies will be required despite of the fact that these innovations are coming sooner rather than later. And along with that, Mahima, the first quarter numbers, which was expected to be a absolute drain out quarter for the IT, turned out to be a pleasant surprise because they delivered good set of numbers, in some cases better than what the street estimated. AI contribution, Mahima, has come in at a far higher level for some of the IT companies, and the verbatim given by the management is extremely strong in terms of future outlook. Having said that, I will name two names from small cap, mid cap, and large cap. This is purely from a long-term point of view with 1.5 2 year time horizon, and with the caveat that 10 years back, the kind of returns you used to get in IT, you will not get that kind of return, but you will definitely get return subject to provided you have analyzed your investment ideas and invested in it. So starting from the base of the pyramid, from the bottom, small cap, Science Limited and KPIT Tech. These are the two names in the small cap. In the mid cap universe, we have positive coverage on Coforge. I believe Persistent System also is appearing. I'm not too sure. And in the large cap universe, we have 3-4 names, but to name two of them, it would be TCS and HCL Tech.
Okay, so that's a comprehensive view coming in on the IT space. But let's take in the next question, which is coming from Ashwini, who's writing us from Chennai, asking about Kalyan Jewellers. She wants to know the short-term target for this one. Kush, I'll straight away come to you. What are the charts indicating? We've seen good gains. We've also seen a fall before that. So what do you make of the charts right now?
Yeah, I think the moves that we saw, in the last month or so, they largely actually rebound trades, if you ask me. Of course, they're backed by volume accumulation, so that's obviously a healthy sign. And the consolidation that you're seeing right now is on the back of very low volumes. So this uptrend could well be intact. My concern is, the volatility in the stock. It's far too high for my comfort. But, if you prefer it, you prefer it. On the upside, I think 625, that's the first level to watch for as resistance. And once that is taken out, the next one actually comes in significantly higher at about 690. So if you have positions, I wouldn't say exit or anything. You can very well hold and keep your stop losses at about 555 kind of levels. Once 625 is taken out, I think the stock could perhaps zoom again.
Next query is on Anantraj. Sunil Kumar from Vishakhapatnam has bought 100 shares of Anantraj for a price of around 650. He wants to know whether should he hold or exit. Any view on this, Gaurang?
Well, so we remain positive on the sector, Somit. Good morning to you as well. Unfortunately, we don't have any specific coverage on Anantraj, so I won't go into details of buy, sell, and hold. It's a decent performer, and I hope they will improve upon the earnings to deliver, which will reflect upon the stock price as well.
Quick take on the charts, Kush, for Anant Raj.
Very positive, just that the buy price is elevated and the stock's now approaching that. But yes, you should continue to hold. Stop loss at about 590, 600 levels.
Okay. In fact, we've got Mohan who's waiting by for quite a bit, calling us from Mysore. Mohan, very good morning to you. Thanks so much for waiting by. Go ahead, ask your question.
I just bought 4 shares of Centum Electronics, 2,160. Just want to long-term perspective. Can I add the shares?
Okay, got your question. And you're looking at this from a fundamental point of view? Hi, Mohan, can you hear me?
I just bought 4 shares of Centum Electronics. I just want to know whether can I buy this for long-term perspective. For further, I can add the shares for 1 year.
Okay, got it. For a year or so. Kush, I'll come to you on this one. Centum Electronics, are the charts positive enough?
They are. I wouldn't really read too much into the fall that you've seen in the last, 5-7 odd sessions, because the moves prior to that, remain very strong. So on the whole, I think the view on this one is positive. Deepish stop loss close to about 3,000, 3,050. But yes, if you want to add, you can consider adding at these levels also. So remain constructive on Centum Electronics from a medium to a long-term perspective.
Next query is coming in from Navin. It's on persistent system. He's currently holding around 80 shares, bought at a price of 287. What would you recommend Gaurang here for a long-term investor? Should he add more or continue to hold what he's having?
So I just mentioned about persistent systems being one of the coverages that we used to have so much some time back. But after the numbers, my fundamental team is currently reviewing it. So I mean, like I mentioned earlier, we did have a positive coverage, but currently since it is under review, I won't go into specifics because of compliance issues, buy, sell and hold. But yeah, we used to cover on the positive side persistent systems, and the number delivery is likely to improve as we go forward, and positive overall, as I mentioned, on the IT sector.
Okay, all right. The next one that we have is coming in, and this is on Samvardhana Motherson. Dr. Raja is asking this question. He's got around 276 shares of this company at the levels of 68. Impressive levels that he's gotten into, and wants to know from a long-term perspective whether he can continue to hold this one or sell and book out. Gaurang, what's your view?
Extremely positive. Again, a disclosure, Mahima, we do have a positive coverage. And I have always maintained one thing, and I think we've discussed this earlier also, that if you are positive on the auto sector, which we are extremely positive, there are various names, then you cannot be underweight on auto ancillary, tire manufacturing or battery manufacturing companies, because all these 3 ancillary sectors which are connected very closely to auto will also do well if auto has to do well. So if you're a long, and one more important thing, he got in at a very attractive level. I think 68, if I'm not mistaken,
68.
The investment level. You're deep in the money. Don't need the money, stay invested.
Right, the next is a caller query coming in from Delhi. Sanjay, you can go ahead and ask your query.
Yeah, morning. My query is regarding Bharat Ventures. I am having 250 shares at the rate of 582 rupees. It's a recent purchase before the results. And now after the results, it has been lagging over there and I'm in losses. Shall I quit over here and book losses and switch over to Niveli Lignite instead of Nava, or shall I stay over with the Nava Industry Limited?
And for long term?
No, till Diwali. I have funds required till Diwali.
Okay. Kush, what would be your view on Navbharat?
Yeah, so the stock's actually seen quite a bit of drawdown even after the result. It's actually seen a bit of a correction, but actually, if you see, the stock was actually at 730, 750 odd levels, and has been sliding since then. Now the thing is that at these levels, it's very close to support zones. Positive divergence is emerging, so there could be a rebound trade, and his buy price is not too far in that sense from the current price. So I would suggest if you can give yourself that much of a chance, wait up. And with a stop loss at about 535, continue to hold. There could be a rebound, so you'll at least have an opportunity to exit at or just above your cost.
All right, okay. So that's the view coming in on Nava Limited. But it's time for a rapid fire round. Gaurang and Kush, try to keep your answers as short as possible. The first one is for you, Kush. Between Grow and InfoEdge, which one is a better bet for the next 3 to 6 months? Deepak from Chennai says he has 2 lakhs to invest in. What should he do? Should he divide? Should he concentrate on one stock?
Yeah, so if you ask me from a momentum perspective, InfoEdge is a better bet. Grow's consolidating, so I would go with InfoEdge.
Okay.
The next query is on CSC. It's for you, Gaurang. Navin Chopra wants to know whether it's a good time to enter CESC.
Well, we used to cover CSC, Sumit, but since our target price was in place, we have not initiated any further coverage, but we are positive on the sector, that is power generation. Sumit, and if I have to give any alternative investment ideas, Tata Power, NTPC, JSW Energy and Torrent Power. We are positive on these things.
Okay, the next one is on Walk Hard. Yadav from Ajmer has invested 500 shares and wants to know the target price for this one in the near term. He's asking this to you, Kush. What's your view on Walk Hard?
You could well continue to hold this one. Place stop losses at about 1650, and on the way up, the stock does have a potential of going to 2050, and once that is taken on 2200 levels as well.
Next query is on Bellrise. It's for you, Kush. Shankar from Bangalore is holding around 500 shares. Wants to know whether should he continue to hold this. He's planning to buy 500 shares. Should he buy them or should he continue to wait?
Yeah, this was the weekly pick, hit the second target and then saw a very sharp fall in the last couple of days, right? And I appreciate this query. This is a good time to buy into Bellrise. Stop loss on this one should be close to 225.
Okay, Sterlite Tech is the other one. Our viewer has bought it at the levels of 621. Long-term view on this one. 2 years view is what he's seeking. Gaurang?
So once again, Sterlite Tech has been a flyer for the last 3 to 6 months, Mahima, and our targets are in place. Again, we have removed the coverage, so I won't go into specifics as far as buy, sell and all, but we used to cover Sterlite on the positive side.
Okay.
The next query is on Praj Industries. It's for you, Gaurang. Aparna is holding 571 shares, bought at a price of 544. Can he hold this for the next 2 years?
This is for me, Sumit?
Yeah, Gaurang, it's for you.
This is a disaster. I'm sorry to say this. I think Push will help me in this also. 700 plus kind of levels, and it has almost corrected 50% or more. There was a tailwind positive of the ethanol story, and this is the only company, Praj Industries, which enabled back-end kind of infrastructure. We used to cover, we have dropped the coverage because of underperformance and poor delivery, Sumit, on the numbers front as well. It would be better to look at alternative investment ideas. I'll leave it to Kush to give the rest of the inputs.
Any ideas, Kush?
Disaster is the right word. There's very near-term momentum, so levels of 375 up to 390 you can hold, so there'll be some reduction in loss, but otherwise exit. The first opportunity you get, you should exit.
Okay, all right. The next one is on Crisil. Shiva from Amravati is bought it at the levels of 4250. 3 months is the time horizon that he wants to continue to hold this. Kush, your view on the charts?
You can actually hold Crisil. I will actually look for a breakout above 4600, 4650 thereabouts, but the near-term trend is turning positive. So yes, hold. Place your stop losses near 4300.
Next query is on Walkart. It's for you, Kush. S. Yadav from Ajmer has invested 500 shares with a target price of 2150. That was given by you, I believe, Kush. What should he do? Should he continue to hold?
Yeah, I think we just discussed this. You can continue to hold Walkart. 1650 thereabouts is your stop loss, and those targets very much in play.
Okay, Inox India is the other one. Sunil Kumar from Bengaluru is holding 2,700 odd shares at the levels of 1,006. Wants to know if he can go ahead and add more at the current levels. Gaurang, any view?
We don't cover this one.
Okay, Kush, quick view on the charts.
You can add, it's consolidating, 1800 stop loss.
Okay, all right. So that brings us to the end of this rapid fire round and time to slip into a very, very short break. But on the other side, we'll be taking more queries. So do stay tuned in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha. Ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Your first move sets the day, and in markets, being early.
Welcome back. You're watching Ask Profit. For viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. By now, I think you all know the drill. But let's take the next question. I think Lipika is waiting by and calling us from Bengaluru. Lipika, very good morning to you. Go ahead, ask your question. Hi, Lipika. Can you hear me? Okay, I think we seem to have lost the caller, but I think her query is directed towards Dixon Tech. Not sure if it's a long-term query or a short one, but Kush, any view on the charts for Dixon Tech?
It's shaping up rather well. I mean, it's already had a good run, seen last 3 to 4 weeks of consolidation. It started that up move again. My concern is that, if it doesn't really build momentum from here, it'll face hurdles at about 15,000 odd level. So you can consider a long trade. 13,500 thereabouts is your stop loss. I actually prefer PG Electroplast in this space. And for that one, if you do enter 585, that should be your stop loss.
Okay, and any view fundamentally also, Gaurang?
I would definitely concur with Push as far as the investment idea is concerned. We are positive on this sector, Mahima. There are 3 names that feature. Dixon Technology, by the way, happens to be a very strong player, one of the largest player in terms of the capacity. And the policies of government is operating extremely well for the sector, whether it is to do with PLI But I think it was about last week, Mahima, that or this week, earlier this week, that the Honorable Minister again rolled out another additional support for the entire EMS sector. From importing from the rest of the world, India would be exporting to the rest of the world as we go into the future. But this Syntech happens to be a volatile stock. There are quite sharp moves. So from a long-term point of view, CG happens to be in our coverage as a disclosure, and along with that, we have PG Electroplast and Amber Enterprises. So these are the three names on the fundamental on which we are positive.
The next query is coming in from BS Rao from Hyderabad. He is holding Natco Pharma and Laurus Pharma. Out of this both, which one should he continue to hold? Which one should he sell? Gaurang, any view?
So we are positive on Natco Pharma from a long-term point of view, Sumit, and we believe that along with large-cap pharma companies, mid-cap pharma companies are also likely to perform extremely well, despite of the headwinds in terms of what comes out from the US in terms of tariff. But there is a larger world other than the US for the Indian pharma companies to cater. Domestic market, Sumit itself is a huge opportunity. Long-term, stay invested in Natco Pharma.
Okay, the next one that we have is coming on Railtel Corp. Ahmed from Delhi is holding 50 odd shares at the levels of 400 rupees and wants to know whether to buy more now, keep holding, or exit. Kush, on the charts?
Yeah, no, I think you're better off exiting. A major falling trend line resistance, rises being sold into, hasn't really got too much of a trigger. I would suggest it's a better idea to exit right now from Railtel.
Right. The next query is on Samman Capital, and it's for you, Kush. Gauri Shankar wants to know technical levels to add Samman Capital. Anything that you could suggest?
I do have this stock on my radar from a positive lens. It's just that it's not converted into a call because of the kind of fall that it's seen. I will take this consolidation as a positive sign right now. So if you want to enter, you can enter at these levels, right? It's starting to see some accumulation. So your stop losses would be close to about 144, 143 levels. But it's more of a positional bet. Momentum starting to build up. Opposed to this, I like LTF a little bit more. A stop loss on this one would be close to 300 or maybe just under. So both positive, slight preference towards LTF.
Okay, all right. The next one that we have is coming in, and this is on Bajaj Housing Finance. Avi is holding, I hope I'm reading this correctly, 90,000 shares at the levels of 91.8 and wants to know as to what could be the target price for this one in a year or so. It's come down to 86, Kush. Because the quantity is very large, what would you recommend Avi to do?
The buy price you said was what, 91?
91.8, yeah.
Fair enough. I think the good thing is that the buy price is not too high because the stock's actually fallen from grace, right? About what, 150 plus odd levels?
Yeah.
Right now, it's starting to see consolidation. Some uptick in momentum indicators from a weekly to a daily standpoint as well. So from a medium-term perspective, also starting to shape up well. So you could continue to hold. This is a good consolidation going on for the last 5-6 months in this one. So continue to hold. Keep your stop losses close to the 80 mark. And you could hold. Momentum building will perhaps take time, but a hold at with a stop loss of 80.
Well, next is a caller query coming in from Pune. Aniket, you can go ahead and ask your query.
Hello to everyone. So I have a query on Shriji Shipping. I have already bought some stocks, 25 stocks at the price of 244.60. So I just wanted to know both fundamental and technical point of view. Can I hold this for long term and add more if possible?
Okay, all right, okay. So that's the query on Shriji Shipping. Kush, any view on the charts on this one? What do you make of? I mean, it's a small company per se, but what are the charts indicating?
I do. In fact, I have been tracking this closely for a while. It's just that the momentum has been so sharp, something like Cupid, right? That's why it didn't turn into a call. But kudos to you, Aniket, for buying this at the right price, holding this through the journey. So absolutely fantastically well done on this one. So right now what you're seeing is this profit booking. I would be inclined to buy more of this, again close to 600 odd levels. But remember, because it's run up so much, there could be perhaps days when you will see sharp drawdowns on this one. So keep your trailing stop losses in place close to the 575 levels and very much continue to hold.
Okay, all right. The next one, I think Murli is calling us from Hyderabad. Murli, a very good morning to you. Go ahead, ask your question.
Yeah, good morning. Good morning to all the panelists. My question is on ITD Cements. Now it is Sem India project. I have 10 shares taken at 562. So it was been doing some lower circuits for a couple of weeks earlier. Now it is consolidating. So should I hold it on for another 2 years?
Okay, got it. Murli, I got your question, and I believe that you want a fundamental answer for this one. Gaurang, any view on this particular counter? What do you make of the earnings as well as fundamentally 2 years is a good time horizon to continue to hold?
US is definitely good time horizon, Mahima, but Mr. Murli, you have doubled your investments. Where the stock is trading at close to about 1280. And the levels that you bought, if I'm not mistaken, was 560 to 580 odd levels. Now, the company is very strong. We used to cover it. Our targets are in place. We've dropped the coverage. Currently, we don't have coverage on Cementia or ITD cementation as it was known earlier. Execution of order book will definitely trigger earnings visibility in terms of top line and bottom line, Mahima. And the company seems to have a decent order book. I won't be able to add much since we don't have any further fundamental coverage.
Got it. Okay. So that's the view coming in on. Kush, any quick technical take also, because this has been one of those counters that has done very well as compared to peers as well.
Interestingly, I see themes of the day play out on Ask Profit. Trust me, there are days when people buy and they've been in losses for a while. Today, I think is a day when when the viewers have bought momentum stocks at very low levels, and so happy to say that they've been riding these moves. Shriji is a case in point. So is Chem India. So kudos to you guys. Fantastic job on this one. I still remain very constructive on Chem India. Very good moves, profit booking in the last few sessions. I think you should continue holding on to this 2 years good time frame. I would suggest a stop loss at about 1100, 1050 odd levels. But yeah, after this kind of a consolidation, the stock could gradually start its up move again.
Okay, all right. So that's the view coming on Chem India. The next one is also an interesting one because Niket from Bengaluru says that he's got two counters, ITC and HPL Engineering. He says that both of these are in continuous downtrend and wants to know from a slightly long-term perspective of 2 years, what should he do? Should he continue to hold these or book out? Gaurang, I'll come to you. HPL Engineering and ITC are the two counters that he's talking about. ITC, in fact, did hit the 52. Yeah, go ahead.
I'll keep my comments specific to ITC. This has been a troublemaker for a lot of investors. Patience have been tested and tried, and of course, the kind of numbers that were delivered. I think it is again, stretching itself downwards towards the lows that it has made in the past. However, as a disclosure, we remain positive on ITC. 313 odd is the target from a long-term point of view purely. Government's focus, and there is a bit, again, there has been a lot of news or noise on the street of other than ITC hotels being hived off and listed as a separate entity. There's a lot of noise on the street for other businesses to be hived off and listed as a separate entity, which may unlock value. Of course, that only time will tell, and I'll leave it to the wisdom and fine sense of management as and when they want to do it. Long term, continue to hold on if you got in at elevated level. If Kush can help me with lower levels which can be averaged, it would be really great.
Right, the next query is coming in from Gujarat. नितिन, अब आपका क्वेरी पूछ सकते हैं।
तो मेरे पास 500 क्वांटिटी है डीसीबी बैंक की जो मैंने 188 पे ली हुई है। तो व्यू तो मेरा शॉर्ट टर्म का है, बट मैं जानना चाहता हूँ कंपनी थोड़ी मुझे रीजनेबल लग रही है, तो मैं इसको लॉन्ग टर्म के लिए भी होल्ड कर सकता हूँ क्या?
ठीक है, ठीक है। Gaurang, do you think Nitin should continue to hold DCB Bank from a long-term perspective?
If you allow me to answer this in Hindi, Somit?
Yeah,
for the
obviously.
For you. Great, thank you. So, नितिन भाई देखिए, DCB बैंक का एक इतिहास रहा है। काफी लंबे समय का इतिहास ये था कि नतीजों के आधार पर बहुत ही नकारात्मक परिस्थिति उभर करके आई थी और वो एक बहुत बड़ा कारण था जिसके वजह से ये एक निचले स्तर पर रहा करता था। काफी सालों पहले हमारी कवरेज थी, लेकिन नतीजे खराब होने के कारण और कुछ खराब खबरें आने के कारण हमने हमारी कवरेज निकाल दी है। आपने 188 पे लिया है, मौजूदा स्तर 179, 190 के आसपास। नितिन भाई, अगर आपको लंबी अवधि के लिए निवेश करना है तो मैं विकल्प दूंगा। डीसीबी बैंक कवरेज में नहीं, इसलिए विशेष रूप में टिप्पणी नहीं करूंगा। और एक बात है, नतीजों को लेकर के असमंजस परिस्थिति है। कुछ तिमाहियों में बहुत ही अच्छे नतीजे आते हैं और कुछ तिमाही में उतने ही खराब नतीजे आते हैं, तो संतुलन बिल्कुल बिगड़ जाता है। तो अगर विकल्प के रूप में आपको 2 साल के लिए निवेश करना है तो निजी क्षेत्र की दो बैंक का नाम मैं आपका देता हूं, छोटी बैंक या छोटी से मझौली बैंक में तुलना या गिनती होती है इसकी, फेडरल बैंक और सिटी यूनियन बैंक। अगर आप तुलना भी करें इन दोनों बैंकों की डीसीबी बैंक के साथ, तो मार्केट कैपिटलाइजेशन पर, नतीजों के आधार पर और कामकाज के आधार पर ये दोनों बैंक ज्यादा बेहतर बैंक है डीसीबी बैंक की तुलना में।
Okay, all right. Kush has something to add, I believe.
I am thankful for Nitin. And I'm thankful to Somit. They gave Gaurang a chance to talk in Hindi. It is music to anyone's ears, who loves Hindi. I was actually hoping and waiting that, he gets a chance to speak in Hindi. Gaurang, beautiful. It's so good to hear you speak in Hindi. Of course, your command in English is also, spectacular. But to listen to you in Hindi is music to my ears.
I'd agree that. I mean, I'd second that as well, Gaurang. But let's take the next question as well. Genius Power is the counter that Sabita from Hyderabad wants to know about. She's been holding it since the levels of 305 is what she's saying. So it's come up a bit from those levels. It's trading 9% higher today. What should be the short-term target on this one is what she wants to know. Kush, Genius Power, what's the outlook?
Fantastic entry point, 305 or thereabouts you said, right? So that's a good entry point, bought it in consolidation. So that's a good entry point. I would suggest a stop loss now of 305, which is your buying price. So that's a trailing stop loss. On the way up, look for targets of about 355. And once that is taken out, 380 also very much on the cards. Momentum starting to build now. Good buy, continue to hold. Trailing stop loss at 305.
The next query is on Electro Steel. Virupaksha is holding around 1,000 shares, bought at a price of 95. Any view on this, Kush?
Not doing much. If you want to give yourself a chance, hold with a stop loss of 68, 69. But I would exit at the rise, towards, let's say, 77 and 80 levels thereabout. Hasn't got too much going for it.
Okay, the next one is, not a counter that we talk about a lot of times. It's on all-time plastics. Nikhil from Bangalore is holding 50 odd shares at the levels of 385. Wants to know whether to hold or exit, and he's asking this query to you, Kush. What would you recommend seeing the charts?
Okay, so very honestly, not a stock that I have tracked very closely. I haven't seen this from the preliminary glance that I have. It's in a serious downturn. I would exit at the current level also.
Okay, all right. The next one, I think we've got a caller waiting by, if I'm not wrong. Karishma is, I think, calling us from Mumbai. A very good morning to you. I hope I've pronounced your name correctly. Go ahead, ask your question.
Yeah, Mahima. Very good morning to all of you.
Yeah.
Actually, this query is to Kushbura, sir. So what is the right stock to pick among the Shriram Finance, Bajaj Finance and PNB Housing, both short-term and long-term?
Okay. Got your question. Kush, between the three, where is the chart looking more attractive? Which one would your pick be?
First, what a lovely name, and I like the spelling. It could be Charisma and Karishma both, right? So, great, and thank you for directing the query towards me. Look, from a long-term perspective, I like Bajaj Finance. It had its share of up and downs, and it's starting to move higher. But you have to be patient with that. So you can buy Bajaj Housing Finance. Stop loss is near 1,025, odd levels. But if you want to go for momentum, and if you heard me in the morning show, PNB Housing is the stock that you should look for. We gave a buy call on this for immediate targets of 1,200, 1,245 thereabouts. So from a momentum perspective, I would suggest a buy call on PNB Housing Finance. Stop loss at about 1125, 1130 levels. And from a positional standpoint, Bajaj Finance.
Okay, all right. Next one is also in the BFSI space, because Sandeep wants to know about Axis Bank and wants to know if this can go to the levels of 1310 to 1320 in the next 15 days. So, very short-term targets that he's looking at, Kush. Is that possible on the charts? It's trading at around 1250 right now.
देखो possible तो कुछ भी है. Probable अगर पूछते तो मैं कहता शायद थोड़ा सा unlikely है. However, from the large cap space, this stock is actually now starting to show some positive traction. So if you ask me whether you should buy, sell or hold right now, I would suggest yes, you can hold. There is a double bottom formation in place at about 1210, so that should be your stop loss. If momentum picks up, if the macros improve, then there is every possibility that this can go to 1310. If not, at least the trend is starting to turn positive for Axis Bank, and I'll take heart from that fact. So hold, stop loss at 1210.
Right, the next query is coming in on MRPL. It's from Sushila Billeri. She is holding 5,227 shares, bought a price of 179. Any short-term targets on this, Kush?
Okay, so the pack is doing well, the stock has also done well, but it's also had its share of volatility. I would suggest at or close to your buy price, it's actually pretty much there. But maybe if you have some profits, 180 to 185 levels, I think you should exit this one. Chennai Petro is, by the way, much better placed. So for MRPL, you can hold, but I would suggest an early exit, in a limited profit also. And for stop losses, 167. That's your level where you should keep your stop loss in MRPL.
Okay, all right. The next one that we have is coming in on, this is from Sanskar Agrawal, who's writing us from Jabalpur, asking about SBI funds, and he wants to know if this is the right time to enter. Would you recommend that, Gaurang?
Sorry, which is the stock?
SBI funds. Yes.
This is a difficult one. We are positive on the entire Indian capital market related theme, Mahima, from a long-term point of view. We did come out with a subscribe note for the IPO for this particular company. And if you are in for the long term, you can definitely have a look at it and possibly invest in a phased out manner, Mahima. Don't go and put all your money at one time. And if I'm not mistaken, the floor for SBI funds was 574. Correct me if I'm wrong. It is below the floor price. Currently, it is at a discount. From a 2-year plus kind of time horizon, I will keep the IP note as the base of my recommendation and advise you to buy in a phased out manner for a long-term point of view.
Yes, you are right, Gaurang. It was, the upper end was at 574 and it's trading below that. So, spot on that one. But so that's the view coming in on SBI funds, of course. The next one that we have is on IDFC First Bank. Kalpesh is holding 1,000 odd shares at the levels of 85 rupees and wants to know as to what should be the next course of action for him on this one. Kush, what would you recommend on the charts?
Yeah, so this is not my preferred pick in the space. Let me start with that. But the near-term moves on this one have been very encouraging. There'll be a breakout above the 86, 87 mark where it's trading currently. So because there is a near-term momentum and the buy price is not too far off, I would suggest you can continue to hold this. Place your stop loss at 82 levels.
Okay, all right. So that's the take coming in on IDFC First Bank. But time for a rapid fire round. Try to keep your answers as short as possible. The first one is on Amara Raja Battery. Hari from Bengaluru has bought it at the levels of 892. 300 shares is what he's holding. Wants to know, because it's correcting again, should he continue to hold this one or not? Kush?
You can continue to hold. Stop loss at 915.
The next query is on GE Shipping. It's for you, Gaurang. Ram from Hyderabad is holding 300 shares, bought at a price of 1,540. Should he continue to hold, sell or book losses?
Sector is good. Long-term prospect is extremely positive on fallback of what is happening in the Middle East. Unfortunately, no coverage, so no specific comments.
Okay. CMS Info Systems is the other one. Sampath Balaji from Chennai is holding 200 shares at the levels of 235. Long-term view on this one, Gaurang?
I'm sorry, which was the stock?
CMS Info Systems.
We don't cover this, sorry.
Kush, any view on the charts?
Yeah, I'd suggest exit.
Next query is on E2E Networks. It's for you, Kush. Mahalakshmi from Hyderabad is holding 325 shares, bought at a price of 425. Should she continue to hold this counter or exit?
Great buy price. Continue to hold. Stop loss at about 595, 590 levels.
Okay. KC International is the other one. Rituraj from Bengaluru wants a 6 months view on this one. He's holding 130 shares, bought at the levels of 556. Kush?
A difficult one, but continue to hold. Stop loss at 59, exit at rebounds.
The next query is on Supreme Industries. It's for you, Gaurang. Lalitha from Bangalore is holding 10 shares, bought at a price of 3,565. Currently sitting on a profit. Should she book profits or continue to hold?
Continue to hold. Target in excess of 4,000 plus from a long-term point of view.
Okay, the next one is on PFC. Our viewer Subrata Mukherjee has bought it from a long-term perspective at 390. Continue to hold, maybe average at the current levels, Gaurang?
Well, so there is a merger that is likely to happen, as we know, Mahima, PFC, RSC. And according to the views on the street, the merged entity will have a very strong balance sheet. No specific comments since we don't have coverage on PFC.
The next query is on Regal Resources. It's for you, Kush. Nikat from Bangalore is holding 100 shares, bought at a price of 137. Should she hold or sell?
Hold, momentum building up, stop loss 89.
Okay, the next one's on BSC. Siva from Amravati has bought 300 shares at the levels of 3,500. 3 months view on this one, Kush?
There is a falling channel resistance, but because there is a rebound as well, I would suggest a hold on this one. Stop loss 3,200.
Next query is on Intellect Design Arena. Naman from Indore is and it's for you, Gaurang. Naman from Indore is holding 757 shares. 709 shares bought at a price of 757. Should he continue to hold or exit?
Well, a decent company on the earnings also. Outlook is very strong from a long-term point of view, but unfortunately don't have coverage from it, so no specifics. Buy, sell, hold over here.
Okay, the next one is on Ujjivan Small Finance Bank. Shashidhar Reddy wants to know if this is the right entry price to enter into this counter. Kush?
I would suggest wait up on the entry. Above 73, 73.5, there'll be a breakout, and then right now it's consolidating.
The next query is on BHEL. It's for you, Gaurang. Guru from Hyderabad is currently holding 200 shares bought at a price of 249. Should he continue to hold or sell?
BHEL continue to hold from a long-term point of view. Sumit, the earnings were a great turnaround after a very long period of time.
Okay,
and the commentary and the verbatim is that the execution will continue. So hold for long.
Okay. The next one is from Kaushik, who's writing us from Vadodara, asking about Reliance. It's got 50 shares at the levels of 1392. Good hold, Gaurang?
Definitely a good hold. I think with the kind of lineup that the company has, we have a positive coverage. Hold for long term.
The next query is on Solar Industries. It's for you, Kush. Murli from Hyderabad is holding a couple of shares bought at a price of 4,800. Should he continue to hold or exit?
Wow, no. You can continue to hold. Stop loss slightly deepish, close to 17,500.
Okay, all right. So that is the end of this rapid fire round as well. We try to take as many questions as possible. Kush and Gaurang, thank you so much, as always, for taking out the time and helping us answer all those queries. With that, viewers, completely out of time on this edition of Ask Profit, but do stay tuned in. KYC is coming up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanna, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you interesting companies, newly listed companies, new themes, and what's the alpha coming in Dalal Street. I'm getting you all these interesting companies exclusively in KYC. But today I've got a very interesting company for you. But before that, try to understand what hint I'm going to be giving. It's India's largest non-ferrous metal recycler. Also, it's backed by Sunil Singhania promoted entity Abacus. Another hint I would like to give you, it was recently listed. It was listed on June 10th, 2026. Just been 2.5 to 3 months. And 80% recycling comes just from aluminium segment. Try to guess the company, and there's a very important saying, one man's, you could say, waste is another man's treasure. And that's why this is an interesting company which we have come in, and that is the CMR Green Tech. Now we'll try to understand the angle of why are we calling this company. Of course, this is the company coming first time in KYC after its listing. So we'll try to understand what's the business model like for an aluminium recycler and what's the moat here. Is there any moat here, or anybody can enter this industry? We'll try to understand that from perspective of the company, the current pricing trends and hedging. How do they do that for aluminium? Because that's a raw material also coming in for them. What benefits come especially from the ICE to EV transition which is happening? What kind of elements are required, and where does the company actually put itself? The outlook for the JVs, they're having a lot of JVs with Japanese people. That means their quality levels are on the higher side. They're not a run-of-the-mill company. Also, another question I'll try to understand is the margin guidance. Should we look at margin guidance or should we look at EBITDA per kg? We try to judge how to value this company, and that is why this ratio is more important. Also, we'll try to understand the outlook for the non-aluminium business. Right now, it's around 20%. How do they grow it? Is there any expansion at play? And speaking of that, we'll understand where the greenfield numbers are looking and how the brownfield expansion is actually shaping up. Interesting questions, interesting company. But let's try to understand what does this company actually do. And this, I think, for the first time, we are getting, this company, especially in the aluminium segment. We had other companies also in KYC, but I think this is the second or third company in KYC in this theme. Now, this is India's largest non-ferrous metal recycler and largely the market leader in secondary aluminium. There is a primary market as well as secondary aluminium market. They have 13 strategically located facilities where they gather most of the waste. That waste, of course, gets processed. Installed capacity is roughly 6 lakh tons annually, and they're targeting 7 lakh at the end of FY27. backed by Abacus Group by Sunil Singhania, promoted at entity. So of course Street is excited about this counter. Also, let's talk about the global scrap sourcing. So there are a lot of yards. From there they do a scrap sourcing, and from there they process, and then they give out the final products. 3 strategic JVs with large Japanese players, and when you have a JV with a Japanese players, that means the quality standards are top notch of global standards. 74% scrap comes from international markets. You can see so such a huge market India has become for this recycling, and that's why the up move is coming in. This is a very interesting photo I would like to point out. You know, when you have this large aluminium place and a lot of processing happens, a lot of waste happens. So this is how the waste actually looks, and this waste looks for aluminium, copper and most of the metals. Also, they're doing a 200 crore FY27 capex as well. Going ahead, there are other couple of plans in the expansion, the greenfield expansion projects which are happening at the 2 places, and also brownfield expansion is undertaken, especially in Tirupati and other locations as well. So when you suppress the overall, you could say, the waste, this is how it looks in small billets of forms. So these photos are very much important for your understanding. The installed recycling capacity they're targeting 7 lakh tons per annum by end of FY27. But let's move on. Apart from the expansion plans, the revenue breakup, right now it's still an aluminium focused player. 19% comes from other segments like zinc, steel. Remember, aluminium as a waste keeps on coming. There's a regular movement of this waste is there, and because of that we are seeing a major exposure coming in from aluminium because we use it on our everyday life. Also, let's move on and understand more details about who are the key customers. We have Hindalco, Jindal Stainless, Maruti Suzuki. I'd explain you that they have exposure to the tier 1 auto OEM players, and that is why when you speak about it, we have Hyundai also, as well as, you know, Gabriel India and Endurance Tech. These are the companies which are the key customer profiles for the company. Also, the recycling story of India, and that is where we feel like one man's waste is another man's treasure. The minimum recycling content that's expected to go up by a lot of products in India itself. There's of course government push also, the PLI scheme. Look at that amount, that's almost 2 lakh crore coming in. And also we try to understand the aluminium consumption that is expected to double up over the next decade. So the company will be in the middle of important timeline, and the recycling market that's also expected to go up by almost 11% CAGR by FY30. There is a shortage of resources, and that's why recycling comes in. What make work for the company? Strong operational numbers coming in, and of course the Q1 numbers are also strong. The valuations are cheaper than the peers. I'm going to get you those list of those companies and see how the valuations are stacking up. D-Street's chosen theme right now, there is a lot of flavor, and anything in recycling with a good moat is getting a premium value. Government incentives is also pushing this up. And one more point I would like to say is the JVs with Japanese companies, tier 1 OEM relations. So this matters a lot, especially when you have a global sourcing partners coming from abroad. But what may not work for the company? At KYC, we always give you the balanced view and opinions. The lack of analyst coverage is there, it's okay. It's recently listed, so we're going to give it more time. Higher dependence might be there from global suppliers on the overall risk of outsourcing or getting the raw material for the company. Volatility in aluminium pricing. We need to understand how does the company hedge. We'll try to get that from the management, and the environmental risk also comes in case some issues happen. Also, the working capital and inventory risk that comes in this model, and that impacts the cash flows, and I'm going to show you those numbers also. So this is the entire picture for CMR Green, what's good, what's not. But let's move on and understand the KYC ratings where we judge this company. Of course, I have tweaked it a bit because it's fair to judge the company on their operational parameters rather than return ratios right now. And largely income statement, balance sheet, cash flow remains the same. But take things with a pinch of salt. It's hardly been 2.5-3 months of history when it comes to the shareholding and street cred, where we try to understand how the company has performed, what's the shareholding looking like, and of course the valuation. This is very much important because I'm going to introduce you some new company names also, which you can track in this recycling theme and understand how the industry valuation dynamics is working. And lastly is the outlook. Is it the good story or is there some hiccups in the short term? These are the key questions to be asked. But first one, let's understand income statement, how things are panning out. Largely the margins isn't so much in this kind of a business model because this is how it is. Largely the top line and the EBITDA number, that's something you should be watching out for. And the CAGR numbers have been strong. The company came out with its Q1 numbers also. That also is showing strength. But a good momentum is coming as company moves on to more value-added products, and maybe from the commoditized space of aluminium, maybe the non-commoditized space also comes in. There are other business products also. We'll try to understand that, but as of now, the margin trajectory is also very strong. Q1 numbers were also good, and that's what I have actually got this year. So income statement is strong, positive, but balance sheet largely nothing much happening here. Actually, the borrowings have come off. Remember, the company came out with its IPO, so a little bit of debt reduction is there. So we'll try to understand more when is the further debt reduction plans coming in. But net, it's a neutral rating right now for the balance sheet. Nothing much to look at here. But the concern for me is on the inventory level. At times the working capital gets stretched, and that concern comes in the cash flow segment. Look at this amount. This is the way the concern starts coming in. Is it an accounting adjustment? Is it an inventory adjustment? We'll try to understand when we understand the business model. But as of now, a little bit of concern comes in the cash flow segment, and that is why I have given this a thumbs down. But on the other hand, the operational parameters, have a look at that. Three important operational parameters I'm going to judge the company in. EBITDA per kg, this is one of the most important thing to check the profitability of this industry. There is fixed asset turnover. It's nothing but how much times the company starts doing sales as compared to the machines or the fixed assets which they put, and the sales volume, which is of course by definition what it's there, and that is where we're seeing a good momentum happening. That's rising up 9x to 11x. EBITDA per kg has gone up to 461. Is it because of the rise of the aluminium prices, or is there something more to it? We'll try to understand that. And the sales volume has a significant growth. FY 24-25 numbers were decent, but a good up move coming in FY 26. So this is a structural change, and as of now I'm going to give this a strong thumbs up as well when it comes to the operational parameters. Apart from this, let's look at the shareholding. Largely we just have for 1 quarter, so nothing much to judge here. Still, institutions are having 8% stake in the company, of course backed by Ace Investor, also from Abacus Group, Sunil Singhania. So let's keep this a neutral rating when it comes to the shareholding. But let's understand how much returns have come in and take things with a pinch of salt, and we are going to keep a neutral rating here. There was a good listing pop from IPO price. The stock is still 11%, but a little bit of sell-off has happened. From the listing, the stock is down 23%, and of course there would be overhang of lock-in expiry as well. But does that make it cheap? And yes, it does. Interesting names I've got: Gravita India, we have got Jain Resource Cycling, and even Pondy Oxide. This is the nearest competitors we can have in the industry for CMR Green, and most of them, their valuations are on the higher side, ranging between 29 to 36 times. But look at the valuations for the company right now. It is quite attractive, and of course this is a new industry. Dalal Seat is understanding it, but a lot of interest, so premium is added to it. So we try to understand whether this premium sustains or not for the industry, but as of now there's a discount happening, so I'm going to give this a strong thumbs up when it comes to the valuations. Outlook, mix shift is coming towards the billets, sheet ingots and UBC recycling. These are the high margin segments, value addition as you call it, and also the company has developed a certain kind of a moat. Technological upgrades is happening, and we'll try to understand what are these and by when this can benefit these companies. Remember, there's a JV with the Japanese companies. That angle always keep in your head, that a strong IP gets transferred. Increasing domestic scrap procurement, this becomes cheaper also, and India is also producing a lot of waste in the aluminium segment and even other segments as well. But remember, the elevated aluminium prices augur well in this short term. That's what currently is benefiting the company as well. So outlook, overall, it is a strong thumbs up. But let's do a revision of sorts of how this business model works, how the company works, what are the KYC ratings we are going to give for CMR Green. Income statement has been pretty strong, but my concerns are on the working capital and the cash flows. That's why I have given this a thumbs down. Operationally, they have done well across most of the parameters. Let's give it more time when we judge shareholding and StreetKit, but valuations, it is the cheapest amongst the recyclers, and the outlook is also very strong when it in the long term. So overall, KYC rating is 5.5 out of 8 we have given for CMR Green. But we'll try to understand more. A lot of questions, queries are there, and the company is coming for the first time at NDTV Profits KYC. So CMR Green Tech's management will be there. Raghav Agarwal, the executive director of the company, will be joining us. He is almost having a decade of experience in aluminum alloys and the recycling industries, and the business head is CMR NL Eco Tirupati, also the associate member at ICI as well. So it'll be pretty interesting to have a chat with our guest, and we'll just take a short break and then we'll be right back.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop.
Hello and welcome back to Noya Company. We are joined in by Raghav Agarwal, Executive Director at CMR Green Technology. Good afternoon, Raghav. Always a pleasure to have you with us at NDTV Profit. And this is the first time your company is making a debut at KYC of NDTV Profit. I wanted to understand, Raghav, what's the exact business model? You are an aluminium recycler, but there is a moat to it. There is some barrier to the entry as per my analysis. Just wanted to understand what's your actual business and what's the moat?
Right. So, thank you for having me. Happy to be here. We are essentially a non-ferrous metal recycling company, the largest company in the country for installed capacity, and we are also amongst the largest in the world. As part of the non-ferrous recycling process, what we do is that we first segregate, we buy mixed scrap, we first segregate the aluminium and the other metals being copper, zinc, brass, lead, magnesium, everything. And then we melt the aluminium and we sell it to the auto industry primarily. The moat that you talk about is our liquid metal supplies, where we save a solidification process for ourselves and a remelting process for our customers. And we are online with our customers at all time. We're supplying them molten metal directly from our plant to their plant, which kind of brings in a strong lock-in between our supplies and the customer's demand, and keeps us very tightly intertwined with each other. So that is what has helped us to grow. That is what has helped us to decommoditize our business, and has kept us at a CAGR of about 23% since inception.
What I'm seeing, the margins are also getting upped over here. But there is a current pricing trends also. There's so much volatility happening in the prices across the metal segment. How do you hedge this? How does things work? If you could just explain us like a business cycle.
Right. So we have a 90 to 100 day cycle. We price in our inventory today because we buy today, and then that material, since it is mostly imported, it comes in on, let's say, day 90 to day 100. What we typically get from our customer is a cost pass through. So our customer typically gives us the previous month average in terms of our pricing. So part of the price risk exposure is taken care of by our customers, and the remaining is what we hedge. We hedge the prices on the LME. We use the primary aluminum contract because there is which is there for aluminum alloy is very illiquid, so we hedge ourselves with the primary aluminum contract on the LME.
Raghav, just a little bit more on the cash flows and the inventory segment. On prima facie, it looks like there is a good risk involved in the cash flows as well, which hits your working capital ratios also. Wanted to understand how does this work in your industry and what are you doing to mitigate that?
So, if you look at our inventory levels, then in terms of number of days and in terms of volumes, it has been pretty okay. In terms of number of days, our inventory has been more or less the same. It's been about 40 to 45 days of inventory that we carry in our books. So that has remained constant. But the reason for the negative cash flow is the rise of prices. So typically in the the working capital requirement increases, and which since we earn relatively constant EBITDA fixed price on an EBITDA per kg level, which is why there you see that the ROI declines because of the increased working capital requirement.
That's a very interesting way of putting it, Raghav. I'm unconvinced also the way you explained, and I think maybe Dalal Street will take time a little bit to understand your model also, but very nicely we have put in KYC, and that's what we are known for. But the capacity expansion plans and the progress, how things are happening. I know there is a brownfield at play, there is a greenfield at play, and you're also heading the Tirupur segment as well. So just give us the flavor of how things are panning out.
Right. So first on the Tirupati side, so Tirupati has been a slight diversification for us. Historically, our company has been a cast alloy recycling company. Now, with the expansion in Tirupati, we've entered into wrought aluminum recycling, which which increases or doubles up our serviceable market for recycled aluminum. The main demand for the Tirupati plant basically comes in from the building and construction industry and also the solar industry, both of which have strong tailwinds for growth. So the Tirupati expansion, we are very excited about it, about that business that we are getting into. And similarly, we've also put up a plant for UBC recycling in Odisha, where we scrap and then we give back again liquid metal to a big primary producer of the country. On the capex front, so this year we expect to spend about 200 crores of capex. About 100 odd of which is going to go into greenfield projects. We're putting up two new facilities, one in Chennai, one in Shoolagiri in Tamil Nadu and the other in Bawal. So these two plants are expected to come up to production by the end of this financial year. And apart from that, we're also expanding. We're doing brownfield expansions in our existing plants because the automotive sector is growing fast. And what is also happening is that with the electric vehicles, the aluminum intensity in vehicles is increasing. We hear that the requirement of aluminum in electric vehicles is 3 times that the ICE vehicles. So we are experiencing good demand increase because of which we're taking up expansions both greenfield and brownfield.
Right, of course, auto demand and that ICE to EV transition is happening, but there's a lot of JVs also involved, especially with the Japanese players. And when you have that, the quality standards has to be world class. So we wanted to understand, might that be an edge against the peers? And if yes, what's happening with these JVs with the Japanese folks?
So we've had 2 joint ventures in the cast aluminum recycling space since 2012. These JVs have been very beneficial for us. They've brought in technology. We learned the concept of over-the-road transfer of liquid metal from these Japanese joint ventures. And also with the Japanese, we got strong customer lock-ins with the Japanese customers. So these both of these joint ventures have been in existence since 2012 and are now running with 3 plants each. And on the wrought alloy recycling also, we have a plant now with the Tirupati plant has a joint venture partner in Nippon Light Metal. Nippon Light Metal is a major downstream aluminium company in Japan, and they have a big demand for recycled aluminium. So 20% of our supplies from the Tirupati plant are also being exported to Japan as part of the JV agreement. And one more thing that I would want to highlight is that we have these 3 JVs, but we don't pay any royalties or technical fees to any of them.
That's a very important point, that you don't pay royalties. That's always a question when we have people from Japan working with Indian companies. But what's the target for the EBITDA per kg? Because I think that's the best parameter to track your company's profit, rather than the usual ones. You mentioned that in the con calls. I'm just following that. What targets we are expecting? Can we hit that 500, 600, 700 mark in the next couple of years?
Right. So one thing that I was looking at what you were showing before I joined in. So I think the figure that you were showing there was the overall absolute EBITDA value. The EBITDA per kg in the last quarter for us was 12.5 rupees a kg. And we've given a guidance to maintain our EBITDA per kg at about 12 rupees a kg for this financial year. Though we do hope to increase it, but at the moment the guidance stands at 12 for the EBITDA per kg.
What is this green billets? Because I just saw your profile and there was an interesting name, green billets. Even though it might be small, but I'm sure you're heading this. So you can give us a flavor of it. What is it?
So green billet is basically a low carbon billet. Typically, if a primary producer makes a billet that has a carbon impact of 14 to 16 tons per ton of production, whereas a green billet, one that CMR NLM Eco makes, has a carbon footprint of 1.5 tons per ton. So there is a drastic reduction in the carbon emission that we are able to achieve by using 98% plus post-consumer scrap in the billet that we are making, while maintaining the same quality standards at par with the primary billet. So that is where the green comes in.
Raghav, just a last short question, because so much of that is happening and I travel across the country visiting recycling companies and precision manufacturing companies who make a lot of these waste products. There is a conversation of carbon credits, which is literally a very nascent stage in India. I'm sure you must be having tons of it. Will that be useful globally when you expand?
So yes, we do. So we generate carbon credits on our liquid metal supplies. 50% of our aluminium sales are in the form of liquid metal, which is where we get these carbon credits. And carbon credits, we have accumulated about 272,000 carbon credits at the moment. And with every passing year, we are generating more on the liquid metal supplies that we have. So at the moment, the market for carbon credits has, like you said, has not matured in the country. I think it is still finding its feet. But when it does, I think we would have a big chunk of carbon credits available with us.
Yes, that's the point at which I wanted to make sure that we highlight that as well. It's always good to have a chat with a second generation entrepreneur. And Raghav, it's a pleasure with you having a chat on your company and the industry as a whole. Dalal Street is definitely giving premium to it. Thank you very much.
Thank you.
So that's the management of CMR Green. Interesting company, recently listed, and a little bit of concerns on cash flows are definitely there. But overall, Dalal Street has given strong tailwinds for this entire recycling sector. Interesting story, right? So for more stories like this, stay tuned to KYC and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। Amba Shakti SDTMT.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Benchmarks extend gains with Nifty near 24,200 level. Sensex gains more than 500 points. Most sectors trade in the green today. Real estate and IT lead the gains. Crude prices hold gains supported by the heightened uncertainty in the Middle East as the US and Iran remain at an impasse. Now the two sides are also embroiled in a confrontation over the Strait of Hormuz. KF Fintech a buzz on expansion with gold loans, targeting 200 to 300 branches by March 2027. Glenmark Pharma gains after the US FDA approved its fluticasone, propionate and nasal spray. Meanwhile, Swiggy shares rally after Jefferies retained its buy call with its move towards IOCC status, expected to offer greater flexibility for the company. Sugar stocks remained firm despite the government's fresh revision in stock holding limits aimed at cooling the soaring prices. Sri Renuka Sugars, Dalmia Bharat, Balrampur Chini Mills, EID Parry and Triveni Engineering also buying interest in early trade. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar and let's begin the show with an eye on the markets at noon today. And yes, it is a sustained kind of momentum that Nifty 50 is really seeing, and the psychological level of 24,200 level is well conquered, and Nifty 50 also looks comfortable at this particular point. Also take a look at Bank Nifty. That has been the biggest dragger or biggest gainer on any day when there are pressure points because of external factors on the overall market for India. And therefore, Bank Nifty is really taking the lead with outperformance to the key indices, and that's adding to the momentum when it comes to the key indices. Also looking at the several other contributors, apart from HDFC Bank, which is the top gainer, adding over 20 points to Nifty 50. It's also Bharti Airtel, Larsen & Toubro, Eternal. So it's a broad-based recovery and a broad-based gain that the market is really viewing at this particular point. On the downside, hardly anything to mention. Maybe an Hindalco or Asian Paints, hardly eroding 1 or 2 points, so it's negligible. Also, the picture is clearer when we take a look at the sectoral play, and almost all the sectors sectors are in the green. So I've got the color right today when it comes to the market movement. Take a look at that pretty picture with green on the screen, and real estate, IT, financial services, these are the ones which are really gaining in trade. On the downside, with a slight bit of red tinge, is only the defense sector. So that's a snapshot of the overall market. Siddharth Vora, the head at Quant Investment Strategies and fund manager at PL Asset, joins in now with more perspective on the market. Siddharth, always a pleasure to get chatting with you. It's a good day of trade after quite a bit of uncertainty as well as pressure points that the market has been dealing with. What do you think is really impacting, and are these kind of sustained movement or buying interest that is seen, is that sustainable?
So I think today, just the move today, I think I can attribute it to a bit to cooling bond yields in the US. Overall FII sentiment towards India, last 2 months, if you look at the numbers, they've been net buyers. So I think after 2 years of aggressive selling, just cooling off on the selling itself is a big trigger, and being moderate buyers is definitely a good tailwind for Indian markets. It provides some sort of cushion, and I think last couple of 5 days almost, Indian markets have been under a lot of pressure, so we could see some short covering as well. And anytime you see any stability in crude, stability in rupee and US bond yields, Indian markets react quite positively. And I think yesterday the AI trade also unwound in US and a couple of other markets. So I think every time the AI trade falls globally, India does okay domestically. So I think it's a mix of all these factors, coming into play for India today.
That's right, and you very well summarized it, Siddharth. In fact, the AI plays extremely critical because of the FII inflows as well. That factor which has a huge amount of sentiment impact on the Indian market. And of course, the reversal in that trend gives us the benefit, considering we are stacking lower in the AI trend and therefore the investments from FII. Now, Siddharth, looking at this particular trend and how IT sector also gains immediately as soon as the AI trend reversal really takes place in the US. How do you play the IT services sector, the top 5-6 companies who are like really heavyweights when it comes to the IT services, trying to pivot into AI? How much of the interest will you show in that at these levels, and what is your view on the sector?
So currently we don't own any IT in the portfolio.
Right.
We run account models, and they consider a lot of parameters like quality, growth, value, momentum, risk. So from a quant perspective, it's not a quant sector as such, but fundamentally, the way to look at IT, it's a high quality sector. It's a high quality sector with trading at multi-decade valuations. And when this opportunity is arising, one needs to understand that the damage in the sector is not really permanent, and the recovery in earnings growth is not priced in. So there is that little gap in what the market is perceiving and what is actually going to play out. And I think that gap is the trade in IT. If you look at the AI order books also for some of the top 5 IT companies, I think they are making some progress in terms of AI order books. The headcount is also reducing, which means efficiency gains are also likely to play out through a cycle. And the growth is actually not as bad as the street is perceiving. And therefore, the valuation is overdone on the downside. So I think if you have a 2 to 3 year view, expect and can tolerate some volatility. It's a great contrarian sector, and it can do quite well because it's oversold and it's under-owned now. And I think it can be a decent bet in the portfolio from a resilience point of view over a 3-year cycle.
All right, so that too is an important takeaway coming in, Siddharth. And of course, the AI thrust and pivot left aside, the trading play for 2 to 3 years, also with the benefit of rupee depreciation for their bread and butter business, can be a good play. But when we look at the sugar sector, of course, lots of news developments, and that has had a sweet impact on that sector as well, with gains on 2 days that we have seen. How would you play the sector at at the present valuation from medium to long-term perspective from here on?
So actually, sugar has been quite a big holding in all of our quantamental strategies. So quantamental is basically where quant models are used as a filter or screener, and then there is a fundamental overlay by the fund manager. So in those funds, sugar has been a big allocation. 15-80% of those portfolios are allocated to sugar since the last 2-3 months. So I think that trade has played off really well in some of our strategies. We run 5-6 strategies, and in 3 of them, sugar stocks have been allocated to quite aggressively. So I think that trade has played off quite well. We wouldn't look to add at these levels now, but I think we're holding and running the positions.
All right, so you are sitting with gaining position because of the sweet developments in the sugar sector, Siddharth. But you spoke about 5-6 strategies. Give us a sense on strategically which are the sectors that you're most buoyant on and which could be at the current valuation still a good buy for medium to long term.
So, in our core flagship flexi-cap fund, we are overweight real estate, auto, financials, and industrials. These are the major overweights. Some of the other sectors, have very stock-specific positions. So, I think 80% of the portfolio would be across auto, real estate, financials, and industrials. 20% would be spread across a couple of other sectors and names. So, right now, we're quite bullish on these. In our flexi-cap fund, in our small and micro-cap fund, sugar has been a big overweight. Metals and minerals are again an overweight. We were running a large overweight. We reduced it. Now we're building that overweight once again. And that is a little more tuned towards cyclicals, commodities, and higher beta names right now, the small and micro-cap fund. And I think these are some of the sectors we're finding quite interesting at this point of time.
Right. Siddharth, a good summation of the sectors and how you're playing them. I didn't see a mention of green energy or any new themes of the sectors of the future, which you are looking at keenly at this point. Any sector not much discovered on your anvil then?
So I think power is still a sector that we hold across all of our portfolios, but maybe 5-6%, 5-8% sort of allocations. But it might not necessarily be green energy. It could just be traditional power also, or power ancillaries, beneficiaries of the power capex cycle that we're going to see in India and in the world with the AI trade and otherwise, private capex as well. So I think we're playing power differently, not necessarily only through green energy as a theme.
Yes.
And I think our quantamental strategies are a little more value oriented at this point of time, and therefore chasing extremely high multiple themes or extremely high growth or hot themes might not be the flavor in the portfolios right now.
All right. So, Siddharth, well mentioned there on the power sector. In fact, the opinion that I also get is that since we need so much of our domestic energy and we already have a lot of fossil fuel based and other forms of energy already there with a life span of 25 years. So that is also catching up the momentum and not just the green play. So you're not the first one highlighting on this and looking at the overall basket, but always a pleasure to get your strategies as well as insights on the market. Thank you so much for joining us on NDTV Profit. All right, so that was about the equities markets. Also critical at this particular point is the crude oil prices, which has been having the single largest impact on the Indian economy as well as the markets, and also the rupee movement, which has also been impacting several sectors as well as the market sentiment. Indranil Pan, who is the chief economist at Yes Bank, joins in now for a detailed analysis on what's really happening. Indranil, always a pleasure to welcome you on NDTV Profit. There are many points to get chatting about. First, I wanted to gauge your understanding on the RBI's move as is expected later in this particular year, given a combination of various factors, El Nino impact, maybe inflation, that driving inflation combined with also crude oil prices, which have been at elevated levels because ultimately the war is not as short term as we thought it would be. And all the measures on rupee depreciation arrest have also had minimal impact. Looking at all this, what's your view first on the interest rate and then on the economy?
Well, I think we just had the minutes of the meeting yesterday. Sounded a bit hawkish in the sense that there's a clear understanding that inflation goes higher. But rightly so, as the governor pointed out during his comments and what we read, is that in a supply side driven inflation, unless there is generalization of the inflation that is being seen very explicitly, the RBI should not be hiking rates at this point in time. Now, out of the two readings that the RBI would be getting on the inflation before the next policy, we've already seen one reading where the core remains muted. The core is just at about, continues to be about sort of 3.9% headline. And the precious metals, it is about 2.5, 2.6%. And there is no clear indication of a generalization of the inflation at this point in time. But having said that, the challenge for the RBI is that their own data sort of indicates that the diffusion index, which tracks the number of commodities that are rising at various levels. The diffusion index from about the January 2026 to the July number that we saw has actually increased in favor of items that are growing at greater than 4%. So the question that the RBI needs to ask is, what are the critical indicators that they would be looking at in terms of sort of understanding that the spread of inflation is becoming more wider, and the expectations are sort of reacting in a way that inflation is getting entrenched in the system, which necessarily means that inflation is more permanent rather than transient, as a supply shock would determine. So on a view part, I think October we are not looking at any rate hikes. But if the other inflation data before the policy also indicates that there is no significant momentum, I think there is a probability that we hike in December. But at this point in time, understanding the inflation dimensions, I would still say that the probability is relatively low.
That's right, Indranil, because also, as you rightly mentioned, the generalization of inflation bit, as well as the supply side related inflation, and which can actually go away. But looking at the crude oil prices movement, it looks like that even if the war gets over in a couple of months, for this particular calendar year, we have been weighed down by higher crude oil prices. So that's the worry. But that added with higher interest cost will really have a double whammy impact on the companies as well as the market valuations. So that needs to be understood by the market and probably baked in if that were to happen. But to the second point, Indranil, crude oil prices and other supply chain constraints that we are seeing on a sustained basis, where this war really started on 28th of February. In this particular quarter, we are halfway through and we are still seeing that sustained pressure building in. How are you seeing the economic impact and also the various numbers that need to be reworked? I know that $80 per barrel was the average that we had penciled in. Is there a chance of reworking that, and what's your in-house view on this particular aspect?
Well, on the growth perspectives, I think broadly we have escaped the West Asia implication on the growth perspective in the first quarter. Probably because we had a sort of inventory build-up previous to the war that started, and therefore the input cost pressures were not as telling on the manufacturers as otherwise would have been. So my point here is therefore we need to see whether from the Q2 and the Q3 there are some pass-throughs that happen from the WPI to the CPI, which necessarily means that the goods portion of the CPI, which is about say a 30% of the total weightage of the headline CPI, that also sort of starts to increase, and that has its implication on the core. So this is a part of the whole sort of structure of generalization of inflation that I talked about. But having said that, I think the clear message here is that the second half, in terms of the growth, in my opinion, would be weaker than the first half, simply because of the West Asia crisis, the sustainability, the durability, etc., and the impact in terms of the oil prices we need to bake in. And along with that, we need to understand that food prices are relatively higher compared to the last year, which necessarily has a negative implication in terms of the real wage growth of both the rural and the urban sector, more especially for the rural sector than the urban sector. And in terms of the El Nino, the output of the rural sector will be weaker. So there is a double whammy for the rural sector, both from an agricultural and a non-agricultural perspective, which necessarily means that the consumption demand will possibly be weaker from the rural sector, and that will be manifesting in Q2 and Q3 more than it possibly did in Q1. So second half, therefore, weaker. We are still maintaining our view of 6.6 to 6.7% as the full year growth, broadly in line with the RBI's own estimates.
Right. Indranil, one important takeaway from what you commented right now is also the consumption demand, and especially from the rural economy. And that is a combination of crude as well as the El Nino impact. And are you already getting some data from the ground on the impact?
Well, yes. So in the sense that if I look at the Retail Association of India data and their survey analysis, it pretty much shows a weakening retail demand, especially in terms of the discretionaries. And that is becoming across the board. It's not really concentrated in one sector. It is across the FMCG as well as, say, for example, fashion and apparels and etc. So we are seeing a weak demand playing out, and to a certain extent we have, as I said, it's not really getting factored into the Q1 implication on the GDP, but definitely from a Q2 Q3 perspective we should be factoring that in.
Right. So that's a new factor that is really developing, because we were trying to analyze the impact of this on the economy and the consumption for a while now. But Indranil, my final question, and this is going to be important. See, arrest of rupee depreciation has been a cause of worry. And of course, the Reserve Bank of India had taken steps. Now that steps and the measures on FCNR front are coming to an end. And we have capitalized on it. Up to $70 billion is what is expected. But is that enough? And what is the view on the rupee movement going forward? Will that be crossing the levels which could worry the Reserve Bank?
Well, I think, yes, as you rightly pointed out, an important question. In terms of the FCNRB, I was never on the camp which would have looked at a very sharp appreciation, simply because all the flows that are coming in are getting swapped in favor of the RBI. So the FX reserves actually go higher. It is not really circulating in the market and therefore impacting the demand and supply equation. So the point being made is that when that is the scenario and when oil prices go higher, obviously the demand for dollars go higher, and that therefore leads to a depreciation of the currency. Now, an even more important point is that, number one, yes, it has sort of beefed up the arsenal for the RBI in terms of quenching any sharp depreciation of the currency. But the other factor is that they might not be able to stand totally and try to depress the any currency depreciation pressures that might actually ensue from here on. Because when I look at the Q3 and the Q4 balance of payments, with oil at about a 90 to a 95, we clearly have a very slender margin in terms of the balance of payments. Now that most of the receipts in terms of the balance of payments and the banking capital through the FCNRB has accrued in the second quarter of the year. So my bet is that we will continue to see moderate depreciation pressures on the currency. And that is also because the interest differential between India and US is relatively quite low, which necessarily means that to the extent we can actually expect FPI flows, especially on the debt side, and with non-inclusion in the Bloomberg index, we might actually see muted flows on those accounts. So I would possibly expect end March current financial year USD INR at about a 96.50 or a 97.
All right, 96.50 or 97 levels by end of this financial year. Moderate depreciation is being expected. Indranil Pan, many takeaways from all the aspects that you spoke about on the economy and especially on softer consumption from the rural economy expected in Q2. Thank you so much for sharing your views on NDTV Profit. Thank you.
Thank you.
All right, moving on to an important development on news front, and SEBI has issued its first cash manipulation order flagging aggressive buying and also selling, and Mansi allegedly placed also and cancelled sell orders, with SEBI really impounding 3.68 crore rupees for the entities. In fact, lots of development on that particular front and the mismanagement there. Nimit Dixit filed this ground report. Let's take a look.
We're here at Mansi Share and Stock Broking. As you can see, we're at their office. We spoke to somebody inside. We rang the bell and spoke to somebody. It's a 3-floor office here in Avirahi Cooperative Society, largely a housing cooperative society, but the B wing here is corporate offices. The 2nd, 3rd and 4th floor of this office is all Mansi's operations. It looks like quite a large operation. We went to all 3 floors and we spoke to a couple of people here. The first person we spoke to says that the management is out. They're not available to speak. He refused to identify himself. He refused to give me a phone number, and he says that the management is all traveling. Nobody is here. I went up to the 3rd floor where nobody answered. I went up to the 4th floor. At the 4th floor, a man identified himself as Hiten Joshi. He spoke to me. Hiten Doshi, I'm sorry, and he spoke to me, and he also told me that there is no authorized person to speak on behalf of Mansi about the issue, the cash stock manipulation case that SEBI, the interim order that came out yesterday. What we understand is this 3-floor operation, when we peeped into the 4th floor, there were about 20 to 30 people inside. Here also there are quite a few people inside and moving. They say that there is nobody authorized here and all the leadership is out of town, and they may be available later in the week or next week. That's what they say, but we keep trying.
All right, that's a ground report from our colleague Nimit, and CAS has been implemented just a few days back, and already the crackdown on various manipulations taking place there. We'll keep on top of that developing story, but right now it's time to wrap markets at 12, but do keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities. a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanna, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaning.
Hello and welcome to NDTV Profit. You're watching Trending Stocks from the NDTV Profit Suzlon studio. With me, Hital Datia and Sharad Dubey, who's standing at the Profit Market Pit. Sharad, good afternoon. An interesting day of trade where, I mean, if you talk about the mid cap and the small cap, there is some mild moves that are coming in there. Again, it is a Thursday. The question is, how sustainable are these moves?
Well, that's right. Good afternoon, Hiral. And we had a good gap up opening, as we had pointed out earlier in IMO as well. But basically, this is happening like a basket buying is happening all across. For the last 12 days, we had seen higher lows coming in from Nifty. And interestingly, they have snapped the 6 to 7 day losing streak as well. Nifty Bank also, the story remains the same, especially the interest rate sensitive stocks. They are doing well as well. And we'll get to the reality aspect also. But they're maintaining it. They're sustaining it. But how much will it continue? That's important because Sensex expiry is also there today. So you cannot rule out volatility which might happen towards the closing. But looking at the key factors right now, the mid caps and the small caps, they are also doing well. And Nifty Bank, both have shown a strong reversal happening. Also, other key factor to watch out for would be this Thursday expiry at play, which I mentioned, but the sectors which are doing well, you should have a look at that as well. Yields are falling, rupee has strengthened. This is the most important news of the day. The macro impact globally is increasing the risk on sentiment as well. Sector specific reality, IT and sugar stocks, they are still continuing. Look at that, Balrampur Chini is up 12%. Good up move coming in the realty names, also one of the top sectoral gainers. But all sectors are in the green today. Basket buying, risk on sentiment comes back in the market, but how much will it sustain? That's the big question. Will it be bond yields? Will it be war issues? And also the options data is suggesting further up move. So it's not going to be downward. Little bit more short covering is taking place right now. And today, one data is something which we'll be watching out for is the US jobless claims data. But as of now, broader indices and the main benchmark indices are doing well on the macro relief.
Okay, so interesting moves coming in there. Let's quickly look at the watch list. Genius Power, highest levels in 39 sessions, strong moves coming in
on that one. So that's the power company which is seeing some smart moves. Acme Solar as well, which is buzzing in trade, and that stock is trading at the highest levels in all times. Kiri has gained really 17% in the last two trading sessions, so something probably brewing there as well. Strides Pharma, the Bangalore flagship facility, has got a US FDA EIR, and that's a relief coming in for that one. Turtle Mint 4% up move. Jeffries has actually initiated a buy. They have a target price of 190. REC, you have Morgan Stanley, which has downgraded the counter to an equal weight, and they've cut the target price. And likewise, a downgrade coming in for a PFC as well from a MS, and that's the reason why both the counters are trading under pressure. SBI Cards is having an interesting day, 6% gains in last two sessions, and AB Capital. Now, the gold loan business expansion is what they're looking at, and that's the reason why that stock is in focus. Muthoot Finance as well as Manappuram, both of these counters are surging in trade on the back of strong gold prices. And again, you have your gold beneficiaries or gold loan companies which stand to benefit whenever you see a surge that comes in terms of gold prices. MMTC, I mean, precious metal surge is the kind of impact, and MMTC, as we know, is more of a trading company, and that stock is trading in the positive. KFin Tech is up 2.5%, and there's been a 1,400 crore block deal. You know, it's interesting to see how the block deal has actually not gone ahead and put pressure on the counter. Swiggy, where Jeffrey says IOCC transition moves closer, and that will be positive. You have sugar companies also, because the government is tightening the stock holding limits, and that's the reason why sugar companies are in focus as well. Wellspun Living has seen the highest level since September 2024, almost a one-year high. Redington is also trading at an all-time high. Eternal, almost a 10-month high coming in there. Netweb Tech as well, again, an all-time high. Hindalco is interesting because US-Canada tariff deal, this is something which may actually hit Novelis. And Novelis, as we know, is a subsidy of Hindalco, and that's the reason why you're seeing a cut of nearly 1% that is coming in on a Hindalco as well. So that's the watch list. But over to you, Sharad, to actually take the rapid fire as well.
Thanks a lot, Hiral, for that. We start our rapid fire. We are joined in by Himanshu Gupta. Good afternoon, Himanshu. Always a pleasure to have you with us. The first stock in focus is Genus Power. Good buying coming in, and a lot of meter-related stocks are seeing basket buying. What are the key levels to watch out for? Do you think more buying can start from these levels also?
Very good afternoon to you, and thank you very much for having me on the show. Well, absolutely. A sideways consolidation is actually followed by a very strong buy on heavy volumes. I think going ahead also some more buying can be seen. On the upside, I think the immediate targets remain around 360, 365 odd levels. And once that resistance and the kind of supply is placed around those levels is taken out, I think the stock is good to go towards 400 odd levels over the due course. So I think a strong setup and a fresh buying is initiated in today's trade. For short term, a stop loss below 310 can be placed in Genus Power.
Right, and Himanshu, now the gold prices are back on the uprise, and this is not the festive season I'm talking about, but the big up moves coming in because of the global tensions and maybe a hedge as well. Let's pull out both Muthoot Finance and Manappuram Finance. Out of these two stocks, which is a better risk-reward ratio, and is there a trade to be made here further?
So, if you give me a choice, I think Manappuram is a better placed chart. That one is still in a confirmed uptrend, and the recent correction from 375 odd levels looks like a technical pullback in an overall going uptrend. For me, levels of 335, 340 looks like a very good support and an area of demand exactly from where the stock has actually rebounded. So for me, Manappuram offers a good risk reward where a buying around current levels and even accumulating further around 340, 42 odd levels is recommended. A stop loss below 335 can be placed here, and on the higher side, I think 360, 365 can be seen in short term. While if you talk about Muthoot Finance, I think this stock is actually is already in a correction, and today's recovery is just a pullback in an ongoing correction. So for me, I think 3,100 odd levels holds a key area of supply and resistance for Muthoot Finance, and as long as the stock is not able to close above that level, I think we might continue to see some sell on rise in this particular count.
And Himanshu, next stock is KFin Tech. Block deal happened, but a good absorption is happening from the institutions also, was what I'm hearing. And is there more value left in this counter, because there is a big correction from its top levels, but a good accumulation happening right now? What key levels to watch out for?
If you look at the long-term chart of KFin Tech, the stock actually made a high of above 1600 in 24, and from there we have seen a very long price and a time correction. And if you look at this length chart of a 2 or a 3 years time frame, you will see that 750, 800 odd levels have actually managed to offer decent kind of demand and buying around those levels. Now a likely double bottom is already in place, and once the stock is actually able to close above 980 or 1000 psychological odd levels, I think it will be a very good risk reward on the cards, and it will be confirmed that the worst might be over for the counter. So a close above 980,000 odd levels would be a fresh confirmation to initiate fresh longs, and for the investors who have been holding on this stock will actually expect some momentum further building in, where positionally I think the targets closer to 1200, 1300 are on the cards over a couple of months.
All right, and another stock is Reddington, which we had featured earlier at KYC also recently. A good buzz coming, especially on the higher prices of the key products. Now festive season is also coming. How do you see this momentum coming in the stock also? Do you think there's a further up move likely going ahead? What are the charts suggesting?
Well, the stock is in a confirmed uptrend, stock trading above short and medium term moving averages, given a vertical up move and post a decent small exact textbook type correction. Again, from last 2 days, we have been seeing the momentum building up. My sense is that one can still initiate longs in this particular counter around 340, 350 odd levels. Keep a stop loss below 320, and I think on the conservative side there is a good chance that over the next couple of weeks the stock may go past levels of 400. So I think a very strong setup, accumulation and buying on dips is a recommended strategy in Reddington.
And for Eternal, what will be the trade call? Is there any risk-reward ratio looking good here in the current levels? Maybe after a round of consolidation for Eternal, because I think it has broken that 310, 315 mark.
Absolutely. So there was a clear area of supply around 310, 315 odd levels, but over last couple of days, I think a strong buying in this entire space, the new age companies and these platform companies is clearly visible. So my sense is that even if you enter around these levels, just keep some more space to add on some dips towards those 310, 315 odd levels, which are likely to turn into strong demand zone now. Maintain a stop loss below 290 on a closing basis, and I think targets of 365, 375, which were the all-time highs, are looking very much possible in the coming weeks for Eternal.
Yes, for Eternal there is a bullish stance, but can you say that for Swiggy also, or are there some questions left, especially on the technicals to look at?
So although we have seen some strong recovery in Swiggy over the last couple of weeks and months, but the momentum actually fizzled out. Despite that, the stock is actually able to maintain a higher high, higher low structure on a short-term time frame. But given the fact the stock is actually trading below its 200-day moving average, and we have been seeing every time the stock attempts a recovery, there has been a selling at higher levels. So at best, what my best guess for now for Swiggy is that it might actually pave a recovery towards 310 odd levels. But beyond that, we need to see that whether it's the demand would be able to outpace the supply. So for short term, I think 310, 315 odd levels looks achievable, and the stop loss below 270 can be placed.
All right, thanks a lot for that, and that's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks?
Thank you so much for that, Sharad. You know, it's interesting to see where on the second consecutive session, you're again seeing a IPO which listed recently, which is trending on Google. Let's pull up a Shiprocket on the screens, and there you go, 5.5% up move coming in there as well. And this is after a spectacular listing that we saw. Now, the question is what's really happening with a Shiprocket, and in terms of the business that they do as well. Logistic companies have been, you know, in focus as well. The stock has jumped 35% on debut, valued at close to about around 10,000 odd crores. You have a Goldman Sachs, which has a buy rupees 53 crore. Actually, they bought 53 crore worth of stake in Shiprocket, and on a 48% debut is what they've seen. Sharad Avasthi, head of research at PCG, SMIFS joins in. Sharad, welcome to the show. Always a pleasure to speak to you. How are you looking at a Shiprocket? Because a very strong listing. Do you see further moat from here on? Second day where you are seeing some moves around 5%?
Yeah, I think it's a good story because the whole logistics space is undergoing a very decent change post GST implementation, and the implementation of tolls being connected automatically. I think that is a huge advantage for them. The infra improvement is something that we continue to see over a period of time, and I think this is a space that could substantially improve going ahead in terms of what is the kind of turnover that they can achieve with the existing infrastructure. So I think this is a business across the sector. We will see improvement in logistics being used and the scale being improved. So I think the asset turnovers across the board for most of these companies will improve substantially, and that should result in very healthy bottom line accretion over the next 3 to 4 years. So we are very bullish on the whole space. So I think even Shiprocket should benefit out of that.
All right, but the sugar stocks have been the flavor not only for this week but the entire month. Looking at the government intervention, the first government intervention has come in. They have announced it overnight, especially on the stock holding units, and there are certain level of units which most of the players need to maintain it, and this will be of course applicable from 1st of September till 30th November. And looking at how the momentum has happened, we are seeing the sugar stocks rallying in trade. The domestic prices are above that 5,000 rupees quintal mark. Already 10 to 15% up move in the prices domestically in the month of August, and globally also the white sugar prices are at 15-month high levels. Of course, this is a shortage coming in from the El Nino impact, as well as the European production has come down. Of course, some concerns will be there on the ethanol diversion, but the sugar stocks have made merry. Most of the stocks have risen between 20 to 80%, or actually even more than that, from the 2026 lows. So, Sharad, just wanted to understand, the sugar stocks, which has been a tactical bet amongst most of the traders. Do you think good time to take some profits off, or is there some issue which might drive these prices up? Because the prices have gone up in a very insane manner in the last 2 to 3 trading sessions. Your views on it?
Yeah, so I think the recent curbs are something which are certainly dampening for the sentiment, and the price movement has been very robust. Our top pick usually earlier was Balrampur Chini, because we thought that size and the new capex that they were doing was something that put them in a sweet spot. Rest of the pack, we were not expecting prices to go up so much, because internationally we don't think availability is such a big problem right now. Maybe at max a season of change happens, but not beyond that. The ethanol story has already played out. I think now gradual improvement there will keep happening over the years to come. But we have so much hue and cry about T20 petrol and all that. So I don't think it's going to be a very smooth rally. So considering the current prices, I think, yeah, across the board, it would be better to book some gains and get out of most sugar stocks. Maybe EID parry among the larger names would be something that you could continue to hold. We are looking at targets of around 1,050, 1,100 next 2 years. Then this year and next year, the numbers could be very strong for them. So EID parry might be an exception, but rest of the pack, I think it's good to book profits at these levels.
Okay, so EID parry is the pick coming in, and remember that the sugar sector is very volatile as well, but little bit of volatility coming in the metal space, and I'm talking about Hindalco, especially with the news flows coming in on tariffs, and it might impact its US arm, which is Novelis. To decode what's happening here, we are joined in by Parth. Parth, what's the actual story and what's happening with the stock?
So what's happening is that US and Canada are now nearing a trade deal. As per some talks, they have said that the tariffs on steel and aluminum products may drop from the current 50% to almost 25%. And this is a very big thing for the US, because Canada actually supplies nearly half of US's imports of aluminum. And because Novelis is Hindalco's US arm, it directly sits between that crossfire. If we look at the overall impact, then Novelis obviously contributes around 60% of total Hindalco's revenue, and the 50% tariffs that were currently in place had push that Midwest premium in the US markets for aluminum. Midwest premium is basically that premium which is paid over aluminum products above that LME benchmark. So Novelis was able to capture this premium, and that was directly flowing into their bottom line. If we look at the numbers as well, then Midwest premium had crossed $1 for the first time, $1 per pound for the first time in history, and currently those premiums were running at $2,200 per ton. So that's the kind of realizations that that novelists used to enjoy. But if those tariffs come down, the deadline is Friday for the final talks. If those tariffs come down, then those premiums might narrow as the cheaper supply will hit the US markets. So that is something you need to watch out for in terms of Hindalco.
Thanks a lot, Parth, for explaining it, and that's the reason why Hindalco is also down in the trade. From one Sharad to other Sharad, I just wanted to understand one simple thing. Does this actually put in pain for this counter for Hindalco, or do you think there are more important opportunities left in the ferrous or even the non-ferrous space?
Yeah, I think so. The non-ferrous space, particularly, I'm more bullish. I think copper and aluminium have a long lead going ahead. Copper may be better placed because of the type of requirement, capex time requirement that they have. But I don't think that aluminium as such will be so bullish over the next 1.5 to 2 years at least. So and at these valuations, I think Hindalco is largely pricing in 9-10 times 1 year forward, next 2 years, not much growth expected. And this is a whammy for them again. So I don't think that it will make much sense to be into aluminium or metal or even the ferrous side of the stocks. But we are trying to, partially play the story through something like a Rain Industries or the graphite electrode kind of stories, HEG graphite. I think they could do very well over there. Though HEG graphite part of the story has played out, Rain Industry is a high risk multi-bagger kind of story that we are looking at, has appreciated from the recent flows. But I think the type of dominant positioning they have in the product segment, I think they could be something that could be very attractive over the next 2-3 years.
Okay, so that's with regards to Rain Industries. But stay with us. Several stocks have actually seen a sharp target price upgrade over the past 1 month. However, if you have to look at the current prices, they've already caught up to those high target prices, leaving limited or probably no upside potential at all. There's only one outlier in this list, and Somit is here with more details to unlock as to which is that one outlier that you should be watching out for, which has the upside potential, and the ones which have already done the trick. Somit.
So what we have done here is what we have tried to see the stocks that have seen the highest increase in their consensus target price in the last 1 month. After finding out that, what we have come across is the fact that out of top 10, 9 of these stocks have already or very near to the target price that is assigned by the consensus street analyst. Now, and there's hardly any upside left in these counters. So already they have achieved those targets. So not much of an upside left for these counters. Cyan DLM, now the target price for this counter has been hiked by nearly 56% in the last 1 month. But the return potential is negative 3% Kajaria, as Hiral was mentioning, is the only outlier here. The target price has increased by 40%, while the return potential still on the counter is nearly 50%. For other counters like Laurus Labs, Avalon Tech, RR Cable, the returns are in negative 13% to just positive 1%. While in case of Aether Energy, Sansera Engineering, ASK Auto, Gland Pharma and Acuitas Chemical, the return potential lies in just a single digit. The maximum that we could see here is Acuitas Chemical, which could give a return potential of around 9% over the next 12 months. So what has been the reason for this increase in target price? For Cyan DLM, it's the improving order book, and which leads to better revenue growth visibility. For companies like Laurus Labs, it's better margins and a better product mix going forward. Avalon Tech, again, an increase in the order book, which also increases the revenue visibility. For RR Cable, it's improving margins and improving growth outlook for the company. For Aether Energy, it is strong EV demand, upcoming new capacity, some platform launch, which will also increase the total addressable market for Aether Energy. For Sansera Engineering, it's a strong ADS platform growth and large order wins, which has led to analysts increasing their target price for this counter in the last 1 month. For ASK Auto, it's a structural growth outlook, which has improved. For Gland Pharma, better and medium-term visibility for the CDMO business specifically, and for Acuitas Chemical also. If you look at the CDMO pipeline, that has been scaling, and the specialty chemical outlook is also quite positive. But the one outlier, or the lone hero that I was talking about, Kajaria Ceramics, now the only stock which has a return potential of nearly 50%. Why? Because the demand and volume growth are finally accelerating as per analysts. Morbi cost disadvantage has also aided Kajaria when it comes to competitiveness among its peers, and also capacity expansion is expected to support the next leg of growth for Kajaria. And lastly, the non-tile business is also becoming a meaningful portion right now and will aid the growth for the company going forward. So out of the top 10, only Kajaria Ceramics is the one which could give a return potential of nearly 50% over the next 12 months.
Thank you so much, Somit, for that. So Kajaria is the lone hero over here. Sharath, your view, because on a consensus basis, you're seeing a 50% upside. The others are still in mid-double digits potentially, but this one is an outlier right now. Would you say valuations are good and this could be a potential to see that 50% upside?
See, I think for ceramics, one thing that would positively impact them, Miral, is that probably, going ahead, most probably we are expecting gas prices to come down internationally as well as at the domestic level, because over the next calendar year, gas availability should substantially improve. So that would be a positive development for them because that's been a pain point for them. And I think beyond that, if you look at the numbers, this space usually trades at premium valuations. So it's already trading at what, 28, 29 times next year, 1 year forward. So maybe if you're very optimistic and this gas theory plays out over the next 1.5 year, you could see some margin expansion and that could result in further re-rating. But still 50% upside to me looks like a bit of a stretch. So even if we consider next year somewhere around 45, 46 kind of earnings and 35, 40 kind of multiple, I think optimistic targets could be somewhere around 1400, 1450. That's what max I can look at right now.
Right, and even the management had stated that they are going to get benefit from consolidation, which we saw, especially what happened in January quarter. But another stock doing well is Turtle Mint Tech. After Jeffrey's report came in, they have initiated a buy rating, and the target price is also at 190 rupees per share. They have stated that there's a good momentum happening in the industry itself and targeting 38% 3-year CAGR when it comes to the overall revenue. The scale is also driving a strong EBITDA margin guidance for FY29 as compared to FY26 loss, and bullishness coming in. The counter is up 4%. Sharad, a quick view on this company, Turtle Mint Tech.
Yeah, so I don't think that valuations are very stretched, considering if you consider it as a fintech or the new age EV kind of new age kind of company. I believe the valuations are 3.5 times EV to sales. Optimistically, they could trade at around 6-7 times. But our view is that maybe, even insurance, the primary stocks to whom they cater to, even they look very attractive at current valuations. So we are focusing more on the main business. Maybe after they have had a run up of 20-30%, that would be a time where we want to divert into something like a Turtle Mint. But since we are very bullish on the insurance space, we think even Turtle Mint should continue to do well. But I think at these valuations, I would be happier buying the insurance companies rather than a Turtle Mint.
Companies versus a Turtle Mint. That's an interesting one coming in there. Stay with us, Sharath. You have a Jeffries which has maintained a buy rating on a MV photovoltaic. That stock is up almost 4% in trade, and they've raised the target price to almost 440. Currently trading at what, 328. What they are saying is that the company is a quality company. Valuations are absolutely attractive, and the early lead into TopCon cells, along with a robust order book and strong solar PV focus, is the key here. In fact, the net debt-free balance sheet supports the backward integration plans of the company as well, and they're pretty much well placed to sustain the industry-leading profitability that one is watching out for. In fact, they've gone ahead and raised their FY27 and 28 EBITDA estimates by 2% and 7% respectively, and they're forecasting nearly a 33% EBITDA CAGR over FY26 to 29, and they've said that after a 15% correction, the stock is actually trading at a 6.8 times forward EV to EBITDA, and the valuations are nearly at a 30% discount to peers, despite the strong growth outlook that the company poses. Would you also be a buyer, and would you also be of the opinion of what Jeffries is indicating right now, Sharath?
Yeah, certainly. I think, as you rightly pointed out, the TopCon technology is something that has been dominating the new capacity additions. It's a much better technology that we are working with. Add to that the fact that backward integration, basically, that is substantially aiding these companies. That should aid long-term, margins, basically the improvement in margins, and all of them have a very strong capex cycle. MV, in addition, the balance sheet strength is also much better. So we think the whole space should do very well, and if you look at it, 30-35% earnings growth we are also looking at over the next 2 years at least. Beyond that, I think maybe a year kind of stagnation could be there. But beyond that, the long-term capex cycles, etc., are very strong for the whole solar space. Even if you look at the capacity additions expected till FY31, they're very strong. So I think this will continue to trade like that, likewise, and it's still trading at what 13, 14 times next year. So I think once these 2 years we see this kind of earning, it's easily possible, that this starts trading at somewhere around 500, $600. So yeah, we are looking at targets of around 500, 600 at 20 times FY28 earnings of around 30 rupees. So this should be a good story to hold on. Actually, the whole space we are very bullish on.
Okay, bullish on the entire space, but thank you, Sharad, for that. Those are interesting picks that Sharad has given us as well, which are fundamental calls. And I'm sure with regards to technical calls, you've heard from the rapid fire good takeaways coming in there. But thank you so much for watching. With that, it's time for a quick break, and a thank you from Sharad, the team that put the show together, and myself from the NDTV Profit Suzlon studio. We'll be right back. Lots more lined up in lunchtime trades. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and
Benchmarks extend gains with Nifty near 24,200. Sensex gains more than 600 odd points. Most sectors trade in green. Realty and IT lead gains. Meanwhile, crude prices hold gains supported by heightened uncertainty in the Middle East as the US and Iran remain at an impasse. The two sides are also embroiled in a confrontation over the Strait of Hormuz. Aditya Birla Capital a buzz after announcing foray into gold loans targeting 200 to 300 branches by March 2027. Glenmark Pharma gains after the US FDA approves its fluticasone nasal spray as well. And meanwhile, Swiggy shares also rally after Jefferies retains its buy call with its move toward IOCC status, expected to offer greater flexibility. Sugar stocks remain firm despite the government's fresh revision in stock holding limits aimed at cooling soaring prices. Sri Renuka Sugars, Dalmia Bharat, Balrampur Chini Mills, EID Parry and Triveni Engineering all see buying interest in early trade. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. And when you talk about the Nifty 50 or the Sensex for that matter, you're seeing quite the healthy jump also coming in. So 170 odd points higher when you talk about Nifty 50, and when you talk about Sensex as well, somewhere close to 650 points. There you go, 655 points thereabout. Uptick that you're seeing coming in there. When you talk about the list of sectors as well, it's actually a sea of green that you're seeing across the last trade on a sectoral basis, as can be reflected on your screens as well. So whether you talk about media, realty, financial services, IT or FMCG or rural and consumption sectors, all of those sectors in good shape. In fact, what's not in good shape right now is something like defense, this just about a little bit on the back foot and trading in the red at the moment. But when you talk about Nifty 50 as well, lots of gainers and losers to keep track of in terms of some of those stocks as well that are reflecting on your screens right now. So it's an Eternal that's doing quite well for itself right now, and some of those sugar counters, of course, are buzz and trade. But other than that, financial services also in good shape. Kotak Bank, Shriram Finance, Bajaj Finance, Jio Financial Services, case in point. Some of your IT stocks also, the likes of Infosys, holding up quite well right now, and of course Wipro add to that list as well. And other than that, there's also a bunch of counters on the flip side that are a little weaker on the day. So something like an HCL Tech from within the entire IT pack, it's actually a shorter list when you talk about the losers. So something like a Hindalco, Apollo Hospital, HCL Tech, some of those counters a little bit on the back foot. But that said and done, when you talk about the entire sugar pack, that is the one that's really in focus, decisively higher as well. So when you talk about something like a Balrampur Chini, Triveni Engineering, some of those counters buzzing away in trade as well. So that's the entire update that you have coming in when you talk about some of those counters, and we'll get you the action in terms of those counters. But tell you what, let's also quickly take a look at oil as well as gold. And when you talk about some of the key details as well in terms of oil prices, you do have some of those key levels, elevated levels, like $92 a barrel that have been maintained for quite some time. So the crude rally really continues to gain some traction right now on the back of Iranian tensions. And when you talk about some of the factors to really watch out for, it's actually Hormuz that's quite the worry yet again. So it's the economic pressure, of course, that has been ratcheted up, and that's the key commentary also coming in from US President Trump, who's also warned of tremendous economic consequences for any countries that have ties with Iran as well. And that's something that you're looking at. When you talk about gold as well, you're seeing quite the healthy gain being really held. So biggest gain in almost a month that gold is holding on to, as you can see on your screens as well. So extending that rally really. And when you talk about factors to watch out for, it's of course the Fed's commentary that's top of mind, other than treasury buybacks and some of those lower yield levels as well that are reducing gold holding costs. Add to that a weaker dollar, and that's also making things easier, not just for gold but also copper. And that's also the one to also talk about, and we'll get you some more insights in just a bit. But before that, when you take a look at copper prices as well,
holding up above $14,000 on the back of that rebound coming in after the supply squeeze that we saw coming in. In fact, we do have Ajay Kedia, Director, Kedia Advisory, joining us on the show right now. Mr. Kedia, a very good afternoon, and it seems to be a good afternoon when you talk about oil as well as gold. First things first, let's start with oil. Start talking about what's happening in terms of the commentary as well, because that seems to have really given the market something to worry about, and in terms of oil investors, really something to cheer about and take a look at some of those bullish levels, isn't it?
Yeah, surely, because see, now I think it's very much clear that whatever the concerns has been there in Strait of Hormuz will have to be continued, because the statement from Donald Trump against the Oman and also the supply side is again a chalk. Resulting Brent is trading near to $91, $92 mark on a technical ground. Also, we expect Brent could be a level we can see in Brent could be around 95, 96 again. So I think nothing new has been came from Middle East, and that is why gold is slowly and steadily moving towards 95, 96 level. But yes, there is a fireworks for gold. We can say a golden afternoon today, because yesterday we have seen after the bond buying announcement by US that has triggered the fresh buying in crypto, in equity, even in gold. We have seen a good breakout right now. Prices are very well placed above 4,500 level mark. Also from the FOMC minutes meeting, we have seen only 3 members were in favor of a rate hike. Other were under unchanged mode. The September rate hike is now neglected in the market, and that is why gold is getting very good strength. But yes, slight concerns would be there. First, $500 gain in last 15 days. Secondly, again, geopolitical tension will continue to support crude oil prices. That will create an inflation concern. However, the fundamental side, physical demand and ETF demand continue to support gold. So overall, we are expecting gold should be moving closer to 5,100 as we close this year. Overall, gold and silver both looks very likely to go up from here.
No, absolutely. And, when you talk about some of those other factors in terms of the dollar strength, I just wanted to try and understand if you think that the gold prices have decoupled from the dollar in a substantial way, because last year, of course, de-dollarization was a key trend. Do you think that seems to have changed a bit, and there's an entire scope of things that you're looking at other than dollar as well when you talk about gold?
So the word de-dollarization will remain with us for next few years. So that means definitely economies are now making a way out from dollar and coming for gold. We have seen in last 21 months, China continues to add gold. So I think de-dollarization would be there. Coming on the linkages between dollar and gold, we have seen whenever there is some geopolitical tension, generally dollar gains as a safe haven buying, and also gold buys. But right now, yes, we can say some de-linkages has been there. Pressure continues to be mounted on dollar because of crude oil only. We have seen crude because of crude gain. We have seen support for dollar was been there, but Chinese demand for crude, Chinese import for crude was been slightly lower. That clearly shows that other alternatives have been available in the market. So I think yes, dollar seems to be very vulnerable. We may see level like 96, 50, 97 also. But in case of gold, I think geopolitical tension, central bank buying, ETF buying, even the supply side, we have seen overall in a year 35, 3,600 tons is been extracted, but the demand from India and China totally comprised of 1,800 to 2,000 tons. That means shortage will remain with us, with a central bank buying, de-dollarization terms would be continued with us, which will support gold and continue to pressure on gold, crude oil.
Absolutely. And when you talk about the support coming in, not just for gold, right? Right now, you're seeing copper as well holding some ground right now after that supply squeeze as well. So what are you looking at in terms of copper prices? What kind of targets do you have in mind, and what kind of momentum are you penciling in?
Yes, I think it's not only copper. We can see copper, zinc, aluminum, all these 3 metals are going very well. However, today market is slightly flat to negative, but holding near to 14,000 is a very good sign of recovery as supply has been continuously tightening. Also, the treasury yield has been came down. So I think inventory concerns, supply concerns, will continue to support copper. We are expecting at least copper to test around 14,800 to 15,000 level in next couple of months because of supply concern. Coming on zinc also, as we know that flood situation in China has got worse and smelter had cut down their production. No doubt, since January we were in surplus in zinc, but now the surplus has been continuously wiping out, and that is why zinc is also trading with a very strong momentum. On domestic side, we have seen prices on MCX has tested 400 level. However, from here also we are expecting at least 8 to 10% gain in zinc prices. Last would be the aluminium prices, as we know that Middle East concern continue to support aluminium prices. However, from 350 level mark, multiple of time market is slightly gapping up. But I think the supply from Emirate has been slightly improved. But overall, I think demand supply concern would continue to elevate all three metals.
Yes, no, absolutely, and that's something to keep in mind. Just very quickly before we let you go, just also wanted to take a look at crude prices. You do have Brent at $93 a barrel, as you can see on your screens right now. So it's quite the poke up that you've been seeing. That upward momentum, at least, is continuing to remain sustainable right now when you talk about crude prices, Mr. Kedia. So going forward, what are you expecting in terms of price levels if there is no escalation? And if there's an escalation, what's your bull case looking like in terms of prices?
See, 5 months back, when the escalation started, under repression, we have already seen $120. But now this type of surge is not possible because we have other sources that has been mined already. Secondly, OPEC has increased the production. UAE is also trying to push from the pipeline. Russia improvement has been there. So yes, there will be a positive sign for Brent. Maybe we can see a level like 96, 97, closer to 100 also. But sustainability is very dicey as of now. Chinese import is going to totally drop. Other countries are also shifting from traditional crude to renewable energy. That is why in short term, maybe because of supply disturbance and all, a level like 98, 99 would be possible for Brent. But as we move towards October, November, December quarter, I think prices should settle down again to the range of $78 to $80.
Yes. No, absolutely, and thank you so much for helping us out with that update as well in terms of going forward, what it's going to be looking like, because precisely that entire other routes as well is something that prices seem to be tracking very closely as well. Thank you so much, Mr. Kedia, for joining us. On that note, let's also move on and take a look at sugar as well, because those stocks are very much in focus after the government tightened stock holding norms to curb rising prices. In fact, Sharad is standing by with some more details when it comes to all of those stocks, by the way, Sharad, that are buzzing away in trade.
Well, that's right, Shansi. Looking at the overall interventions, this is the first time the government has intervened on the rising sugar prices. Now, of course, on the stock holdings, they have tightened those levels, they have ordered dealers that who use more than 10 metric tons of sugar should hold their inventories for not more than 15 days. Of course, this order itself is applicable from 1st September till 30th November, and there will be detailed analysis on that. But the impact what is there is the sugar prices expected to immediately cool off, and more announcements for sugar security can come. Agencies also reported a couple of days earlier that government may lower taxes on sugar imports. But as of now, looking at the stock momentum in the sugar stocks, the story seems a bit different. Remember, there is a tightening supplies coming in from Europe, El Nino impact from markets such as Brazil, India, as well as Thailand, and the pricing is really very high, 5,000 rupees per quintal, and this is the important rates which we checked from the major areas, lower monthly release quotas and declining inventories. Even the global prices are at the 15-month high when it comes to the white sugar prices. Already a strong momentum has come in the sugar stocks, be it Itpari, Balrampur Chini, Triveni, Sri Renuka, all of these stocks gaining between 20 to 80% from January 2026 lows. And despite the announcement coming from the government, in the day's trade, we are seeing a good buying happening across the sugar board.
Absolutely. Thank you so much, Sharad, for joining us with that update. And when you pull up some of those counters as well, when you talk about some of those sugar stocks as well, you're seeing quite the healthy set of gains coming in for all of your sugar stocks. So look at a Balrampur Chini up about 13%, 9% for a Mavana Sugar. So great set of gains coming in for some of those counters. Let's also move on and take a look at India looking to overhaul its bilateral investment treaty framework in a bid to attract greater foreign capital. In fact, sources are telling NDTV Profit that the government is reviewing the 2016 model BIT playbook as well. And Rishabh joining in with all of those exclusive details as well.
Right, this is going to be a crucial sort of overhaul that India is making to its bilateral investment treaty regime. What we've seen roughly about 10 years back is what India still follows is the bilateral investment treaty sort of template text that India has. That is set to undergo a major sort of overhaul, major changes. That is also expected to go to the cabinet for approval after that's happening. Now, what's changing essentially is the fact that there is more sort of investment-friendly approach that is coming in, more flexibility that is coming in, that India wants to adapt, more country-specific approach rather than a template that India wants to stick across various geographies, because there are sensitivities that need to be respected when it comes to investment flows between two countries. So in terms of changes, what we have is essentially a reduction in the domestic litigation requirement. Now, essentially, if an investor has some sort of an issue with any conflict that has come up, currently what they need to do is that they need to have about 5 years worth of domestic litigation before they can go to international arbitration. That has already been cut to 3 years in two of the bilateral investment treaties that India has signed, one with Israel and one with UAE. Now, as part of this further, making this further more friendly, that period is set to go down to 2 years. And that is going to be a major sort of friendly move to investors. What we're seeing in terms of more changes that could come in is also the fact that there could be a more inclusive MFN clause. Currently, with the BITs that India signs, most of the MFN clauses are either entirely excluded or limited. And now we're looking at something that's more workable. That's what we're picking up. We're also picking up that there could be a better, more friendlier dispute settlement mechanism that could come in. And also remember, India is looking to ink more and more of these BITs going ahead. You have more and more free trade agreements that have been signed with the EU, with Oman, and these are again partner countries that India is already friendly with. So a BIT is the next natural progression when it comes to boosting capital inflows as well. So that's what we're picking up in terms of an overhaul to India's BIT regime.
Right, absolutely. And while you're with us, Rishabh, let's also talk about India stepping up its engagement with Africa, with trade negotiations also set to expand beyond traditional partners. The focus really seems to be spanning critical minerals, pharma, autos, chemicals and energy as well. Let's talk about that one in terms of some key details here.
Absolutely. So a few days back, you had the South Africa Customs Union that India had entered negotiations into. This is, of course, a bloc of 5 countries in the south of the African continent. What we're looking at is essentially a lot of critical minerals trade between those geographies. Remember, Namibia, Botswana, South Africa, all of them have vast reserves of these critical minerals, and that is something India could look at tapping into. What India could help in lieu of gaining some of these materials is more and more high value processing being moved to these countries, and then India could benefit from the output of those. That is something that India is looking at. What we also have is, of course, like you said, auto as well as chemicals being a major part of this trade union. What we're also seeing is that this SACU FTA could also result into more and more FTAs with other African countries such as Kenya and Tanzania. Now, Kenya, though, is a developing country. Tanzania is not. Tanzania comes under a least developed country. So most of these African countries are least developed countries, and they already enjoy tariff-free access to Indian market. But that is a call that India is currently mulling over in terms of how to approach these countries for a free trade agreement, given that tariffs are already pretty low for them. But we're also looking at certain East African countries in terms of boosting more and more trade with these geographies. What we're also looking at is that there's also energy that's going to be a major part of these trade unions and trade pacts that India does going ahead. So that's what we're picking up in terms of deepening engagement between India and Africa.
Absolutely, and thank you so much, Rishabh, for joining us with all of those details. Let's also move on and talk about NDTV Profit, also exclusively learning that the Income Tax Department has identified nearly 11,000 crore rupees worth of real estate transactions with tax compliance gaps, and that's across 5 border states. You're looking at highly placed sources here saying that the CBDT has flagged over 14,700 property transactions in FY26, including more than 2,500 unreported deals. The discrepancies range from non-reporting and PAN misreporting to under-reporting of transaction values and cash components. You do have Uttar Pradesh that is accounting for the largest share of flagged transactions. The review has also revealed unusually high cash to tax ratios, and that's across multiple border states that you're looking at. So you do have UP in that list, Assam, West Bengal, Gujarat and Bihar as well, all showing cash deposit and withdrawal ratios that are significantly above the national benchmarks, indicating that cash activity far exceeding the reported tax base. In fact, sources are saying that the CBDT is now expanding district level scrutiny and is going to be coordinating with agencies including the RBI, SEBI, and the FIUIND and the Enforcement Directorate, of course, while cross-matching tax returns, banking records, and other data sets as well to really strengthen some of the compliance checks when it comes to these lapses as well. So that's something that you're looking at in terms of the CBDT probe as well. And those are the details here. But let's also move on and talk about cyber threats really becoming more sophisticated at the time. And this is something that is very much a lunchtime conversation. It's a dinner table conversation as well. AI is reshaping the digital landscape. Cybersecurity is moving from an IT function to a boardroom priority as well. So Checkpoint Software, that's one of the world's leading cybersecurity firms, seeing significant opportunities in the country as enterprises really ramp up the spending to secure cloud network and AI infrastructure. In fact, here's a snippet of our conversation with the management.
I'm going to ask you start by asking you a very basic question, which is going to be around cybersecurity, but also about the company. Because Checkpoint as a company was known for its firewall, and you've transitioned from there to being a company who is now, a big name in terms of where cybersecurity goes. So how have you seen these trends change? And going forward, what does cybersecurity bring on table with the way we're seeing AI evolving?
Yeah. Well, thank you, Mahima, and thanks for having me. It's a pleasure to be here. You started it, you framed it well. We are a company that was started when the internet started. And Gil Shwed, our founder, literally invented the first firewall, which enabled the world to securely use the internet. It couldn't be a more exciting time for me taking over and getting into his shoes to do the next phase, which is in this incredible moment in time where we are introduced to technology that we don't even understand completely yet. It is our mission to secure our customers' AI transformation, which is probably going to be bigger, faster, and more impactful than anything that we have seen so far. So the firewall still remains at the core of the network, but we just introduced the industry's first AI network firewall. And on top of that, because at the end of the day, in order to secure our customers' AI transformation, we need to look at it holistically, right? So it's the network, but it's the people, the workspace, AI security, the intelligence around this, and the way to orchestrate all of this into one platform.
That's a very interesting answer. But the other fact that Checkpoint as a company has been in India for several years now, right? What do you make of trends specifically in India where cybersecurity is concerned, and what is it that you think that is still a gap versus the global players that have, and in cybersecurity specifically, where do you think we lack and where there's more scope of improvement in?
Right. So I think India is in a very interesting place in this puzzle that we're looking at in cybersecurity today. First of all, as a market, it's a very interesting market. It's huge. It's very advanced technologically. If you look at the financial system here, it's completely digitized. Obviously, one of the biggest one in the world, if not the biggest one. From a geopolitical situation, also in the mix of very interesting things that we're seeing in the world right now. And when you put these two trends together, I think that this is a very interesting market. For us at Checkpoint, on the one hand, we're proud to be on the security side of some of the biggest organizations in India. And at the same time, for us, this is not just a market where we're looking at as a vendor, but also there's incredible talent here in India. Entrepreneurs, engineers, ambitious young people that are embracing these new technologies. And so we're also building our second largest R&D center in the world here in India. To your question about how we see the gaps, well, we're all in this right now because we're at a transition time. We're literally between two paradigms of cybersecurity. From what I've seen in the last few days, speaking to the leaders in the industry, in the government, in the military, I'll tell you this, the level of awareness and the level of collaboration is actually very promising.
All right, and that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So first, let's see what's on the show today. Firstly, we'll be speaking with the management of Interaj Building. Now, the stock is down nearly 26% on a YTD basis, but recently the company has announced an order win of close to 128 crore rupees. So what's the outlook and what's the way forward for Interaj is something that we'll try to get the answer from the management today on the show. Apart from that, we'll be discussing stocks like Veranda Learning. At one point of time, the stock was up more than 15% in trade, its biggest intraday move that we have seen in this month. And volumes, if you look at, were nearly 30 times its 20-day average. Apart from that, there was Solara Active. The stock has been gaining for the third consecutive session. It's up more than 15% in trade and has gained nearly 20% in the last 3 trading sessions. When it comes to Cantabile Retail, that stock has been gaining for the second consecutive session on the back of strong volumes. Volumes are nearly 10 times its 20-day average. And lastly, we'll be speaking about Good Luck India. The stock has been gaining for the third consecutive session, but so far in the month of August, the stock is down nearly 4% in trade, snapping its 4-month gaining streak. So what's the buzz around Good Luck India is something that we'll try to decode with our fundamental guest on the show, that's the Small Cap Buzzers. Now, if you look at the market, the Nifty has snapped its 7-day losing streak. It's up nearly 170 odd points, but the positive news here is that Nifty is now trading above its 50 DMA, close to around 24,250 level is what the benchmark index has been trading around. On the banking side, the bank index is up around 360 odd points, tracking exactly what Nifty has been doing. On the sectoral side, all the sectoral indices are trading in green. And this is something that we are seeing after nearly 7 trading sessions. The sector which is seeing the lowest amount of gain in Nifty PSU and Nifty Metal, up just around 0.2 to 0.1%. And on the flip side, it's Nifty Media, Nifty Real Estate and Nifty IT, which is up anywhere close to 1 to 2.5% in trade. When it comes to the small cap index, that's also been trading in green. But which are the key stocks that are buzzing here? On the gaining side, we have Cronox Lab, which has hit an upper circuit of 20%. Bharat Global, which has again hit an upper circuit of 20%. Suzanne Electric, Solara Active. A lot of sugar stocks have also been buzzing in trade, up anywhere around 11 to 12 odd percent. Banari Aman Sugar, Dwarikesh Sugar, Ugar Sugar, all up around 10 to 15 odd percent in trade. On the losing side, we have Delton Cables, Bizotic Commercial, Ojas Energy, Indot High Securities, MVK Agro, down anywhere between 5 to 10 odd percent in trade. But let's also welcome in our fundamental guest, Lancelot Dicona, CIO of ValueX Wealth Connect LLP. Lancelot, coming to you firstly on the sugar stocks. A lot of news flow coming in here. A lot of small cap and mid cap sugar stocks have been buzzing in trade. How are you looking at this space overall?
I think, these sugar stocks have risen considerably over the last couple of sessions as well as over the last 2-3 months. And if you look at valuations, they are, higher as compared to their traditional valuations. And so one has to be rather careful because whenever you buy on news, you are paying for the future. And sometimes, the future can be cyclical or can get impacted by various things, including the sugarcane procurement prices, commodity prices. And so there may be a lot of uncertainty that can play into the valuations, and that could result in negative surprises going forward. So one should be a little cautious, and probably a good time to buy sugar stocks is when the valuations are low and they're at the bottom of the cycle.
Okay, some exclusive news flow coming in here. Shrimi Chaudhary is picking up, is saying that it's on caste system. They are saying that there wouldn't be any fundamental change envisaged in the existing caste framework. They're also saying that changes could be considered to improve the efficacy of this caste mechanism, but there won't be any fundamental change. SEBI's market regulation department has been working with brokers and stakeholders on implementation of these changes. And when it comes to the Sensex caste order, what Shrimi Chaudhary is picking up here is that any system can be vulnerable to manipulation. Regulator continues to deal with such instances firmly, and the focus of SEBI continues to remain on strengthening the caste mechanism to minimize the risk of manipulation. This is what our reporter is picking up. It's SEBI sources on caste. So basically no fundamental change, but there could be some efficacy improvement that could happen on the caste mechanism is what our reporter is picking up. But moving on to the first stock that we'll be discussing today on the small cap side, it's Solara Active. The stock's been buzzing in trade. It's up nearly 15%, has been gaining for the third consecutive session. What could be the potential reason behind this move? Let's try to get the answer from Varsha.
It's up almost 18% in the last 3 sessions, and let's see what's been working for this company. What are some key triggers? Because we know that the ibuprofen weakness that the company is going through. But let's see what's working for the company. One is of course the debt situation, which has been improving. Net debt, if you see, has been reduced by 135 crore in Q1. And now stands at around 479 crore, though company wants to take it to 450 odd crore by FY27, and long-term goal 0 net debt by FY25. For the next 12 to 18 months, these are some 3 to 4 priorities that the company has. Of course, growing existing business, then seeding new business opportunities, and improving operational efficiencies and improving free cash generation. Now already company has a lot of capacity to augur growth for the future. So manufacturing sites in Bangalore, Ambernath, where the average utilization is around 70%. That means existing capacity can support growth for the company. Now, talking about ibuprofen business, which is a major pain point for the company, they are going to decide the future of ibuprofen business by H1 FY27. Likely they're going to sell this division, but we'll know by FY27 what's the update on that. Strategic review outcome expected with Q2 results. Management is evaluating options for underperforming business. So we all know the pain point for ibuprofen that the company has been going into, but there are a lot of other factors, other key triggers that is working for the company, and hence we're seeing the stock is up almost 18% in the last 3 sessions.
Okay. Lancelot, any view on Solara Active? The stock's been gaining. Varsha is talking about multiple factors here. How are you looking at this counter?
So I think there are definitely improvements on their business front, and there is an improvement as far as the outlook is concerned. But you look at the valuations, it's trading at such a high multiple, and we will see growth coming in only in the future. And so you're paying much in advance of any future growth. So I think one needs to be a little bit cautious about purchasing at this point in time.
Moving on to Veranda Solution, the stock was gaining in trade today. Its volumes were quite strong on this counter. In fact, the move that we saw on an intraday basis was the biggest move in this month. At one point of time, the stock was up as much as 50-odd%. Let's get in Jasmeet to understand what does the company do and what's the way forward for them.
Well, Samar, thank you for that. As rightly said, the stock has been gaining in today's trade, but let's quickly understand what does the company do. While the company operates as an edtech company and has also multiple divisions, it operates into commerce, the government test, as well as the regular prep system. Now, if you look at the stock moves, you have seen a cyclical movement in terms of the overall stock. If you look at the key movements over the last 6 months, the stock has gained about 33-odd%, and over a year it has rallied nearly 11-odd%. But what's interesting is the rally which we are seeing in this particular counter since the lows from March. Since the March lows, it has has gained about 84 odd %. So that's something that remains a key focus of this particular counter and nearly doubled almost in like 3 to 4 months. Now we look at the Q1 cycle of this particular counter. The Q1 quarter was quite interesting and saw great momentum. Given if you look at the revenue figure, it's up nearly 42 odd % on YoY basis. And the top key reasons what led to the overall growth in the Q1 is the broad-based growth that we are seeing. Not just one sector or two sector, but all the sectors of the company have performed well in the Q1, and that's why we are seeing the up move coming in. If you look at the other key highlights, the overall commerce segment of the company has delivered well. It's up nearly 50 odd % on this is the growth I'm speaking about on YoY basis. But we also note that the overall enrollment crossed nearly 1 lakh. That's crossing the 35% increase on YoY mark. Further, we also see that the collections have increased in this particular quarter, which was slightly concerned earlier. It has increased by nearly 27 odd % in this Q1, and also the PAT has remained positive for the 6th consecutive quarter, showing the continued momentum cycle of this counter. Now, if you look at the segmental performance, we do note that the overall commerce grew the most, up nearly 53 odd %, while the government test prep grew nearly 41 odd %, and the K-12 segment of the company has also seen a growth of nearly 22 odd %. Now, well, the interesting aspect comes here in terms of the overall guidance by the management. While they remain bullish going ahead, and they also want to close FY27 with a revenue target of rupees 650 odd crores, with EBITDA of nearly 260 odd crores and PAT at 144 odd crores compared to the current level. Now, if you look at the long-term guidance by the company, they would want to target the overall commerce chain by roughly 1,000 crore revenue by FY30, and they target the overall commerce to expand its drop from in terms of revenue by almost 450 odd crores in the coming quarters as well. Last, if you look at the government test prep target, they target nearly 100 crores revenue from this particular segment with the EBITDA margin of roughly 40 odd % in next 4 to 5 odd years.
Lancelot, your view on Veranda Solutions, the stock performance has been quite volatile. Do you even see interest in any of the, if not this, in any other education stock?
So actually, Veranda is also looking quite interesting because given that their outlook is looking a lot better and the space seems to have stabilized a bit, we expect that they should be in a position to improve their EPS, to about 15 rupees per share, which would actually bring it down to trading at about 15, 16 times forward earnings. So that itself is a good sign of and a good entry point probably. But one needs to also consider that whether this improvement that we saw in the last quarter is sustainable over the next year or couple of years, because there's a lot of competition in this space, and we see various other players also getting into this business, and that could result in with the competitive intensity increasing, there could be more pressure on the margins going forward. So I think one needs to be a little cautious, but yes, definitely looks interesting at this point in time.
Okay, let's slip into a short break and we'll be back with more news on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done. If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Three decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change.
Welcome back. You're watching Small Cap Buzzers on NDTV Profit. Let's get in Shivam to understand what's been buzzing around with Canterbury Retail today. Shivam, what are you picking up here?
Yes, so Canterbury Retail, the stock has been gaining for the second straight session, and the volumes have also been growing strongly. In fact, the volumes in today's session has been up around 10 times to its 20-day moving average. So there has been no specific trigger for the positive movement today. But if you look at the Q1 results which the company has announced few days back, the results were on the positive side. In fact, the strong momentum has been continued from the FY26 year, and also the revenue growth that was mainly led by the strong execution and the store addition of around 15 which was been done in this quarter. Also, the same store sales growth has been around 4.04%, and the volume growth has been gone up by around 7 to 8%. That has also reflected the strong demand momentum in the market. Also, if you look at the average bill value, that has rose around 11%, and average selling price has also gone up by around 6 to 7%. Also, the financials, the revenue has been gone up around 13%, and net profit of the company has also gone up by 11%. So overall, the quarter has remained positive for the company, and the management has stated that the company is witnessing a positive consumer traction with also the store productivity improving, and also the positive demand environment and value fashion remains a core opportunity for the company. In terms of guidance, they are aiming for a revenue of around 1,000 crores for FY27, and in terms of EBITDA margin, they are targeting a EBITDA margin of around 28 to 30%. So overall, the Q1 results for the company has been positive, and this could be one of the reasons that we are seeing a positive momentum in the stock.
Okay. Lancelot, Canterbury Retail at current valuations, is it even attractive, or there are better retail opportunities there?
So I think, the retail space per se is in a very difficult place because, there's a lot of competition. There are various delivery methods that have opened out. Distribution has changed from being a store-based distribution to actually net-based and delivery-based, and a lot of these apps are selling their garments, etc. So I think you are seeing there is going to be pressure both on revenue as well as on growth, and there may be short-term, growth spikes. But when you are paying a higher multiple just because the short-term spike is unable to sustain over the longer term, then you will find valuations correcting steeply. So I think one has to be a little careful of the space. Overall space itself is in difficulty. And Canterbury Retail is doing better than most, but still one needs to be cautious at this point in time.
Well, as promised, let's get in the management of Entourage Building Solution. Manish Garg, the Executive Director and CEO, is joining us. So, firstly, to start off with, you have upgraded your FY28 revenue guidance, I believe, to close to around 2,700 crore rupees. What are the factors because of which you are this confident, and what is your current order book, which is also lending this kind of a visibility to you?
Sure. Good afternoon. Thank you for getting me on the show. So two reasons for us to have upgraded our future projections for 28. One is our heavy structure steel line at Andhra and our Gujarat new plant will be fully factored in FY28. We started the phase one of Gujarat last month. We are going to be starting the phase one of HSS trial production very soon. So number one is because we will have this capacity kicking in fully in 2028. That's one reason we will have capacity to service. Second is our order book was about 1,860 crores when we spoke last couple of weeks ago to the investors. And with very large orders like the one we declared just now for a huge FMCG player in south of India and a lot of other orders coming in, our order book is making us more than confident that our execution speed will also increase and our order book will be close to about 2,000 crores and growing. So these are the two factors, the major order wins as well as the capacity being created and available to us next year is something that made us confident to raise the 28 projections to 2,700 crores.
Right. Now, when it comes to heavy structures, that is being positioned as the next major growth driver for the company. So what is the kind of revenue and EBITDA potential that you're seeing specifically from heavy structures, say for the next couple of years?
Yeah. So heavy structure is, I should say, is an organic way to grow. It is being used for making different kind of buildings. So it is in the same space. But when we call our conventional business as pre-engineered steel buildings, this is the sections which are heavier than that. So it is used for multi-story buildings, be it institutional, commercial, shopping malls, particularly, data centers. So it's not really, I should say, a new line of business, but yes, it is a new manufacturing line capable of producing products which are mostly required by the multi-story and the institutional and the data center segment, which is growing very, very fast. And therefore, we wanted to set up the specialized plants. But it is not really a separate line of business with different EBITDA levels. But yes, since the capacity is going to get added to the extent of maybe 70,000-80,000 tons in next 1.5 to 2 years. Therefore, on an overall basis, it will make sure that we have a little bit of more operating leverage and then some basis points upside in the margins.
Okay. And when it comes to margins, actually, I was going to ask you that only. On the EBITDA margin side, what is the kind of number that the company is internally targeting, say, for FY28 or by the end of FY27? How much of an expansion can we see?
Yeah. So if you look at our Q1 results, our top line grew by 20%, but our EBITDA grew by almost 25%, as we can see on the screen also. So we are working on both sides. One is on our internal efficiencies, which is operational excellence. We are putting a lot of automation in our plants. We are working on bringing in technology to make us more efficient. So we are looking at internal efficiencies to take the EBITDA margins to the next level. And also on the market side, the market is very, very positive. And particularly for us, we are now championing in the large and complex projects for semiconductor and data centers and very big manufacturing units, wherein there is not much hyper, price competition. So we believe that a combination of premium pricing by some, percentage points, coupled with the operational benefits, should push our EBITDA margins a bit higher in 2028.
And lastly, sir, just wanted to check with you the capital expenditure plans and the fundraise that you're doing. How will that aid this on that front, if you could share some light?
Sure. So we are raising the QIP for 250, as you know, out of which bulk of it is going for our capacity expansion, which is a brand new plant in Gujarat, which is very similar to the plant one that we have set up with our internal laterals, and 2 heavy structure phases, which is HSS 2 and 3, because HSS 1 is ready. So you can say that with this about out of 250, about 190, 200 will get utilized for the phase 2 and 3 of the heavy structural steel and a new plant in Kheda, and all of it in next 18 to 24 months. So that is where it is being used to enhance the capacity, and the balance 50 crores of the QIP goes into the working capital and the GCP expenses. So it's majorly used for the capacity expansion to service the kind of order book that we have.
Thank you, sir. Thank you for joining us and giving us the way forward for Interaj Building. That was the management quite optimistic on the growth plans going forward. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A new Nepal, new possibilities. A new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you
Hello and welcome to NDTV Profit. I'm Sharad Dubey and you are watching Ask Profit Afternoon Edition, a show where we get to you all the stock related queries from our fundamental and technical guests as well. And of course, on the top of the screen, you can see the number. You can call in there or even message us from these numbers to get the entire picture of the stocks on your queries. But let's have a look at the market. What's happening here, and we have seen a good gap up opening and it is sustaining in the day's trade. We are near the day's high level, that above that 24,200 mark. Let's pull up the Nifty Bank and see what's happening there as well. Largely a good momentum coming in. Let's get in the sectors also, and after that we'll get to the constituents also of what's actually happening in the market. A good basket buying happening. Most of the sectors are in the green and no major sell-off happening. If you look at it, media, realty, IT and private banks all are doing well. Of course, we had picked out the trend for you earlier at NDTV Profit for the media stocks, and now a good momentum is coming in. Let's get into the advanced decline ratio also to show what's happening, in the broader markets, and largely a good SMID buying is happening across the counters, and that's almost 2:1 in the ratio of bulls. I'd like to point out the top gainers also in the Nifty or the entire Nifty chart. If you could get in the heat chart for the Nifty indices to show where the momentum is there, especially in the large caps. We see Eternal, Kotak Mahindra Bank and financials doing well in trade. A little bit of sell-off coming in, Hindalco as well, a little bit of concerns coming in. But coming back to our show, the Ask Profit afternoon edition, we are joined in by two guests. We have Jatin Kedia, he's the VP at Technical Research at Teji Mandi, and also Astha Jain, Senior Research Analyst at Haim Securities. Good afternoon to both of you. It's always a pleasure to start our conversation. Jatin, we'll start with you. The first query is coming in from Rajesh Sure from Hyderabad. Now he's asking about company Sansera Engineering and Azad Engineering, and this is a technical call. He hasn't asked for his key levels, but what would be the important levels to watch out for, Jatin?
Yeah, see, in the case of Sansera Engineering, the crucial support is placed at 3651 on the downside, and the resistance is placed at 4100. Overall, the trend is positive, so continue to hold on. In the case of Azad Engineering, the crucial support is placed at 2680 on the downside, and the immediate resistance is at 3000. Both these stocks are in an uptrend, and any intraday or a pullback towards its short-term averages should be considered as a buying opportunity.
Right. Another query is coming in, and this one, the name is not there, but this is John Cockrell. That's coming in from a sender, and they want to hold or exit. Of course, the period is a month, but fundamentally speaking, Astha, I want to get you on this. John Cockrell, how does this look?
Hi, good afternoon to everyone out there. So talking about John Cockrell's stock, first of all, it is a very high-end engineering company, and it is a very strong capital goods story. I mean, turnaround story, I should say, turnaround story in the capital goods space. The only problem right now is about the valuation of the counter, because the valuation is on very high side. Although their order book visibility is very strong, the kind of numbers they have posted were also very good. But the main problem is with the valuation, which is looking very high at this point of a time. And this company is basically, they are into the highly specialized steel, equipment, highly specialized equipment and systems, basically. And they provide these systems to steel producers. The only problem is with the valuation. So right now, my idea here is just to hold this counter and hold it for a long term. In the short term, we might see some sort of a valuation correction in the stock prices as well, but it is a good long-term story to believe on. So stay invested with a price target of 8,500.
Right, and next query is from Mamta from Bengaluru. And the question is, Vedanta 240 shares has been bought at around 303 rupees per share. The question is for the long-term average hold or exit. I just wanted to get your views again on Astha on Vedanta. 303 is the price. Currently, it's a slight dip, not that much also, but stock doing well technically. Your view on it long term, Astha?
So for Vedanta, long-term view is positive because we continue to see a traction in the metal space, and Vedanta being one of the major beneficiary with the kind of value unlocking they have done with the demerger, I think. And this company is a very good dividend giving company, we all know. So I mean, investors always like these sort of companies. So my idea here is that Vedanta, one should remain invested in the Vedanta for the long term. No need to exit from this counter. And in fact, even if anyone wants to do averaging, because here the cost price of our investor is 300 also. So averaging can be done, but not at the current level, maybe at the level of 260 to 258.
Right. Next query is from Puneet. He has 60 shares of, Euro Pratik sales at 247 rupees. He wants to increase his position or add more. Jatin, anything on the charts for this?
Sorry, the name of the stock, please.
The stock's name is Euro Pratik sales. And he has bought it at 247 rupees per share, 60 shares.
I'm not able to find the code. If you can help me with the code.
It's in BSE Euro Pratik sales, if you could just get this one. Yeah, this is the stock we're talking about, Jatin.
Yeah.
Good time to accumulate?
The support is placed at 248 to 244, so that would be a good level to buy. Currently, the stock is in a consolidation mode, and the previous swing low is placed in the range of 248 to 250. So I think around that level should be considered as a buy.
All right, so that's the query coming in for Euro Pratik sales. But another important query is coming from Nand Gopal, Bengaluru. He wants to know about Veranda Learning stock. Is it a good time to buy it for a 1 year? This query is coming. Of course, the stock is also buzzing in trade. I just wanted to understand Astha view for 1 year for Veranda Learning. Is there any special situation at play?
So for Veranda Learning Solution, I think this is one of the very good story. Just if we have to believe with the Q1 FY27 numbers, then definitely the numbers are on the higher side, because what we have seen is a 40% jump in their revenue. And in fact, the profit has shown exorbitant growth. So my idea here is on the back of very strong numbers. And for the most important part of this whole business is the kind of enrollments. So I think the enrollment number is around 1.04 lakh, if I'm not wrong with my memory. Then previously it was around somewhere around 78,000. So we have seen a rise of more than 30% in the enrollments. So enrollment is a very important indicator for this kind of a business, where we have seen a very strong jump. So my idea here is definitely this is a very good story, long-term story to believe on kind of the environment we are into. Like, because we all know that the government exam preparation, they prepare for government exams, etc. And my idea here is, yes, this is the story which we will be here to stay. So yes, one should remain invested in this counter for the price target of 280 to 290 in the short to medium term.
And next viewer we have is Virupaksha from Bangalore. Now they are holding 1,000 shares of Electro Steel Castings at 95 rupees per share. If you could get that chart in as well. And they haven't actually given their overall, timings, but I'm assuming this is for, you could say, a trade. Jatin, wanted to get your views on the counter. Is it looking like consolidation here, or is there something more?
Yeah, see, overall the stock is in a consolidation mode between 68 and 79 on the upside. So until and unless the stock manages to sustain above 79, my sense is that the consolidation is likely to continue. If someone wants to average, then 68 is a crucial support level. Yes, he can average at current levels as well.
So you can average it at current levels as well for Electro Steel Castings. Next question is from Siva from Amravati. Interestingly, he's holding 500 shares of Coforge at 1,800 rupees per share. Can he hold for 3 months? Jatin, I wanted to get your views on this.
Overall, our view on the outlook on the IT sector, and in particular Coforge, has been positive. Today we have seen a breakout above the 2-week consolidation. So yes, up move likely to continue in terms of upside. 1980 is the upside target that we are expecting. Support is placed at 1770.
All right, we have got an international query from Ireland. We have Sai Pranav has stated that he wants to know Zaggle for a long-term period of 5 years. Remember, the stock had taken a big beating and ace investor Vijay Kedia had acquired stake in the company, and the fall of 20% is literally negated in the last two trading session, and they have covered that up as well. 5-year view from Sai Pranav from Ireland. Astha, your view on Zaggle Prepaid?
So 5-year view is really positive for this counter, and my idea here is the kind of ace investor has taken entry into this counter definitely makes this counter an attractive destination to deploy the funds, and especially for the longer term purpose. So yes, one should hold this counter for 5 years, although immediate target can be set at around 220 to 230 odd levels.
Well, our conversation with international viewers continues. Interestingly, Hanish from Sydney has also messaged us, and he has asked, is it a good time to enter DigiLogic for one slot? I think the amount is pretty high, 24,500. We'll just check that. Actually, the stock is around 204 rupees, sorry, for 6 months to 1 year time frame. Do we have this stock, DigiLogic? And Jatin, your views on it, if you could get any? DigiLogic is the stock's name.
Yeah, I think it's locked in upper circuit today. It's around 204.60 if I have got the stock correct. So overall, the trend is positive in the stock, and if someone manages to buy or get shares, then he can continue to hold. The support is placed at 188. On the upside, 225 would be the near-term target.
Right, and another query coming in from Bhagya Lakshmi from Chennai, and the ask is, can Ship Rocket be held for the last 1 month or just a 1 month trade? Remember, it's a new listing also, so there is volatility, but a good buying is happening post the IPO also. Is there any juice left for a month's trade, Jatin, or do you think the up move has already been captured?
Yeah, since it has listed only yesterday, there is a lack of chart data for me to analyze. So I won't be able to comment on this stock.
Right. Sugar stocks is also something which is buzzing in trade, and this is a query coming in from one of the viewers of ours. Should they enter Balrampur Chini Mills? Is a good time to buy this? Astha, I just wanted to understand, because a lot of positional moves is happening. Tactical bets are coming on sugar stocks. We also mentioned almost 2.5 weeks ago already at NDTV Profit. But do you think there is more momentum left for sugar stocks, or is there something structural at play?
So I think already we have seen a very strong jump in today's trading session for these stock. Not only Balrampur Chini, but the other sugar stocks are also rising. And the most important trigger for all these sugar stocks is that the domestic sugar prices, which have already risen to around 8 to 10%, I mean, in past few months. And now the prices stand somewhere at around 4,400 to 4,800 per quintal. So, and these prices hold importance because they are at their 7-year high. So that is one of the major trigger which is just playing for all these sugar stock, and then we are seeing a strong rise. Now talking about Balrampur Chini in particular, they are having a very strong distillery capacity. Ethanol is positive for them. And I think Balrampur Chini is becoming very interesting with the because they are developing some manufacturing facility for PLA project. Now what this PLA? It is polyacetic acid, and this is a biodegradable project. So this is one of the major trigger which can work for the Balrampur Chini in long term. But in the short term, on the back of the rise in sugar prices, we have already seen sugar stock surging. So entering at this point of time is not making any sort of sense. Maybe at the lower level of around 700 to 680 to 690 can be the right level to enter.
The stocks have rallied. Not a good time to enter sugar stocks now when everything, the sector is overheated. But another query coming in from Vikram from Bengaluru. And now the stock's name is Transformers and Rectifiers. It's called Taril. As the average buying price is 291 rupees. That means, of course, there is a loss coming in, 1150 shares. And his query is, he's a long-term investor. The stock dropped from the 357 levels to 391, and now it's below his buying price. Should he add more or book the loss and move ahead? Astha, since it's a long-term investor, I have a query for Taril on this.
So my idea here is, first of all, what happens to this company, because it is power equipment story. We should believe on the growth of such company. But the problem is with the kind of valuation they are quoting right now, and on the back of that, if the numbers are not justifying to that extent, because in the Q1 FY27 also we have seen the improvement in the margins, profitability, etc. But the kind of improvement which should justify the value was not there. So my idea here is order inflow is very strong. They have got a unexecuted order book of around more than 6,000 crore, if I'm not wrong with my memory. So I mean, all these figures are indicating to a very strong growth story. But only problem is with the valuation, because valuations are at a stretched level. So idea here is that maybe it can correct more on the back of the valuation. So just hold this counter or average it at the lower price.
That's pretty interesting. Another query coming in from K. John Kottayam, and he has asked for how is Quality Walls. Can he buy 2,000 shares right now? He hasn't given his period of horizon. I'm assuming that this is a trading big because already the stock is up 14%. Jatin, good time to enter this stock or stay away?
Yeah, see, at the 14% high, if the stock is trading, then the risk reward is not favorable. Overall, the trend is positive. However, one can, look to enter the stock around 39.50 or around 40 levels where we have the breakout point. So today it gave a breakout and we can expect a retest of that breakout. So that retest of the breakout will give an opportunity to enter. The level is 39.50 or 40 rupees. So buy on dips, overall trend is positive. Upside is placed at 50 rupees.
Okay, buy on dip coming in for Quality Walls as well, sorry. But another query is from Ashwini from Chennai, and ask is the short-term target of Agarwal's Healthcare Limited. We would get this stock on screen. Stock is, around 500 rupees. It's trading. Jatin, any short-term targets, be it like a week target or a month target? What's coming on the screen?
Agarwal I, right?
Right, Agarwal I.
Yeah,
Agarwal Health, sorry. Agarwal Healthcare I'm talking about. It's in NSE, yeah. Dr. Agarwal's Health, yeah.
Yeah, so I think the stock has formed a double top at the 560 level, and thereafter it has been correcting. So the crucial support is coming in at 475, 470 levels. So I think there is still more downside to this stock, and thereafter the stock can resume its up move. So as of now, continue to hold with a trailing stop loss at 470.
All right, that's the important levels to watch out for Dr. Agarwal's Health. But let's get into the speed mode. Rapid fire round is there. Jatin and Astha, we require faster answers and we'll getting as much queries as possible for our viewers. The first one is, of course, Nishant coming from Gurgaon. He's looking out for a stock in the water supply and management sector, and he wants to allocate 5 to 8% of a lump sum position of his portfolio. Astha, your view on it? Any good pick in the water supply and management sector?
Of course, Vatek Vabag is one of them. Then I think there are a few good companies. Enviro Infra, if I'm not wrong, it is also one of the good company in that space. So, but I would like to go with Vatek Vabag.
Okay, now we have Bablu Thakur from Indore. He's bought UPL at 575, 1480 shares. Should he hold or sell? Jatin?
Continue to hold with a trailing stop loss at 550, upside target 600.
Okay, Aniket from Pune has come up with two semiconductor stocks. Moship, he has roughly 50 units at 181, and Spell is also there, which is at 149. Can he hold both Moship and Spell, both of these counters? Astha?
Yes, definitely. A hold is recommended for both these counters.
All right, Lavanya from Eluri also comes with a query holding 300 shares of Paras Defense at 1528. What kind of short-term targets we can get, Jatin, for Paras Defense?
Paras Defense can rally up to 1625. Support is placed at 1380.
Right, interesting query coming in for Dalmia Bharat also. 1718 is the buying price. Should there be a sell or a hold? Astha, your view on it, Dalmia Bharat?
Hold with a price target of 1950.
Okay, 1950 is the target coming in. A good time to buy Apollo Hospitals. Shrujana from Chennai is asking, what's there on the charts, Jatin, for Apollo Hospitals?
I'm expecting weakness towards 8,200, 8,000 levels. So exit or don't buy at current levels.
Now we have Shaunak Kulkarni from Mumbai. Now they have bought the Tata Motors PV at 351. 1450 shares is there. Should we hold or sell? Jatin.
Yeah, the trend is negative. Sell would be the recommendation. On the downside, 306 is the target area.
Astha, long-term query coming in for Dynacon System Solutions. 50 shares are bought at 1195 rupees. Good time to hold or average out. This is for long-term investing. Astha, Dynacon System Solutions.
Just hold with the price target of 1250.
Okay, just hold with a price target of 1250. Interesting name coming, Lohia Corp. First quarter numbers are very strong. That reaction we are seeing also on the screen. But on the technicals, Jatin, what does Lohia Corp suggest?
I think it's a recent listing. We have very little data to analyze. So 526 is the support area and the immediate resistance is 585.
A little bit of profit booking coming in the counter. Another interesting ask is from Raghunathan from Bengaluru. 3 companies, WeWork, Office, SmartWorks. Out of these 3, which should be there for long-term investment? Astha.
I think for the long-term, Office is looking good because the kind of news flow which is getting into this counter is making it more attractive.
Okay, that's pretty interesting. Another viewer, 25,000 shares of IRB for short term. Of course, Jatin, what is it looking in the charts for IRB Infra?
The trend is still negative. On the downside, you are expecting a dip towards 16 rupees. So exit would be the suggestion.
Okay, exit coming in from this counter IRB Infra. But Pakshal Jain from Jodhpur has come out with its 2 picks, Trent versus Vishal Megamart. That's what I'm seeing for long term. Either of these two, Astha, which one will be better for Pakshal?
Valuation wise, Vishal Megamart is more better.
Okay, so that's the end of the rapid fire round, and we had an interesting set of companies being discussed. Thanks a lot for that, Jatin and Astha. We had roughly 90 queries answered today in our Ask Profit editions, which also includes the afternoon edition. Thank you very much, both of you, for joining in and giving your technical views as well as fundamental views. And we'll just do a short market check also on how things are panning out. And then we'll, of course, give you the entire picture of how the markets are moving. Markets are relatively stable right now. The Nifty is up almost 150 points. Nifty Bank also showing that good strength going ahead. Apart from this, if you look at it, there is a good momentum in the markets. So now we are short of time. That's all, folks, for us at this channel, at this show. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets.
Hello and welcome to India Market Close on NDTV Profit from the NDTV Profit Suzlon studio with me, Heeral Dadia, and Mahima Vachajani as always. So I'm the new one today. But clearly, in terms of markets, a very interesting day of trade after that lackluster moves, Mahima, that we've seen in the last couple of days. The question is, I wouldn't really call this very strong momentum, but there is that little positivity with 0.7% higher. We're trying to go towards that 24,250 mark. And if you see in terms of Bank Nifty as well, gains pretty much in line with what you're seeing on Nifty 50.
Yeah, absolutely. And the psychological mark that we were talking about yesterday has not been breached, thankfully.
Correct.
So 24,200 levels above is what we're trading at. The broader end of spectrum is also looking very positive. If you take a look at the mid cap 150, it's up, mirroring the benchmarks, almost up by about 0.5 odd percent. The small cap 250 doing even better because it's up by about 0.8 odd percent. Even the advanced decline ratio is going to be an interesting one to watch out for.
Yeah, if you can just get the intraday, because
intraday, yes,
your advances are kind of double your declines, and you can see what's happening. But if you go to see from opening, that gap has slightly narrowed right now, right? So that's telling you where the breadth is actually moving towards. But 1800 versus 983 on the declines. Let's just look at the heat map on Nifty 50 and see where is the action today. From where we started off, again, more of green as we're seeing. You just have around 10 counters on Nifty 50 which are trading in the negative. And what's down is Hindalco. And this is for obvious reasons, where it's the Novelis pressure which is coming in on the back of the trade deal between US and Canada. You have Apollo Hospitals, Tata Consumers, Tata Steel, Nestle, a lot of your Tata Group companies. So Tata Motors, PB, Tata Steel and Tata Consumer. Three of them are under pressure. Few of your consumption names are under pressure. Indigo is down 0.5%, not that much. But this is because crude has spiked to $92, $93 per barrel. Apart from that, what is interesting, Mahima, is eternal to me right now. 2.5% up move, and few of your financials.
Yeah, and Eternal has continuously climbed in the last so many days, right? Since its earnings has come out, it's been on a constant high, and it's making that high pattern in the charts also.
In fact, let's just get an intraday, or let's just get a 1 month or even a 5-day chart of Eternal to see exactly what Mahima is talking about. If we can just get Eternal there, and you'll see, look at that, absolutely. Those higher highs and a 14% up move in the last 1 month, and that's a strong momentum with regards to Eternal. Can we also have a Swiggy 1 month chart, because that will tell you what's really happening between a Eternal and a Swiggy right now?
It's the other way around.
There you go. 3.5-4%. So you know where the moat is between a Eternal and Swiggy. But let's get back to your Nifty 50 contributors, and then we'll look at the sectoral heat map as well very quickly. In terms of contributors, it's interesting to see a HDFC contribute to the positive today. Bharti Airtel, Eternal is contributing, and ICICI Bank. So it's your private banking space which is doing the trick today. Hindalco, Apollo Hospitals, the same names, but it's just 9 points there versus 175 points. So HDFC, Bharti Airtel and ICICI Bank the three major winners there. Let's look at sectors, Mahima.
Yeah, and the breadth, exactly what he was pointing out for the Nifty 50 is very strong. Just the defense in red and the entire screen is in the green. It's good to see that for sure. But you have, of course, Realty and Media topping that chart. Realty is back in action today. IT for the second day in a row is doing well after seeing the 2 days of profit taking coming in. But something like an oil and gas is almost flat. PSU banks is not contributing much towards that gains coming in on the banks. Private banks are doing very well as compared to that. There you go, topping that chart almost up about 1%. But FMCG, there are counters that are doing well. There are counters which are under pressure, but largely not from the Nifty 50 that are contributing to that gains coming in. Overall, that's how the sectoral heat map looks like.
I think the broad idea today, what we are seeing is that at lower levels, you're seeing that buying interest which is coming back in the markets. And the moment you see that higher high, there will be some bit of selling pressure which builds up on the top. And that's the strategy that investors are watching out for. And again, on the derivative side, on the back of cash, you are seeing volumes on the prop trade books also, which are dwindling. In fact, let's get in our guest. We have Rajesh Palvia as well as Pankaj Pandey, both of them joining us. Pankaj, welcome to the show. Always a pleasure to speak to you. You're seeing some, positivity in terms of markets today after those lackluster moves that we've seen in the last couple of trading sessions. Now, would you say any of these bounces should be used as an opportunity to book profits in any of the names that you would have bought probably at the lows, or even this should be used as an opportunity to actually start accumulating now?
Yeah, hi, good afternoon. Thanks for having me. See, overall, when we sort of look at market Nifty levels, again sort of stuck in a range, so no major directional moves. And I think till the time crude does not settle down lower, we would continue to sort of oscillate in a particular range. When you sort of look at Nifty Next 50 or the mid cap and small cap, and that is where the excitement lies, and that is where we have seen a better set of earnings also. And I think a good part also is that when you look at the FPI flows, so first 15 days of this month, the FPI flows have been positive. And very interestingly, it is coming into sectors like, say, for example, financial services. We have consumer services, which is your new age companies. We are seeing inflows. So I think inflow-wise, things are also positive. Now, our sense is that overall, since mid-cap and small caps have made a new high, so individual stock level call can be taken. But structurally, we would want to believe that things should incrementally improve from here on. I think after 6 quarters, we have seen one of the best earning seasons. Probably second quarter or next quarter, we might see milder pressure on the margin side. But overall sense is that the earning trajectory is expected to be in double digits. So this is not a time to sort of exit the markets, and I think wherever opportunities are there, we have been sort of suggesting people to sort of accumulate or buy.
Okay, accumulate or buy at this point of time is the view coming in from Pankaj. But Rajesh, a very good afternoon to you as well. We were talking about how 12 days straight Nifty was kind of forming lower highs, and that's been broken today. So that's a good sign for sure. And do you think from here on this upward movement could continue? And if yes, what are the targets that you're watching out for Nifty 50?
Yeah, hi, good afternoon. So, yeah, after, corrective move of last 10, 12 days, there is a sign of recovery from the market. And again, Nifty able to move beyond again 50-day moving average, though we have broken 50-day moving average in the previous day. But again, we have again regained above that level. Looking at the data setup also, most of the put writing activity has been visible around 24,000, 24,100 strike in the previous day session also. So I think towards the end of this August series, we might see some more pullback action to play out, though 24,350 to 400 is likely to act as a stiff resistance for this pullback. As major call writers are still confident around those strikes. So major short covering will play out about 24,400 only, and I think for this expiry, I think it looks like little difficult to cross 24,400 until any major positive news not played out in next couple of days ahead of expiry. So range bound activity for next couple of days towards 24 100 on the downside, 24,400 would be on the higher side range. But Bank Nifty has taken the support from the important level of 57,100, 57,000 put base concentration, and some recovery is taking place in banking stocks as well as Bank Nifty. And structure is indicating that, maybe we could see some more continuity of this pullback in Bank Nifty. 57,800 to 58,000 would be the next level for Bank Nifty if it continues to trade above 57,300. So here we may see some recovery, and some of the pockets like automobile, pharma, new age company, and these all companies are showing a sign of strength. So here we may see more continuity of uptrend.
Okay, so Bank Nifty is where the moat is. Rajesh, good afternoon. Hiral on this side. What would your top picks then be? Does any of the financial name fit into your bill?
Yeah, so definitely from financial at this juncture, we are focusing more on the capital market theme. But yes, from the banking space, if someone wants to take some bet on the banking space, one can look at RBL Bank as well as Kotak Bank. These two banks are looking promising for near-term trading perspective. For RBL Bank, we believe that this stock has potential to extend again towards 405 to 410. So here one can buy and accumulate as stock is comfortably holding it to a 20-day moving average support area. So RBL Bank could be outperforming stock for near-term trade. On the downside, 384 needs to keep as a stop loss. And another sector, as I mentioned about automobile. So I think here also there are opportunity in automobile. Hyundai Motor, Eicher Motor, these two stocks are looking promising. We believe Eicher Motor has potential to extend again towards 8,300, 8,400. So here also one can deploy some long trade with stop loss of 7,950. And for Hyundai Motor also one can look to buy. We may see more upside in this counter, and 2,400 would be the positional target. On the downside, 2,160 needs to keep as a stop loss.
Okay, all right. So that's two picks coming in from the auto space. Eicher and Hyundai Motors are both trading, by the way, at today's high point. But it's time for our stock of the day section, and today the stock that we've chosen is Strides Pharma. Now, if we can try to pull up the stock, it's of course come off from the day's high point, but it's been surging in trade, and this is after it receiving the closure of the US FDA inspection that took place in its Bengaluru facility, with regulator classifying the inspection as voluntary action indicated. And Varsha, who tracks this very closely, is joining us to give us more perspective on what has happened and what's the development here. Varsha?
Well, it's a good news for Strides Pharma because the Bangalore unit receives US FDA EIR, that is Establishment Inspection Report. Now, Strides, so they earlier, if you see in inspection, US FDA had issued 5 observations under Form 483, post which Strides submitted corrective action response within timelines, and hence post that US FDA classified the inspection as voluntary action indicated, that is VAI, which is a positive one, and hence inspection has been closed and the key overhang has been removed. Now this is the news. Now why this is important? Because the Bengaluru plant, if you see, is company's largest manufacturing facility, number one, and also plant supplies medicines to regulated and non-regulated markets. Even they manufacture tablets, capsules and oral liquids, and hence if you see, this supports sales across more than 100 countries. But Strides' story is beyond US FDA clearance. The bigger story over here is, number one, FY28 aspiration is intact. They've reiterated FY28 North America target, which is at $375 million. And hence, so they are continuing to see path from $285 to $375 million when it comes to North America market. Also, H2 FY27 is expected to be better than H1. That means Q2, you might see some kind of pressure, which we saw in Q1 also, but growth is expected to come from approvals when it comes to H2 FY27. Talking about 100 plus product opportunity, so more than 100 products are yet to be commercialized, and hence Strike is actually banking on them. Large launch pipeline remains available with the company. They are not chasing market share at any cost. Talking about controlled substance, which is a key growth trigger for this company. So controlled substance are drug which is strictly regulated by government, and hence they contribute only 5% today. But company expects this business to scale meaningfully, and already has 20 months of sales history when it comes to this product. Lastly, ex-US, which is everybody is actually banking on US, but Stride's story is beyond US market. So which grew almost 17%, is growing faster than company's average and also contributing to margin expansion. So control substance and beyond US market are some of, and 100 plus products are some of the key triggers for Strides.
Okay, Varsha, thank you so much for putting that into perspective. Pankaj, you heard Varsha say the triggers for growth for this company going forward. Would Strides Pharma be, one of your picks in the pharma space? And if not, what is it that you're liking in, pharma space specifically?
So, Mahima, Strides Pharma we don't cover, but what we like say in smaller pharma companies is one is Sakar Healthcare. I think this company has invested about 200 crores in the last few months, and the oncology business is something which is expected to sort of do very well for this company. I think currently sales is about 100 odd crores, and we would expect it to sort of jump up to somewhere about 300 odd crores in the next few years. So this looks good to us because they are one of the exporters for both APIs and formulation. So from an export side, this small cap company looks attractive to us. From a domestic perspective, what we like is RPG Life Sciences. RPG Life Sciences largely because 70% of the revenues is coming from the domestic side, plus overall sense is that they can continue to sort of deliver high teens given the fact that the domestic pharma itself growth has improved to about 14 odd %. And they have a higher chronic share as well. In addition to that, I think they have onboarded a PE investor for their API business. So that is now valued at about 680 odd crores. So API business also is taking good, interesting shape. I think overall we have a target price of about 3,300 something, 3,340 on the stock.
Okay, so interesting names coming in there. In fact, very quickly, Rajesh, from the pharma pack, anything that you like, because a couple of counters which have been on an uptrend as well, there is a little bit of momentum that's picking up there.
Yeah, I think Glenmark Pharma is looking quite promising, and the post-earning stock has absorbed all the supply pressure and now comfortably trading above 2300 mark. I think if it continues to trade above these level, maybe we could see another 4 to 5% kind of up move in this continuation of this up move. So 2400 to 2420 we are projecting target for Glenmark going forward. On the downside, 2280 needs to keep as a stop loss. And another stock where we are holding bullish view, that is Divi's Lab stock, has already broken out. Long-term charts are already shown a breakout. Looking at across all time frame, we do believe that stock may exhibit furthermore upside. Possible upside towards 8800 to 8900 we may see in this counter towards in a couple of weeks. So one can buy and accumulate Divi's Lab also. On the downside, 8350 needs to keep as a stop loss.
Okay, so that's with regards to Divi's and Glenmark. In fact, Glenmark, if I'm not mistaken, did get a US FDA approval as well for a nasal spray today. And that's since then the stock has been up and about in trade. But moving on, it's that time, it's almost 2:45 where you get Somit Sarkar, who joins in with all the chatter from the dealing room. Somit, good afternoon. What's on the list today? Because there is some momentum in the markets as well. Lots buzzing.
Good afternoon, Hiral. A lot of stocks that have been buzzing in dealing room. The first one is on Unimake. Now, dealers are indicating that there could be a potential fundraise via QIP that could open soon for this counter. For CMP DI, the dealers are indicating that the selling pressure is largely over in this counter. A large DI was a seller here, and that is likely to get over soon. And dealers expect the stock to bounce from current levels. For KFinTech, a block deal took place today, and dealers are indicating that among buyers, Invesco and Mirai Mutual Fund were among the anchor buyers in this block deal, and few positional quantities have also been bought by hedge funds, is what dealing rooms are indicating. For Zydus Life, there are buy flows on the FI desk. Delivery volumes are expected to be on the higher side. And when it comes to DCB Bank, that stock is up nearly 4 odd % in trade. The buzz on the street is that some PE investor, private equity investor, might look to pick up stake in DCB Bank. So keep an eye out for this counter. And lastly, when it comes to Amrutanjan, block deal of close to around 45 to 50 odd crore took place in market today. Dealers indicate that this was largely a change of hands among mutual funds. DSP was most likely the seller here, and ICICI Prudential was the buyer of this chunk. So keep an eye. The bulk and block deal data would be important to track today.
Okay, all right. So Amit, thank you so much for getting us those details. Interesting names, propping up in that list for sure. But let's also try to focus on, because it's been an IPO heavy week, and we've seen a slew of IPOs come in, and a few of them to come very soon as well. And Tempson's Instruments is the one that we're putting spotlight on. Just to give viewers a perspective, it's open today, and the price band is set between 285 to 300, and the total size of this issue is around 650 odd crore, of which 95 crore is the fresh issue. But let's try to get in the management to get some more perspective as to what the plans are, going ahead, and what sort of fund deployment is going to be made via this IPO. We're joined by Vinay Rathi, who's the managing director at Tempson's Instrument, and we're also joined by Aryan Rathi, who's the lead global sales at Tempson Instruments, joining us now. Welcome to both of you, gentlemen, and very good afternoon to the both of you. Thank you so much for taking the time. I think my first question to you is going to be with regards to how your revenue growth has fared for FY26, because it's moderated from where it was in FY27 at 37%, but the growth has come down to around 17%. What were the key reasons behind this one? And going forward, what is the kind of CAGR growth that that one can expect in terms of where your top line goes? Vinay, I think I'd like you to answer this question.
Sure. Thanks. So we have had a amalgamation and some acquisition in that year. So that is why the growth rate is higher in the last year. And the typical growth rate of the company would be in the line of whatever we have had in FY26. So that would be kind of continuing further. So that is what we see. The company is in the business of making temperature sensors, electrical heaters, and specialized cables going to all kind of industries. Also, we are exporting to 80 countries. Also having factories outside India, there are 5 factories outside India. So we see that a good possibility in these kind of specialized instruments and electrical heating equipment what we manufacture. So we see a good prospects worldwide.
Okay. Vinay, good afternoon. This is Hira on this side. Now, I'm just looking at your revenues, very strong growth, and as you mentioned, the reasons as well. If you have to look at FY27, what percentage of your revenues is backed by executable orders or contracts? And 2, how resilient is that order pipeline if there has to be some bit of a slowdown coming in on the industrial capex side?
So the thing is, our revenues are dependent about 70% on the capex cycle, and the rest is on the replacement demand for the sensors or the electric heaters that we do. And we are working with all kind of industries, be it cement, steel, power, petrochemical, glass, nuclear, space. So we are not dependent on one capex cycle. So the company has seen multiple cycles in different industries and has grown with a similar kind of growth rate in past multiple years. So we see that we are not dependent on a particular industry or a particular capex cycle. So we think that it's a very diversified product and a market portfolio what we have. Also the kind of business we cater to. So we don't see a problem because of any capex cycle or anything.
Okay, so that's on the top line. What about your profitability? Because that is also impressive. Are these margins sustainable, or they're just benefiting from a strong industrial cycle?
So a major differentiator is the R&D for us. A lot of products that we, about 80 people working in R&D, 11 patents granted to us, a lot of products that we do. So worldwide, there are very few competitors. And we would be the only manufacturer for some of the products in India. So that is a differentiator, that specialized products are offering us higher than regular margins from any engineering industry.
Aryan, a quick question to you as well. Your exports have been growing rapidly. Give us more sense as to what is the ratio like right now in terms of domestic sales versus what you export, and what is going to be the next leg of growth looking like when it comes to your exports, and what geographies are you going to be targeting?
For sure. So we 30% of our revenue comes from international geographies.
and that revenue part of the revenue has been growing faster than what we've been growing in India. And we expect that growth to continue because we are setting up, offices and plants in newer geographies like South Korea, Poland, Mexico. So they'll be major growth drivers for us. And I mean the existing geographies, especially Middle East and Europe, to also be in line. So we are growing on all fronts and capturing all kinds of cycles across these economies.
What's the customer concentration risk that you're sitting on? I mean, what quantum of revenue is coming from your top 10 customers? If you could help us understand on that front.
Right. So about the top 10 customers only contribute about 18% of our revenues. So we are incredibly diversified there. We have about 3,800 plus customers across varied geographies and varied industries. We are not dependent on a single customer or a single set of customers. And these customers, are dependent more on the kind of projects they have. And of course, they come back for their MRO requirements always.
Vinay, just one last question from my end, because for you, your major raw material is both copper and nickel, and we've seen as to how prices for both of these have shot up quite a bit. So wanted a sense in terms of how much of this price increase in terms of raw material or inflation that you see can be transferred for you, and how much of it do you retain for yourself and that hits your margins?
Yes, so our items are going to project and the MRO business as we discussed, but these are like short cycle orders, and everything is make to order. So we don't have a very large and a long pipeline of orders with the customers, and these products are coming in the fag end of any project. So typical order book is like maybe 4.5 months for us. So whatever is the cost of the commodity at that point of time, that is priced in for the customer. And for some of the orders, we also have got a price variation clause, which can be passed on to the customer in case of any price increase. So we are not really affected by the commodity price increase to a large extent. Maybe there would be a smaller bit, but to a large extent, we are quite insulated from that.
Okay. A quick question over here. One, with regards to where the valuations are standing in terms of the money that you're looking to raise, what earnings growth, according to you, you will have to deliver over the next 3 years to actually justify the current IPO valuations, number one. And two, in terms of even if you have to look at the working capital cycle, that is also stretched at 210 days. Do you see that narrowing? Vinay?
Right. So on the growth side, we believe that we are, fairly valued there, and our growth should continue across the three verticals. We have many, projects that are going on that should deliver this kind of growth. And on the, let's say, working capital side, what you see in the book is kind of an aberration. At the end of FY26, we acquired some companies and their balance sheets got amalgamated, but their incomes didn't. So that is why the working capital in theory has shot up, but it should normalize to the historical levels in FY27.
All right. Okay. Vinay and Aryan, thank you so much, for taking out the time, and all the very best. We look forward to speaking to you once you get listed.
Thank you. Thank you.
All right. So that's, of course, the new IPO that's open today. Pankaj, just the way last 2 weeks have been in terms of primary markets, right? It's been a very strong action, and one of the reasons as to why we were seeing, the secondary markets being muted was because a lot of money was flowing in the primary markets, right? From all of these IPOs that have come in, anything in particular that you have liked, where valuations have looked attractive, and you think that could be a great multi-bagger in the next coming years?
So we have discovered one, but incidentally, I think the IPO is going to open next week, so I can't really sort of disclose the names. But in general, overall for IPOs, we typically prefer to sort of a cooling period of say 1.5 to 2 years, because typically whenever the IPO comes, you are seeing one of the best numbers. So we would prefer to sort of, when things sort of cool off, and that is when we sort of prefer to sort of look at a stock from a fundamental perspective.
Okay, all right. So that's the view coming on a lot of these IPOs. But Rajesh, Balrampur is one of those stocks that's done very well in trade today. I mean, yesterday you saw a lot of sugar companies doing very well when it did nothing per se. It was muted. But today it's seeing a gain of almost 18, 19 odd percent in trade. And when the earnings came for this one, it almost tanked by about 15 odd percent. So it's recovered quite a bit from there as well. What do you make of Balrampur on the charts? Do you think this momentum could continue from here on as well?
Yeah, definitely. So very strong breakout took place in Balrampur Chini. Even most of the sugar companies are also, attracting buying interest. Even if you look at Uttam Sugar has also, managed to move around 10% in intraday perspective also. But looking at the Balrampur Chini, yes, we do believe the kind of breakout which we are observing on daily, monthly, weekly time frame, we believe that, if it's able to sustain above 755, 760 mark, I think next up move towards 820 we could see in the near term for Balrampur Chini. So one can hold on the position, trail is stop loss at 755.
Okay, so that's with regards to where the sugar pack goes. In fact, Balrampur Chini at the day's high is 18 to 19% is the kind of surge coming in there. But moving on, let's pull up a HEG on the screens because the NCLT node has come in when it comes to the demerger. Not doing much in trade today, but let's just pull up a 1 month or even a YTD chart of HEG and you will see the kind of gains that have come in for all the graphite players. There you go. I mean, that surge from July lows to now has been spectacular. Though in this year, it's been a topsy-turvy ride. I mean, 13-14% is the kind of surge coming in there. And this clears the way for two distinct businesses. We have with us Riju Jhunjhunwala, Vice Chairman of HEG and Chairman and Managing NMD and CEO at RSWM. Welcome to the show, Riju. Always a pleasure to speak to you. My first question coming to you is now that the NCLT node that has come in, what are the next steps and what are the kind of timelines that you're looking at with regards to where the demerger goes?
So thank you. So the NCLT node has come and in the next 1 or 2 days, we'll receive the formal written order. I think we should have our board meeting somewhere around, the last week of this month and somewhere around the first week of September, we should see the record date setting for the new company. And then for HEG, for the graphite company to be relisted, it will take another 45 days because you have to go through the fresh filing with NSE, etc.
Okay. Riju, hi. Mahima also joining this side. I want to understand the rationale behind this one as to what kind of value creation opportunity does this create for you, separating the two companies, and then wanted more sense in terms of why have you chosen this as a time to separate these two? What is it that you're seeing that both of these companies can separately do?
So HEG graphite is, as you know, we are in the graphite electrode business, which is used in the electric arc steel making. And that business is totally debt-free, and we are the single largest plant in the world, 100,000 tons and growing to 115,000 tons. And in the new company, under HEG, what we were doing is putting up India's first plant for supply chain for the lithium-ion battery plants parts. This was the graphite anode space. So this was being done under HEG. HEG also held 40% in our group's green power initiative, which is 300 megawatts of hydropower. So to value, the unlock value that you're talking about is basically to bring a sharper focus of one company being totally on the graphite electrode space and playing there. And the second company, which was in the business of, advanced materials, so to say, absolutely cutting edge or to advanced materials led by R&D, etc. And towards that, we are putting up the first 20,000 ton anode plant of graphite powder in Madhya Pradesh. That plant is around a 2,200 crore capex and would be in production by April next year. Apart from that, we are also trying to do things with other complex materials like graphene, etc., where we are seeing a lot of success of our last 2 years R&D. And also, this new company will have 100% stake in the power asset, which is a 300 megawatt power hydropower, which gives us a EBITDA of around 350 crores every year. So two separate companies, one with complete focus on advanced materials and green power, and HEG as a company with complete focus on graphite electrode space.
Okay, Riju, that's interesting. Let me come in from an investor perspective now, because I'm sure any investor would actually want to know what is it that they get as benefits on the back of the demerger. So basically, one, how will the capital allocation work independently between the two companies, and which businesses will require greater investments over the next 3 to 5 years? And two, from a tangible benefit perspective, what should a shareholder expect from this restructuring in the next 2 to 3 years that they wouldn't have received in the current structure without demerging?
So in terms of capital allocation, I mean, HEG is a debt-free company, and as part of the demerger, HEG has the new company will also have 800 crores of cash, plus the cash available with the hydroelectric power plant. So around 1,500 crores of equity for the new company to follow its growth path. And in terms of, what is it in it for the investors? Every investor is going to receive 1:1 kind of shares for HEG and for HEG Advanced Materials. And then the two companies follow their own growth paths. So graphite electrode, as you know, I mean, it's a cyclical business, a highly profitable business, but very cyclical. And we are seeing now, the last 2 years have been on a kind of a down cycle, but now with the increase in electric arc furnaces, etc., we think that we are at the bottom of that cycle. So whoever wants to take part in the graphite electrode space is free to focus on that. And whoever wants to take part in, India's energy transition, the lithium-ion battery supply chain space, there we are giving up an option of participating through HEG Advanced Materials, which will be one of the first companies of its kind in India to start physical production of lithium-ion battery-related items.
Riju, in terms of capacity additions for both of these businesses, what is the outlook looking like? Because, especially for the graphite business, we've seen in the recent past that there has been a significant amount of capacity addition that China has also been doing. So when you put your business versus where the global presence is already there, what kind of capacity additions are you looking at for the graphite business, as well as for the green tech business also? What is that number going to look like? And then what your return ratios will also indicate post that additions?
So in graphite electrode, you see that there are only 5 companies in the world excluding China, and two of them being in India, and the balance 3 being in the western part of the world. And China, of course, while you can't write off China in anything, but China is present in the lower quality graphite electrodes, which are used in the smaller size electric arc furnaces. So the UHP electrodes, what we call the ultra high power electrodes, they are produced more by the Indian companies and the Western companies. So over there, we are not seeing much of a competition from China. In fact, we are seeing good price rises coming over there in the last 2 or 3 months, and the next 1 or 2 years so should see some good cycle there. In the anode space, it is completely the opposite. I mean, China produces 95% of the world's anode material for lithium-ion battery cell. And our plant in India will be the first one of its kind, which is why we are seeing a lot of interest from a lot of global companies, the tier 1 OEMs, the different cell manufacturers, because everyone in the US and Europe, they want one more source apart from China. They don't want to be 100% dependent on China for their buying of such a critical material. So over there, a good traction we are seeing there already before the plant is commissioned. And by April, this plant would be commissioned, and then we'll be looking at how to, grow that particular business quite differently.
Got it. So I think lots to watch out for. In fact, the stock trying to make its way higher today, Riju, as we speak. But thank you so much for joining in. It's always a pleasure to speak to you. A good recovery coming in from the day's lowest levels in terms of where HEG goes. Let's also pull up a Graphite India, because usually you see both of these counters moving pretty much in tandem. Though today that stock is absolutely flat. If you can just have a 1 month chart of both HEG and Graphite India to see if there is any comparison that you can make, or where is the moat and where is the interest, that will clearly be shown. If you can just have, there you go, 1 month, almost a 20% up move on a HEG. Let's pull up a Graphite India. There you go, 12 to 13%. So you still have a Graphite India that needs to play that catch-up rally with regards to both the counters. But we'll quickly slip into a short break. On the other side, we'll get you the top buy today and sell tomorrow picks as well, only on NDTV Profit from the NDTV Profit studio with Mahima and myself.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Three decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro.
Welcome back. You're watching India Market Close here at NDTV Profit, and on this side we're joined by Amodev Singh, Senior Vice President Research at Angel One, and Vinit Borinchkar, Head of Research at Ventura Securities, joining us now. Good afternoon to both of you, gentlemen. Generally we start with the technical guests first, but Vinit, let me come to you first today, because I was looking at this data point where we are seeing that August is on track to see the highest net FPI inflows, and this is after a really long time, since September 2024 sure that we would be probably seeing this. When you're seeing this inflow coming in from FPIs, what pockets do you think are showing strength right now, and where you would put your investment bet in right now?
See, right now, I think, the numbers were very strong for Q1. And in contrast to that, Asia is not doing well. So obviously, we are getting a lot of the trickle supply coming in from investments. And I think that the FMCG segment is going to be one of the biggest outperformers, because for 2 consecutive years, we are hearing very positive commentary. And a lot of things are stabilized out there. Pricing power is returning. And we are seeing a lot of distribution outreach from all the players to, as they are expanding their networks, pan-India, going into tier 2 and tier 3. So I think a lot of growth is going to come out there from this segment. And so we remain very, very strong buyers in this segment.
So, in fact, that sector is at the day's highest levels as we speak, almost 0.8% higher. The question is, are there any buy ideas that are coming in? Let's ask Amar on that one. Amar, we're talking about the FMCG pack. Anything on the charts that you like where you're seeing a further momentum?
Yeah, I would say FMCG definitely we've seen. See, we need to understand that this sector and the stocks in these sectors, they've corrected significantly. So we are witnessing a decent bounce back. And also one of the stocks which I wanted to talk about today is from the FMCG space. The stock has been hammered significantly by almost 30-35%. That's HUL. Currently, it's around 2040 odd levels. So what we see is that very likely the stock is forming a very strong bottom here. And the stock has a potential to rally. So the worst might be over for this stock as well. And so this is one stock one can look at. From a short-term perspective, for an upside target of 2147, and with a stop loss at 1987. So currently buying at the current levels all around 2030 odd levels. So FMCG, yes, we've seen some positive momentum, and this is one stock which has been lagging, but now there is a very high probability that we could witness a pullback in the stock from these levels.
Okay, all right. That's with regards to where some of these FMCG names go. But what sources are telling NDTV Profit that the NSE is exploring trading of its own shares on its own platform. So that's going to be an interesting one, and probably the first one to happen in India. And let's get Nimit to kind of tell us more about what this means. Nimit?
So very different words these are, trading and listing. So what NSE is looking to do is trade on its own platform, not list on its own platform. It's going to list on BSE as was always planned. But there is a rule that it's called the PTT rule, permitted to trade. Now as per this rule, if you are listed on one platform, you can still trade on another platform. Sources tell us that is what NSE is planning to do by trading on its own platform. Now what this PTT entails is that while you are listed on one platform, you can avail a larger group of investors by using other platforms. Now this is commonly used across various indexes where your primary index remains the same. There is no listing requirement on another index, but you can still trade on the other index if you meet certain criteria that index sets up. That is what the NSE is planning to do. We've also looked into this PTT mechanism. It's been around for a while. In the last 1 year itself, 260 companies have been allowed to trade on the NSE platform without listing on that platform. Importantly, no listing requirements to be made. Now the jury is still out and legal experts are divided on whether the SEBI approval here will be required. But since this is not a listing, this is purely a trading agreement, it's a much lower threshold than a listing itself would imply.
Nimit, just stay with us. I have a follow-up on this one. So basically what you're saying is, hypothetically, if you have an NSE listing which is happening tomorrow, at that time, NSE will list on a BSE, will not list on a NSE. That's number one. And number two, without it listing, what is that discovery price mechanism that traders will use to trade on a NSE on NSE?
So it will not immediately happen. What happens is it will list on BSE itself, and then will be under the PTT mechanism, a separate circular will come out from the NSE, where NSE will first apply to be traded on its platform, and then the NSE will come out with a circular like it regularly does, allowing NSE to trade on that platform, and then price discovery will be done as it's usually done under the regulations, which when closing day price is out and the day it starts trading, it will be taken from that price itself. Nothing will change there. It's just a process that there is no direct listing here. The PTT simply allows you to list, and that remains your only listed exchange. You are simply permitted to trade on another exchange, and it's a common process. Like I said, 260 companies this year have already been permitted to trade on the NSE's platforms.
Okay, all right. Nimit, thank you so much for putting that into perspective. It will certainly be an interesting one to watch out for. But there you go. The cash segment for the F&O space is now shut for you. And let's take a look at what levels have we settled at for the Nifty 50. 24,211 is what we've settled at for the Nifty 50. The Bank Nifty also, if you can try to pull that up and see as to where those levels are settling at. And also then the Sensex, 57,400 is where we've settled for, 444 of course for the Bank Nifty. The Sensex at 77,485. So we'll have to see whether how the next 20-25 odd minutes will fare and see as to how that changes the levels per se. But this is the level at 315 as we call it, the first closing per se. Amar, any quick take on the levels right now? Anything specific that you would be looking at in the next 15 to 20 odd minutes?
Yeah, I would say if I look at Nifty, I would say Nifty is basically more into consolidation, because till the time we don't see it breaching above the 24,250, 300 to 400 zone, it's more of a range play for Nifty, I would say. On the downside, yes, it's strongly supported around the 24,150 levels order. So it's more of a range play if I look at the structure of the index as well.
Okay, so any BTST, STBD calls, Amar?
Yeah, there's one stock which I talked about, and the other stock which I want to talk about is from the financial space, and that's Bandhan Bank. So what we've seen is that the stock has had corrected significantly, and then it's trying to form a very strong base. Today has been a positive day for the stock, and the stock seems to have formed a strong downside support. So buying at the current levels for an upside target of 193 and a stop loss of 161.
Okay, so that's with regards to where Bandhan Bank goes. Now moving on, Aditya Infotech, also known as CP Plus, continues to attract street attention after a stellar post-listing run. In fact, the stock is locked in upper circuit. My colleague Jasmeet is here with us to put the spotlight on this one. Jasmeet, what are you picking up? And you have a brokerage also which is absolutely positive. What are the key tailwinds?
Well, Hiral, thank you for that. As rightly said, it's quite interesting counter. Before we get on the brokerage and understand more about the stock, let's quickly understand the performance of this particular counter. The stock came in at an IPO price of ₹675 exactly a year ago on 5th of August and got listed at a premium of 51% odd. And since then, the stock has been gaining in trade and has gained about 220% odd since the listing. So the issue price was at ₹675 and currently the stock is trading at ₹3,400 odd. Well, that's the key positive of the stock, given the increase in the volume and the market is something that's supporting the overall stock rally. Well, the stock becomes in focus on the back of two reasons. The first one is the fundraise that the company is doing of roughly 1,500 odd crores, which they have received the approval of. And the second reason is the brokerage note of Motilal Oswal. Now, well, this brokerage remains quite bullish on this counter, and they have initiated an overall buy rating with a target price of ₹4,200, and they do see an upside of roughly 21% from the current level. Now, what does the note actually tell you all is the overall volume is something that becomes a key positive for the particular counter, and they also state that the company is well positioned to capture the market share going ahead, and they expect the current market share of this particular counter, that the CP Plus security camera, is at 44%. It's expected to increase to 56% by FY28, which becomes a key trigger for this particular counter. While the second thing which will be in focus is the STQ certification. What exactly has happened is we have barred China surveillance cameras from India, and that's the reason why the demand for Indian surveillance camera is increasing. And we look at the Indian market, the 40 players and Aditya Infotech being the prominent one is gaining on the back of similar regards. If we look at the targets that they have given for this particular counter, they expect the overall revenue to see an uptick of roughly 58%, to reach the market of 58%, and the overall revenue to increase in the range of almost 44% between FY26 to 28 each year growth. And in terms of the overall EBITDA, that's expected to rise 58 odd percent. When we look at the Q1 result, the company also had a stellar Q1 result in this particular year. We do know that the overall revenue jumped nearly 89%, while the EBITDA also rose by 20 odd percent, given on the back of the product mix change. Currently, the CP Plus forms roughly 87% of the revenue, and that's the major revenue puller for the particular counter. Further, we also know that the overall PAT increased by nearly 333% on the back of the reduced finance cost that we saw in this year, and the management continues to focus to reduce the debt and increase the equity in the stakes. If we look at the overall management outlook, they also retain their FY27 EBITDA guidance of roughly 14 to 15%, while they also see the price hike coming in the picture of roughly 15 to 20 odd percent, which should again support the revenue and the margins. But lastly, if we look at the opportunity for the management, they do remain bullish given on the back of that overall STQC in the picture. They expect the overall market share to increase going ahead. And lastly, if we look at the capacity expansion, the current utilization for this particular counter is between 85 to 90 odd percent, and they also expect that to increase by the increasing the manufacturing plant. So all in all, we do see a positive momentum in this particular counter, with the brokers remain bullish on this counter as well.
Okay. Thank you, Jasmeet, for that. Vineet, any view when it comes to Aditya Infotech?
No, we are quite negative on all IT stocks, so we don't, give bull calls on them.
Okay, so then would you say someone who's already made their money, it's time to book profits?
I would definitely expect people to, take cognizance of the fact that, if you have a run on the dollar, then, profitability is going to get compressed. So keeping that in mind, we are staying away from these counters.
Okay, all right. So that's the view coming in on Aditya Infotech. But, let's also take a closer look at CAS, because it's been almost 3 weeks now. And, SEBI in an interim order yesterday has barred 2 entities from markets for manipulation in Sensex on the CAS expiry date. The regulator has flagged what appears to be an attempt to influence closing prices during the Sensex index equilibrium price session on August 13th is what was seen in 2026. And Nimit joins us with more details on what has happened and exactly when and why this matters for market integrity. Nimit, over to you.
It was a perfect day for SEBI to come out with this order, because on the same day, the SEBI chair said that we are in the best position today to track manipulation because of the CAS system. And on that same day, they have come out with the first ex parte interim order against 2 entities, Koptal Mauritius as well as Mansi Shares and Stocks. Both these entities have been found guilty of attempting to manipulate the system, the CAS system, to make profits for their own. We're going to figure out how they did it now. Now, the important thing here is that we understand the overall penalty amount first. 3.68 crores. It's not a big amount, and this is an interim order. But the amount of trade that was manipulated here was much larger, as we'll come to see from 3 strikes as we move forward. Now, both entities, of course, have been barred, but let's move here and importantly understand what happened on that day. There were 3 spikes on August 13th, Sensex closing expiry day, remember, that SEBI first identified. Now, spikes itself doesn't mean anything, but identifying and understanding what happened is important. The first spike happened here, matter of 2 seconds. If you look at the amount the price rose, we'll come to the numbers in a bit. The second spike happened again, 12-second period it happened, and the numbers rose again. Third spike again, and then there was a gradual fall down. Now we need to understand 3 spikes and a fall down. Now, what did the 3 spikes mean? We're going to explain that now on our next slide with the Koptal understanding what is about to happen, the abrupt surge of the first spike was 362.02 points in 2 seconds, like I said in the first slide. Now, spike number 2, a jump of 132.67 points over a 12-second window. Spike number 3 was a sharp rise of 405.08 points in a brief 28-second window. Now, what this means, let's understand what Koptal did here. There was a gradual slowdown, which we will explain from the other entity, Mansi, a general slowdown trajectory, which about 232.96 points, which happened. Now, let's explain spike 1. Koptal Mauritius accounted for 99.91% of the total value of that spike. That's 66 crore. Spike number 2, Koptal accounted for 96% of the total buy, 126.59 crore. Spike number 3, the orders placed were worth 98 crore. Now, let's understand what Mansi did, because we spoke about the gradual slowdown a little later. Mansi at the same time placed sell orders 1.5 to 3% below. Remember, 3% is the acceptable range below the limit, and the total orders amounted to about 12.65 lakh shares. We'll also tell you that the total was spread across 8 Sensex constituent members. 8 stocks were traded here and 8 orders were provided. Now, the total sell order for Mansi stood at 143.43 crores. Now, we've explained to you the spikes and what Koptal did and what Mansi did with the slowdown. Then Mansi immediately after the sell orders cancelled 99.06% of the sell orders. This tells us, and SEBI points out, that Mansi never intended to execute those sell orders, and that's where intention comes in. Placing large orders is not a crime. The intention behind them is used to show manipulation, and showing that they cancelled those orders shows that there was manipulation according to the SEBI order. Now, the economic motive. Koptal held synthetic long positions in index derivatives, both buy and sell positions. Now, secondly, if we move to Mansi, Mansi also held these net positions, and these positions were found to be then traded off immediately, and Mansi made a lot of profit on it quickly. Both Mansi and Koptal made huge amounts of profit on these bookings, and then immediately after that, those shares were sold off. And that is where we see the economic motive matching with the spike in that SEBI stock, and that's what shows manipulation.
Okay, so absolute manipulation coming in there, and that's what SEBI has highlighted so far. In fact, Amar, any context that you have on this which you can help us understand?
Yeah, I would say that definitely the way the closing has been and the way the volatility has been, that definitely has been or is a cause of concern. So I think SEBI's steps and actions are in the right direction.
Very, very interesting link that we saw, of course, and I think that the fact that SEBI did crack down this, at the early stage and so much quicker makes it all the more interesting. But we've been talking about Sona Comstar, and there's an interesting story that's been taking place, right?
No, absolutely. The reason why Sona Comstar is in focus is because it was just highlighted from the earnings conference call where the CFO actually came out and said that Sona Comstar may be the first Indian auto firm which is earning royalty. Usually we've seen a lot of your auto companies which go ahead and pay royalty your global partners and global entities, and typically your global partners earn royalty from Indian JV partners and not the reverse. In fact, Sona's two-wheeler and three-wheeler IP is licensed out, generating inbound royalty income. And this move actually positions Sona as a tech exporter and not just a manufacturer. The royalty could be coming in from Denso licenses, where it has high voltage IP, and it's known for its JV1 Sona Comstar licenses in the two-wheeler, three-wheeler IP as well. So this is what you're looking at, and this is going to be an interesting one to look at, where you're seeing royalty come into the country. So that's why an interesting one to highlight here. But quick view on a Sona Comstar as well as any of the other auto OEMs that you would want to look at, Vineet? Vineet, this question is for you.
Yeah. So basically, more than the auto comps, we are more interested in the auto segment, auto OEMs actually. And then we like Ether Energy significantly because of its compulsive EV growth that is taking place.
Okay, all right. So that's the view coming in on some of these auto names. But Amar, we've seen a lot of action lately in not the, of course, auto ank names, but auto names as a whole. Even before this, when we were talking to our technical analyst, he did suggest that Eicher Motors and Hyundai Motors are one of those counters that could do well in the next couple of days. Anything else that you like from the entire auto pack?
So if I look at the auto pack, we've seen some very sharp up moves there, and Ashok Leyland is one stock which continues to remain strong and positive. Overall, if I look at the trend remains positive. However, we are seeing some sort of consolidation. So the stock, there's only one level for the stock to watch out for: 175, 180. Currently, it's around 173, 174 levels. So 175. 180 is a crucial zone of resistance for this stock. If it's able to take that out, then the stock could witness a 8 to 10% rally on the upside. The downside, the stock is very strongly supported around the 165 odd level. So this is one stock one can keep a close watch on. Okay, all right. So that's the view coming in on the auto pack. A quick one on IT as well, Vineet, because we saw selling pressure, in the first 2 days of the week. Then we've seen buying action coming in today, and that's continued today as well. But from a valuation perspective, from the way earnings have fared in Q1, do you think that IT would have found its bottom, and do you think that the valuations are attractive enough to kind of make an entry into any one of these names? And the common consensus is that the mid caps and the small caps are looking more attractive as compared to the large caps.
When the Q1 results came out, a large number of stocks had gone below fair value. Since then, we've seen a 20 to 30% kind of a pullback, more or less among the large cap stocks. And there they tend to get very well valued. And given the fact that they're fairly valued, and we are expecting some kind of negativity in terms of how the US is expected to play out in terms of its dollar devaluation, which is very impending. We are staying away from this, and you add to this the AI intensity that is gradually creeping in. I think the margins are going to come in pressure, and Q2 and Q3 are going to be the time when we will get to see these numbers play out in terms of the margin action.
Sure. So I think we'll be watching out for all the moves from here on. But thank you, Vineet. Thank you, Amar, for joining in. Always a pleasure to speak to you. If you have to just look at the settlement rates right now as well, what a 19 to 20 points difference is what you're saying before CAS and right now on Nifty 50. And so 24,212 was the rate at 315. You're seeing the indicative close of around 24,231. And in terms of Bank Nifty as well, a 50 points difference coming in there. Your indicative close is 57,495. What is interesting is that we've not really broken those support levels or the psychological mark on Nifty 50 in terms of closes. But and I think Sharath is here to tell us more on it. Sharath, over to you.
Well, yeah, you're right. Technically, this 24,200 levels has been maintained right now, and the gap between the cash effect is not so much for the Nifty Bank. Remember, today is Sensex expiry, so we'll be checking those numbers also, what's the difference looking like. But amongst the Nifty gainers, let's have a look at what the cash effect is happening. Amongst the gainers, we have Apollo Hospitals. That's where a lot of action is happening. The change also, Bajaj Auto, SBI Life also make it to the list. Amongst the Nifty 50 losers, I doubt there won't be so much of it, but nevertheless a slight miss coming in the Ultratech and Tata Consumer counters as well. But I would like to give you some flavor of the put and call options where the focus is 24,100 and 24,200. These are the two important places where the open interest action is more. And we see actually, if you could just show not the 19,500 but the 24,100, that is where we'll see much more of that action coming in. But nevertheless, We'll get you those details as well. But it's a day where the good buying has happened among the small caps and mid caps, and I'm sure Mahima will be happier because she tracks the mid cap and the small cap space.
Yeah, and it's been a good day for the broad end of spectrum as a whole, as Sharad mentioned. But the Nifty 50 and the broad end of spectrum both have ended on a high note, at least. Like we said at the start of the show as well, that the psychological 24,000 mark has not been breached. We're well above the 24,200 levels now for the Nifty 50, and the last day of this week, tomorrow, will be an interesting one to watch out for as to how we end for the Nifty 50. However, the range within which it's expected to be is around 24,400 levels to 24,100 level. But the Bank Nifty has also done well, but it's come off from the high point around the 57,400 levels, almost 500 levels is where it's settled at. The mid cap 150 and the small cap 250 have done tad bit better as compared to where the Nifty 50 goes. The mid cap 150, in fact, the mid cap 150 almost in line. The small cap 250 has done a tad bit better. But the heat map, let's try to pull that up for the Nifty 50. And largely it's been the same, except for at the losing end, you have Hindalco losing a slight bit of more ground as compared to what we saw in Tata Consumer as well, both seeing downtick for around 1%. But on the flip side, you have Eternal topping that chart, followed by Kotak Mahindra, Bajaj Finance, Shriram Finance. So a lot of BFSI names doing very well. ITC for a change back in the green today after hitting its 52-week low yesterday. And you have Bajaj Auto, Bharti Airtel, etc. also that have done well. But all in all, almost 10 stocks on the top of the list has seen gains of about 1% today in trade. So that's a good sign and good strength in terms of where the market goes. Let's also quickly pull up the sectoral heat map and then the BSE 500 before we end the show. You have media still topping that chart, largely led by gains coming in Z Entertainment. You have Realty back in the green, back in action, and you also have private banks that have done well and kept the Bank Nifty in check. FMCG has climbed up in that chart and seeing gains about 0.8%, but defense has continued to see some profit taking coming in, and PSU banks has completely ended flat. And lastly, the BSE 500, some stock specific action there. You have something like a Balrampur Chini topping that chart, closing 19% higher, and of course a lot of sugar names like Sri Renuka also have done well. But on the flip side, you have Acid AM, Aegis Logistics, PFC that continues to be under pressure. So that's with regards to where the markets fare today. But with that, completely out of time on this edition of India Market Close from the Suzlon studio. From everyone who put the show together, thank you so much for watching. Stay tuned to NDTV Profit.
Presented by Canara Bank. Together we can.
Hello and welcome to NDTV Profit. You're tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin tops the $71,000 mark after Treasury buyback. White House clarity push comes ahead of the Senate vote. The US national debt crosses the $40 trillion mark. And lastly, Blockchain Association backs SEC's proposal to scrap outdated rules. Well, those were the top headlines at this hour, but when it comes to crypto, understanding the technology behind the tokens can be just as important as tracking the price. So let's break down one of the key building blocks of the crypto ecosystem, smart contracts. Now, smart contracts form an important base in the crypto ecosystem, which is a type of a strict discipline or a code governed by rules A smart contract sounds complicated, but the basic idea is actually pretty simple. Think of it as a piece of code which is sitting on blockchain. You set certain conditions, and once these conditions are met, the contract executes on its own. No bank employee sitting in the middle, no broker waiting to approve the transaction. It's just like a vending machine. You put something in, the machine checks the condition, and you get the result. Now, why does this matter for crypto? Because in certain transactions, the smart contracts can take the middleman out of the equation, and that can make transactions faster, cheaper, and remove the need for manual approval. And there is another important part here. The transaction is recorded on a blockchain. So there's a permanent record of what happened. Changing that record later is extremely difficult. Let's take a real-world example. Say a farmer in Maharashtra has an insurance policy which is linked to rainfall data. If rainfall is below a preset level indicating drought, the smart contract could automatically trigger the insurance payout and send the money to the farmer's digital wallet. The farmer doesn't need to file a claim and wait for someone to process it, or take a company in Pune. Now that's buying a truckload of ore from a supplier in Madurai. The buyer can put the money into a smart contract, the payment stays there until the tracking data confirms that the shipment has arrived. Now once that condition is met, the payment is released automatically. That's the real big idea behind the smart contracts. They take an agreement between two parties and turn the rules of that agreement into code. And that's a big reason they are so important in DeFi. And because of that, lending, trading, and other financial activities can happen without relying on any middleman. So for a crypto investor, don't just look at the price of a token, also look at the technology underneath it, what it can actually do. Now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary, conversations that connect countries and cultures, where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Some of my friends and many of my critics call me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. Watch.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today. The viewers' benchmark indices have ended higher with Nifty closing near 24,200 levels and the Sensex gaining over 600 points. However, broader markets lagged the benchmark, signaling a narrower market rally. And talking about the sectors, so most of the sectors have ended in the green, with realty and FMCG leading the gains. Defense was the lone sectoral laggard, bucking the broader market rally. Now let's look at the oil prices, viewers. So they are extending their rally, with crude gaining for a fifth straight day as the US ramps up economic pressure on Iran. Brent has now moved above $93 per barrel mark after gaining more than 5% over the previous 4 sessions, while WTI is nearing $87. So the latest catalyst is President Donald Trump's announcement of what he calls an unprecedented economic warfare campaign against Iran. Now, Trump has warned countries helping Tehran financially that they too could face severe economic consequences. So the bigger market concern is Hormuz now. Any further escalation or possible retaliation by Iran against regional energy infrastructure could really put more pressure on supplies. China, which is a key buyer of Iranian oil, also remains in focus. Meanwhile, UAE's decision to cut economic ties with Tehran adds another layer to Iran's growing isolation. Where sugar prices are surging as tightening supplies push the domestic prices higher, with prices rising around 10% in August and also crossing 5,000 rupee per quintal in key markets. Lower monthly release quotas and also declining mill inventories are adding to the pressure, while global white sugar prices have hit a 15-month high. El Nino risk to India and Thailand, along with weaker European and Brazilian output, are further tightening the global balance. The government has responded by tightening dealer stock limits, but markets will also watch for possible import duty cuts and even further policy action to cool the prices. US gold is holding on to its biggest gain in 6 months after a surprise move by the US Treasury to ramp up buybacks of long-dated government debt. The move signals an effort to contain borrowing costs and could really push the yields lower, reducing the opportunity cost of holding non-yielding gold. The boost comes as US public debt crosses $40 trillion for the first time. However, the rally faces headwinds, with Fed minutes showing more officials open to higher rates and inflation persists. Oil-driven inflation and Middle East tensions, could also limit the gold's upside. And gold financiers are in focus as the rally in bullion prices boost the sentiment around lenders with gold-backed loan portfolios. Muthoot Finance and Manappuram Finance are seeing some strong buying interest alongside names like IIFL Finance and also CSB Bank. So the key driver here is pretty much simple. Higher gold prices increase the value of collateral pledged against loans, and that can really support higher borrowing capacity for customers and also potentially drive loan growth and even gold loan AUM. So stronger collateral values also provide lenders with an additional buffer against the credit losses. However, the earnings impact will still depend on loan growth yields, funding costs, and also asset quality. Let's turn our focus to some key stocks that were buzzing away in trade. First up, we have Aditya Birla Capital, which is entering the gold loan business with plans to build a pan-India network of around 1,000 gold loan branches over the next 3 years. And as you can see on your screens right now, the stock had reacted and was up almost over 3%. So the company will initially roll out 200 to 300 dedicated branches by March 2027 across high potential markets, and the new business will combine branch-led services with omni-channel digital capabilities, aiming to offer transparent pricing, secure handling of pledged gold, and even quicker loan disbursals. The expansion also marks a new growth avenue for Aditya Birla Capital's NBFC business. And your Swiggy shares are in focus after Jefferies have retained its buy rating and 435 rupee of price target following the company's move towards Indian-owned and controlled company status. The IOCC status could really give Swiggy greater flexibility under India's foreign investment rules. Jefferies also expects Instamart to move towards a first-party inventory-led model, allowing it to directly own and even sell inventory alongside its existing marketplace model. So the transaction is expected over the next 2 to 4 quarters, with limited disruption expected for customers or the suppliers. Next counter that was buzzing away in trade was Aditya Infotech, which is in focus after approving a fundraise of up to 1,500 crores through equity shares. The company will explore a public issue, a qualified institutional placement, or the QIP as part of the capital raising plan. The fundraise gives Aditya Infotech additional capital flexibility and even could support its future expansion and growth plans. Next counter to look at is Hindustan Oil Exploration, which is planning to drill 4 additional wells in the PY1 field as it looks to restore the production. And the company has already invested around 3,400 crores in the field. The additional drilling is aimed at reviving output and even improving production visibility from the asset. And the move highlights HOEC's continued focus on maximizing the potential of its PY1 field. Next counter to look at is Glenmark Pharmaceuticals. This is after receiving US FDA approval for its fluticasone propionate nasal spray. And the stock was up nearly 4% on the back of this development, and the product is bioequivalent and therapeutically equivalent to Flonase nasal spray and will be distributed in the US through Glenmark's US arm. So the addressable market also looks meaningful, with the Flonase recording around $295 million in annual sales for the year ended in June 2026, and the approval comes after a strong Q1, where Glenmark's consolidated profit has surged more than tenfold to 483 crores. Revenue also rose 23%, while EBITDA has jumped nearly 39%, with margins improving to 20%. Next counter to look at is Strides Pharma Sciences, and this is after its flagship Bengaluru facility has received establishment inspection report from the US FDA, marking closure of the regulatory inspection. The US FDA had conducted a current good manufacturing practices inspection at the facility from May 12 to May 20th, and the inspection had earlier concluded with a Form 483 containing 5 observations. So the Bengaluru facility is a key manufacturing site for Strides and also serves both regulated and even other international markets. Next counter to look at is EMS, which is in focus after emerging as the L1 bidder for a 190 crore water infrastructure project. The contract involves construction of a water treatment plant along with a distribution network and even other related infrastructure. The project also adds to EMS's order pipeline and even strengthens its presence in the water infrastructure segment, providing further visibility for future revenue growth. Viewers, US Ambassador to India Sergio Gore has arrived in Leh for his maiden visit to Ladakh, a day after meeting Jammu and Kashmir Chief Minister Omar Abdullah in Srinagar. Now, Gore has described the meeting as a very good and very cordial meeting, and speaking afterwards, the US envoy said that Jammu and Kashmir was an important part of India. In fact, it is an important part of India, and his Ladakh visit comes as Washington continues to engage with India on key regional and bilateral issues. Here's the death toll in Bhavnagar's spurious liquor tragedy has risen to 8, with 39 people still undergoing treatment after allegedly consuming methanol-laced liquor. Now, police is saying that they have uncovered an organized network which is involved in manufacturing and even distributing the illicit liquor across Bhavnagar and nearby areas. 21 people have been named as accused, with 13 arrests so far, including the alleged mastermind from Ujjain. Investigators say that methanol was brought from Madhya Pradesh while the liquor was manufactured locally. The case has also led to suspension of a police inspector and even 4 personnel. India's heavy rainfall has triggered a severe flood situation in Sabang West, Midnapur, with district authorities directed to step up relief and also response efforts in Bengal, and the focus is on providing drinking water, relief material and administrative support to affected residents. Now, West Bengal Chief Minister Suvendu Adhikari has also conducted an aerial survey of flood-hit areas, as you can see on your screens right now, while travelling to Sabang, which as authorities assess the extent of the damage and also coordinate relief operations. Meanwhile, Manipur has ordered the closure of all educational institutes for 3 days from August 20th to 22, citing the prevailing law and order situation. And the move comes as protests continue across the state's valley districts, with campaign for just and fair delimitation holding a 48-hour general strike. Protesters are demanding an update of the National Register of Citizens before the census exercise. And the group has also announced a boycott of government offices from Thursday as part of the ongoing agitation. Let's look at some global news now. The US-Iran standoff is entering a new economic phase, with President Trump announcing what he calls an unprecedented, crushing economic operation against Tehran. Now, Trump has also warned that any country providing Iran with a financial lifeline will face severe economic consequences. At the same time, he says that talks could really resume at some point, with Washington's key demand remaining that Iran not obtain nuclear weapons. And Iran, however, accuses the US of seeking an honorable exit and pushing for a new regional order. Well, with that, viewers, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody will dare with me.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trend.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Markets snap 7-day losing streak as an upbeat global equity scenario fueled by retreating bond yields offset the negative sentiment due to rising oil prices. Nifty closed back to end over 24,200 levels. Crude prices hold against with Brent rising to $94 per barrel mark during the day, supported by heightened uncertainty in the Middle East as the US and Iran remain at an impasse. The two sides are also embroiled in a confrontation over the Strait of Hormuz. Sources tell NDTV Profit that NSE may trade on its own platform via permitted to trade. Plans to list only on BSE while allowing investors to trade shares on NSE without a formal listing. Sugar stocks remain firm despite the government's fresh revision in stock holding limits aimed at cooling soaring prices. Sri Renuka Sugars, Dalmia Bharat, Balrampur Chini Mill see a jump in the trade today. CBDT flags unusual cash tax patterns across 5 border states. Nearly 11,000 crore realty deals under IT lens. UP tops the list. SC draws the line on industry definition in Labour Code. Top Court says that 1978 Labour-friendly ruling won't guide Industrial Relations Code. 9-judge bench upholds validity of review reference on industry definition. Anti-pollution body tightens curbs on light goods vehicle registrations in Delhi. CAQM orders faced restrictions on new non-electric light goods vehicles in Delhi from 2027. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But first, let's see how the markets have really fared today. So viewers, Nifty has snapped its 7-session losing streak, gaining over 0.6% to close above 24,200 mark as easing global bond yields offset concerns over rising crude prices. Now, post the closing auction session, Nifty rose 20 points, Bank Nifty gained 51 points, and Sensex added 52 points. My colleague Parth is now here with the complete market roundup.
Well, starting with the daily cash updates, Nifty has seen a spike of around 20 points after the closing auction session, while Bank Nifty saw a spike of around 51 points and Sensex also saw a spike of around 52 points. Now, coming back to the market lines, Nifty has closed in green. It has finally snapped the 7-day losing streak that it had continuously maintained, and today the index closed over 0.6% in the green. Eternal and Shriram Finance were the top gainers in the index. Eternal seeing a gain of 2.4%. While Shriram Finance also saw an uptake of over 2% today. Coming to the broader markets, they have underperformed the benchmark today, with Nifty Midcap 150 closing in green but gaining just 0.4%. MCX and Glenmark were the top gainers in Nifty Midcap 150. MCX was up over 5%, while Glenmark also saw an uptake of over 4% today. Coming to the Nifty Small Cap 250 side, it has closed in green, up almost 0.6%. Balrampur Chini Mills and MMTC were the top gainers of the index. Balrampur Chini is almost gained over 18% today, while MMTC was also up 7% for the day. Now, coming to the sectors, all of the sectors have managed to close in green except just one, which is Nifty PSU Bank, that has ended on a flat note today. Nifty Realty was the top gaining sector, up almost 1.5%, led by Brigade Enterprises and Aditya Birla Real Estate, which were the top gainers. Brigade up almost 7% today, while Aditya Birla Real Estate also saw an uptick of over 4% for the day. Now, coming lastly, talking about trends, Nifty PSU Bank has ended in red for the 6th consecutive day, while indices like Nifty Bank, Nifty Financial Services, Nifty Realty and Nifty Metal have snapped their 2-day losing streak. Also, Nifty IT has closed in green for the 2nd day in a row, while Nifty FMCG has snapped its 4-day losing streak.
Right. Thank you so much, Parth, for getting us those details here. In fact, sources are telling NDTV Profit that NSE is exploring trading of its own shares. Let's get in my colleague Nimit to tell us more about it.
So very different words these are, trading and listing. So what NSE is looking to do is trade on its own platform, not list on its own platform. It's going to list on BSE as was always planned. But there is a rule that it's called the PTT rule, permitted to trade. Now, as per this rule, if you are listed on one platform, you can still trade on another platform. Sources tell us that that is what NSE is planning to do by trading on its own platform. Now, what this PTT entails is that while you are listed on one platform, you can avail a larger group of investors by using other platforms. Now, this is commonly used across various indexes where your primary index remains the same. There is no listing requirement on another index, but you can still trade on the other index if you meet certain criteria that index sets up. That is what the NSE is planning to do. We've also looked into this PTT mechanism. It's been around for a while. In the last 1 year itself, 260 companies have been allowed to trade on the NSE platform without listing on that platform. Importantly, no listing requirements to be made. Now, the jury is still out and legal experts are divided on whether the SEBI approval here will be required. But since this is not a listing, this is purely a trading agreement, it's a much lower threshold than a listing itself would imply.
Absolutely. Thank you so much, Nimit, for that. And viewers, SEBI has issued its first cash manipulation order flagging aggressive buying and selling. Mansi Share allegedly placed and cancelled sell orders, with SEBI impounding 3.68 crores from the entities. My colleague Nimit filed this ground report earlier. Let's take a look.
We're here at Mansi Share and Stock Broking. As you can see, we're at their office. We spoke to somebody inside. We rang the bell and spoke to somebody. It's a 3-floor office here in Avirahi Cooperative Society, largely a housing cooperative society, but the B wing here is corporate offices. The 2nd, 3rd and 4th floor of this office is all Mansi's operations. It looks like quite a large operation. We went to all 3 floors and we spoke to a couple of people here. The first person we spoke to says that the management is out. They're not available to speak. He refused to identify himself. He refused to give me a phone number, and he says that the management is all traveling. Nobody is here. I went up to the 3rd floor where nobody answered. I went up to the 4th floor. At the 4th floor, a man identified himself as Hiten Joshi. He spoke to me. Hiten Doshi, I'm sorry, and he spoke to me, and he also told me that there is no authorized person to speak on behalf of Mansi about the issue, the cash stock manipulation case that SEBI, the interim interim order that came out yesterday. What we understand is this 3-floor operation, when we peeped into the 4th floor, there were about 20 to 30 people inside. Here also there are quite a few people inside and moving. They say that there is nobody authorized here and all the leadership is out of town, and they may be available later in the week or next week. That's what they say. But we keep trying.
In fact, talking about CAS and its impact on price discovery, ANMI President Kamlesh Shroff says that the system will add greater depth and breadth to the market. Let's listen into his exact remarks.
There is a talk that the 315 to 320 window can even have the OMO orders. So basically, while it currently prices and checks, at the moment you're not able to put in those orders. So this will actually come into that same length and breadth of the whole thing, that the market will get a larger breadth and depth. So when that after 320 trades get into the orders, go into the system, it will have a larger depth from that perspective. So the matching will also have a better price discovery.
Switching gears now, viewers, the US-Iran standoff is entering a sharper economic phase and crude is responding to the escalating rhetoric. So Brent is hovering near $94 per barrel mark, while WTI crude is trading near $80 to $8 per barrel range as markets assess the risk to energy supplies from the region. President Donald Trump has announced what he calls a crushing economic operation against Iran, while warning countries offering Tehran financial support of severe consequences. The escalation comes amid an impasse in talks, although Trump is saying that negotiations could resume. Iran, meanwhile, has hit back, saying that the military conflict has failed and Washington has now shifted to an economic war. The big market question remains the Strait of Hormuz, but Trump is saying that alternative supplies and expanding pipeline networks have reduced its influence on global oil flows. Let's listen in to what President Trump said.
Treasury Secretary says that we could see the most impactful sanctions on Iran this week. When will they come, and what else could be sanctioned on Iran?
Well, we have things that we could sanction. We have very draconian sanctions, and we'll see what happens. Right now, the strait is open. A lot of boats are coming through. People aren't reporting that, and that may slow down a little bit at some point. But right now, a lot of boats are coming through. The naval blockade has been extremely effective. Zero, I mean, literally, while it's up, and that's been for quite a while, you know, except for a couple of little pauses where we opened it purposely with a deal. But the deal didn't terminate. You know, the deal didn't turn out to be what they said. You know, when they tell us one thing and they do another. But the blockade has been 100% successful. No boats have gotten into Iran, but they are getting in for other places. But we'll see. We're going to see what happens. It'll either be extremely good and oil prices are going to drop like a rock, or we'll continue to do exactly what we're doing. You know, they were talking about $350 a barrel, and it's today $84, $85. And we are getting a lot of oil out. But the other thing that's happened is people have found other alternatives, which they never thought about. Texas, Alaska, Louisiana, and other places. In addition, a lot of pipelines, record numbers of pipelines are being built. So I think the Hormuz Strait's not going to be quite as important as it was in the past.
Should Americans be concerned about this volatility in the bond market?
No, I don't think so, because like I said, our country is doing so well despite interest rates. We have interest rates that are they're actually artificially high. They raise them for no reason. And you can't go out to the market when you have a Fed that's raising interest. You can't say, I want to pay 3 points less than what the Fed says you're supposed to be paying. So, no, I don't think so at all. I think we have a very powerful country, and we're powering through these ridiculous interest rates. They're ridiculous. Look, when our country is strong, interest rates should go down. When our country is weak, frankly, they should go up. But this country is strong.
And turning our focus to sugar stocks, viewers, after the government tightened stock holding norms to curb rising prices, the move really puts a cap on the quantity of sugar that traders and other market participants can hold as the government looks to improve availability and also rein in the prices. The impact of these tighter norms is now being watched closely across the sugar sector. My colleague Sharad is here with all the details.
Looking at the overall interventions, this is the first time the government has intervened on the rising sugar prices. Now, of course, on the stock holdings, they have tightened those levels, or they have ordered dealers that who use more than 10 metric tons of sugar should hold their inventories for not more than 15 days. Of course, this order itself is applicable from 1st September till 30th November, and there will be detailed analysis on that. But the impact what is there is the sugar prices expected to immediately cool off, and more announcements for sugar security can come. Agencies also reported a couple of days earlier that government may lower taxes on sugar imports. But as of now, looking at the stock momentum in the sugar stocks, the story seems a bit different. Remember, there is a tightening supplies coming in from Europe, El Nino impact from markets such as Brazil, India, as well as Thailand, and the pricing is really very high, 5,000 rupees per quintal, and this is the important rates which we checked from the major areas, lower monthly release quotas and declining inventories. Even the global prices are at the 15-month high when it comes to the white sugar prices. Already a strong momentum has come in the sugar stocks, be it Itpari, Balrampur Chini, Triveni, Sri Renuka, all of these stocks gaining between 20 to 80% from January 2026 lows. And despite the announcement coming from the government, in the day's trade, we are seeing a good buying happening across the sugar board.
Moving on, NDTV Profit has exclusively learnt that the Income Tax Department has identified nearly 11,000 crore rupees worth of real estate transactions with tax compliance gaps across 5 border states. Highly placed sources say that CBDT has flagged over 14,700 property transactions in FY26, including more than 2,500 unreported deals. The discrepancies range from non-reporting and PAN misreporting to under-reporting of transaction values and also cash components, with Uttar Pradesh accounting for the largest share of flagged transactions. The review has also revealed unusually high cash-to-tax ratios across multiple border states. Uttar Pradesh, Assam, West Bengal, Gujarat and Bihar, all of them show cash deposit and withdrawal ratios significantly above national benchmarks, indicating cash activity far exceeding the reported tax base. Now, sources are saying that CBDT is now expanding district-level scrutiny and will coordinate with agencies including the RBI, SEBI, FIUIND and the Enforcement Directorate, while cross-matching tax returns, banking records and other data sets to strengthen compliance checks. Meanwhile, India is looking to overhaul its bilateral investment treaty framework in a bid to attract greater foreign capital. And sources are telling NDTV Profit that the government is reviewing the 2016 model BIT playbook. And my colleague Rishabh is now joining us with the exclusive details.
Right, this is going to be a crucial sort of overhaul that India is making to its bilateral investment treaty regime. What we've seen roughly about 10 years back is what India still follows is the bilateral investment treaty sort of template text that India has. That is set to undergo a major sort of overhaul, major changes. That is also expected to go to the cabinet for approval after that's happening. Now, what's changing essentially is the fact that there is more sort of investment-friendly approach that is coming in, more flexibility that is coming in, that India wants to adapt, more country-specific approach rather than a template that India wants to stick across various geographies, because there are sensitivities that need to be respected when it comes to investment flows between two countries. So in terms of changes, what we have is essentially a reduction in the domestic litigation requirement. Now, essentially, if an investor has some sort of an issue with any conflict that has come up